information in any way. If you look at every action we've taken, you can FOIA everything, and people already have.
Is that a verb now? It's got to be in the OED.
FOIAing?
Yeah, FOIA.
Is
that like following too?
Yeah. And I think it's good though. You should FOIA. It's public.
Right. No, I know you got. I know we got to go, and you probably have to go too. But one last question: when you look at pay packages, I'm just curious, as a politician in the state of Delaware, how you think about pay.
How you
think about pay when you look at for example, Elon Musk has a new compensation package that's going to go to shareholders in the state of Texas, so not in the state of Delaware, that potentially could make him a trillionaire.
Right.
How do you as the governor of Delaware think about that?
Business judgment, unless there's some conflict, and I think that's the right thing to do. Corporate boards should be able to determine the appropriate compensation of their business leaders unless there's some conflict.
Okay. Governor, thank you for joining us. Appreciate
the
it.
new law.
See you at Rehoboth Beach.
Sounds good. See you.
Nice to see you. Thanks.
All right, when we come back, the Trump administration slapping new restrictions on Iran, but these are meant to prevent the country's diplomats from shopping at Costco. We'll explain right after this break.
Hydra.
The Trump administration doesn't want Iranian diplomats in New York for the UN General Assembly shopping at Costco. In notices that are being published in the Federal Register, a State Department office determined diplomatic memberships in wholesale clubs like Costco, Sam's Club, and BJ's constitute a benefit that requires government approval. Purchases of luxury goods are in that same category. Iran, by the way, is the only country specifically targeted. Its diplomats posted to or visiting New York are known to enjoy shopping at stores like Costco, where they can cheaply buy products that aren't available in Iran and send them home. This is part of the United States trying to put some pressure on those diplomats to say you're only here for diplomatic purposes.
Interesting. I'm glad you explained it. I was wondering, I mean, how much toilet paper can you use while you're here for a couple of days?
You can take it all back with
You're
you.
sending it home.
Yeah.
They're sending it home.
Yeah.
Do you like the rolls, the big oversized rolls? I like the
No,
big.
too big.
You know, the further, do you know how quickly as it goes down, how quickly then it's almost
For
like
you.
life.
For you,
No,
sure.
it's almost like life as the roll gets smaller and then it goes away. Things get, that's why I
Very
like
philosophical.
I like the big, coming up, Puck's Matt Bellany joins us on the return of Jimmy Kimmel, late night, all right in the world, I think now. And the potential corporate fallout for station owners and Disney. Squawk Box will be right back. Jimmy Kimmel returning to late night TV. If you blinked, you wouldn't even know he wasn't on a couple of days. Those stations owned by Nexstar and Sinclair opting not to broadcast Kimmel's show Kimmel said he wasn't trying to make fun of the shooting death of Charlie Kirk last week when he made comments. Wasn't trying to be funny, but he was trying to link Kirk's alleged killer to the MAGA movement with President Trump. Here's what he had to say about Trump himself.
The President of the United States made it very clear he wants to see me and the hundreds of people who work here fired from our jobs. Our leader celebrates Americans losing their livelihoods because he can't take a joke.
Join us now, Puck's Matt Bellamy. It's been sort of 10 years of, since that escalator ride, kind of been 10 years of, I don't really know if I call them jokes because it's not really funny. They're just applause lines we usually get. But that's neither here nor there. What's Disney look like after this? Bruised and battered? I think for a while the right was happy with what they did. Now the right's going to be mad. The left's now going to be happy, but they already had the left watching, didn't they? Net, I don't know if anyone's happy about Disney.
Well, this is more than just about this show. I mean, I think that last night was a big win for Disney in the sense that it was well received. The media coverage, which had just absolutely been brutalizing Disney for the past week for the decision, I think that they won that night because Kimmel came across as emotional. He came across as, he didn't outright apologize for the comment, but he did clarify that he did not mean to link the shooter, alleged shooter, to the MAGA movement. And he was emotional about it. He cried a little bit. So I think that last night Disney can feel good about it. Now the question is what the fallout is going to be, because 66 stations, more than 20% of the country, was not able to watch that on linear TV last night. And these two station groups have said that they are going to continue to talk to Disney. So does this lead to some kind of a settlement or a path back for those stations? That's the big question.
What, doing everything he can to say that the shooter wasn't one of their own. How can he say that he wasn't trying to link the
But we
shooter
disagree on this. If you actually look at what he said,
no, I can read
he
it
was
for
talking
you
about
again.
people. He was talking about people trying to score political points
Right.
by linking the
right,
shooter
by
to the
trying
MAGA
to
movement.
link it to anything other than one of their own.
Yes.
That's only one way you can take that, Matt.
No,
He was saying it was.
listen, I
he was
agree
saying
it's
it was-
ambiguous, but there is a legitimate
Okay,
argument
all right.
that he was making fun of the
All right. It
political
depends on what the meaning of the
dumping.
word is. Depends on what the meaning of the word is. We'll have to disagree on it. So let's talk Nexstar and all of the different affiliates. They have some. I can tell you that they have some pre-existing problems with late night. A lot of affiliates, not just at ABC, but at CBS and NBC. They have heard from affiliates about their viewers not being served, some of them, in the center of the country. So right now, I think Democrats are going to investigate the proposed merger and how this all plays into whether there's coercion to get a deal done, and that's why they're not airing Kimmel right now, because they're trying to curry favor with the Trump administration. Who's going to win that? Can they argue that they've had a problem for years with late night?
Oh, absolutely. I mean, they can make that argument, and Disney was aware of those arguments. I mean, Brendan Carr, the FCC chair, he is certainly saying that he's standing up for those station groups, and he wants them to be able to exert their power over this content by saying, we don't want to air it. But that's kind of not the point. They have contracts with Disney, and they agree to air this stuff, and they can really only take it off the air for a certain amount of time before they have to go back to Disney and say, okay, this is a negotiation if we want to keep it off the air. So it really is about the relationship contractually between Disney and its affiliates, and if they want to complain, then bring it up in the negotiation.
Do you think that ratings, I mean, they're down, I think it's down 50% since the beginning of the year for Kimmel. Do those go up? And where they are right now, would he get renewed? Do you know when is he supposed to be renewed? January or May? Or we've heard.
He's got a year left, so probably at the end of this season. But first of all, the ratings issue, I don't think he's down 50% this year. He's down 50%
45.
over many years. But the thing is with Kimmel is that he does a lot of things for ABC. His show does very well on YouTube, it is overall a moneymaker for
It is
ABC. It is. I would argue that it is. I mean, they actually make.
Do you know that it is? Or, do you know what is Colbert losing 50 million, or you would argue that's a money?
My reporting suggests that Colbert was losing tens of millions of dollars, but Colbert is a different situation. He does not have the same relationship with CBS that Kimmel has with ABC. His show does not do as well on digital platforms as Kimmel's does. So if you take all of that into consideration, plus you add in the carriage fees that they get from airing the content, the argument that Disney makes is that Kimmel overall is profitable for them and does bring value to them beyond just being an 11:35 host. And honestly, the proof's in the pudding. They keep renewing him. This is not a liberal agenda to keep Kimmel on the air. They keep renewing him because they find value in him being the host of that show.
It's down 43 to 45% in total viewership over since January. 43 to 45% since January this year.
Okay. Well,
but so you would bet your life that it's profitable. You say it's profitable.
I'm not betting my life on a TV show, but I am saying that the messaging from Disney is that this show brings our network value. And honestly, I agree that the affiliates would have had a tougher argument if this was 15 years ago and these shows were generating 8 million viewers a night.
So
different situation now. But I'm betting if we see the numbers, Kimmel rates higher than Celebrity Family Feud reruns, which is what they were airing.
Hey, Matt, so here's the question. What do we know about the contracts that Disney has with the various affiliates? How long can they go without broadcasting certain things that are on the network? What would constitute a renegotiation? There are obviously rights that ABC has paid for, including the Super Bowl, which I imagine these affiliates will want to air
College
next
football.
year. Right. And so how does this work? Just walk us through the sort of business permutations of this. Take the politics out of it for a second.
Sure. I will say that I don't know the details of the exact contract. I only know what is typical in these situations. And what is typical is that these affiliates do have the right to opt out of certain content. But once they opt out for a certain amount of time, they have to go back to Disney, to the content provider, and have a conversation about what that means for both of their business, and it becomes a negotiation. So while not knowing the specifics, this cannot go on indefinitely without some kind of a negotiation between the two. They also have these deals coming up, and we don't know exactly when, but they have these affiliate arrangements come up, and then it becomes a negotiation, and the speculation is Disney will try to stick it to these affiliate groups because they're giving them a hard time. That'll be an interesting negotiation because the argument will be, well, this is not 15 years ago when these shows were rating like they were. This is an issue ratings-wise and business-wise as well as content-wise.
On that, with the negotiations with the affiliates, Brendan Carr has already weighed in on that, on some of the negotiations that ABC in particular was already doing with its affiliates. That was back in January or February, looking at some of the hardball tactics where affiliates could in some terms even lose money with this. So even if they come back to that, that could be something where the FCC has already laid down kind of where they see the ground for this.
Yeah, Brendan Carr has been clear that he wants these affiliates to be more aggressive. He sees them as ideologically aligned with the Trump administration and able to push back on these big media companies. But the tensions between Disney and the other content owners and their affiliates has been rising in recent years because of the economics of linear television.
Right.
It's not just that these shows are lower rated, it's that everything is lower rated on linear television, and it's causing tensions with these affiliates who are not used to making this lower amount of money because of the audience. So it's
and in some cases,
already
no
very
money. I
tense.
was just saying, like it's a much smaller pot to go around.
Absolutely, and when you have a much smaller pot, you're going to have testier negotiations, and then you throw in these ideological differences between these very conservative station owners and these content providers in New York and LA. That's where you get this conflict.
Right. Matt, we want to thank you. By the way, just to explain one thing that I think is oftentimes misunderstood about the economics of both linear TV and cable television, and the difference between how CBS might think about Colbert or ABC might think about Kimmel. You're talking about the economics of this is an important piece of it. Some networks like ABC And by the way, and CNBC, just to put this on the table, think about the carriage fees that they collect, and they apportion some piece of the carriage fee to the programming on the show, and they include that in the economics. Now, technically, because there's carriage fees that are already pre-negotiated,
No.
you could run a test pattern on TV and you would still collect the carriage fee
until they
don't.
ends.
So you
Until
can
the
just
contract
and so
ends.
you could decide to apportion the carriage fee to Squawk Box or not apportion the carriage fee to Squawk Box. And at CBS,
good.
for whatever reason, they
ABC,
just
yeah.
or no, at CBS, when they were thinking about the economics, they were actually not apportioning, from my understanding of it,
To Colbert.
to Colbert. ABC, in terms of how they actually think about the economics,
Right.
is apportioning carriage fees to the various programs.
Good.
So that's how this all works. I think.
Why one show would be
Right.
millions of dollars in the hole and the other wouldn't.
Well, I also think, by the way, there's the YouTube piece,
Yeah.
which is very true on
Do
Kimmel.
the test pattern and get the same numbers that you probably could. See, I prefer Celebrity Family Feud, but that's just me.
Well,
But I will say,
That is just you.
I will say a
Surveys.
lot of this is economics and not necessarily politics, not in this case in particular.
No,
But this has been
right.
building for
Right.
years, and you can point to
Time will tell.
the,
We'll see.
the ABC affiliate in Miami
Right.
just switched over. They're not doing it anymore because that negotiation was so fierce.
Time will tell with Jimmy. He's back on.
Right.
The world, things are right in the world.
All right, the mortgage numbers just released after a volatile week for interest rates. Diana Olick is here. She's got more on that front. Diana, good morning.
Good morning, Becky. Yeah, and you remember last week when we saw that massive 58% weekly surge in refinance demand. Mortgage demand stalled, though, last week, even though interest rates fell further. The average rate on the 30-year fix for conforming loans dropped to 6.34% from 6.39%. That's for loans with 20% down. But that's the lowest level since September of last year. But I'll say but, that's a weekly average, and last week was really volatile. Early in the week, before the Federal Reserve cut its rates, mortgage rates, which loosely follow the 10-year, fell to the lowest level in 3 years. But in the days after the Fed cut rates, they shot right back up almost 25 basis points. So refinance demand, which again had spiked higher the week before, it just went up 1% for the week, and it was, though, still 42% higher than the same week a year ago. Now, mortgage applications to buy a home essentially flat, up just 0.3% for the week, up 18% from the same week a year ago. Now, after a huge surge the week before in demand for adjustable rate mortgages, that's ARMs, demand for those riskier loans fell back again last week. So borrowers had been looking really for any type of savings on the monthly payment. Of course, ARM rates are much lower than fixed rate loans.
So I guess part of this is people are thinking the Fed's going to continue to cut rates, and maybe that shows up. Maybe they're pausing on that. But then there's a lot of people who think the 10-year is not going to move anymore because all of those cuts have already been priced in.
I think there are just so many people who are right on the edge of that savings, and that's why you saw so many people go from the fixed rate. Because say you had, high 6s or even 7% on your 30-year, and then you go into an ARM, which is well into the 5% range. If you have a big enough mortgage,
a
you're
huge
saving
savings. Yeah.
$1,000 a month. That is considerable savings. But when you see those rates start to pack up again, even just 25 basis points, you lose the math. You
Right.
lose the math on the savings.
And the confidence that rates are going to stay down.
Exactly.
Yeah.
Exactly.
Diana, thank you.
All right, coming up, we're going to check out the chip sector following Micron's better-than-expected earnings report. And later this hour, Representative Jim Jordan, chairman of the House Judiciary Committee, will join us with more on YouTube reinstating channels that were banned, censored for posting content about COVID-19 or the election. That's at 7:30 a.m. Eastern Time. Squawk Box will be right back.
welcome back, everybody. Micron reporting results that were above what the street was expecting and offering a solid forecast for the current quarter. Those shares are up nearly 100% since the start of the year. Joining us right now with more on the chip sector is Vivek Arya, the Bank of America Securities senior semiconductor analyst. And Vivek, people keep asking this question. Is this huge surge in spending that we're seeing in the AI equipment sector really going to continue? I guess this suggests it is. What do you think?
Yes, good morning, Becky. I think Micron's results are a very positive indication for the sector because memory is so pervasive in every piece of electronics, whether we are talking about data center or PCs or smartphones or any other piece of electronics in industrial and automotive. So Micron's strength, I think, bodes extremely well. I think the big picture view is that AI is having a very positive effect on the sector. It's part of an infrastructure cycle. You know, past infrastructure cycles have lasted 10 to 15 years. If you look at 4G, investment started in 2009, right, went on till right 2020 almost, and in some places still continuing. So these infrastructure cycles can last for a long time. We are still in the first, third year of investing in AI, and we think this can continue. And this has a very positive effect on the semiconductor sector demand.
And you say, you're looking at this, I mean, Micron is rising at an even faster rate than its peers. What's your rating on the company? What do you think about the company even after it's nearly doubled this year?
Sure. So when we look at the AI sector, the names we like the most are NVIDIA and Broadcom, and then some of the indirect beneficiaries that are Lam Research and KLA and Cadence Design Systems. We have been more neutral on Micron because in memory, demand is always very strong. Predicting pricing is tougher. And pricing in memory is as much a function of demand as it is of supply and incremental supply. But we think that when we look over the next several years, that companies that will benefit from this AI sector are not just going to be in memory. I think they are going to be companies such as NVIDIA and Broadcom who can bring together the combination of silicon and software and scale and a complete supply chain. And in the case of NVIDIA, also add a lot more developer support. So they will be able to monetize a lot more of this AI ecosystem. So for every $100 that is going to be spent in implementing AI, we think NVIDIA's exposure to that will be 60 to 80%. Memory is going to be about 15 to 20%. So we do think that what the accelerator companies, what the processor companies are doing is just going to be larger and more pervasive in the AI ecosystem.
So despite these strong results, you wouldn't be telling people to buy Micron here?
Yeah, as you mentioned, the stock has had a very strong run. Usually these memory companies trade on book value anywhere between 1 to 3 times book value. The stock is trading closer to 3 times. See, it's executing extremely well. It's in the sweet spot of growth, so no doubt about that. As I mentioned, what is harder to always tell about memory is the forward pricing. And as we look into next year, there will be more competition from Samsung coming into the memory market. But if you're NVIDIA, having more competition in memory is actually a good thing because that is part of your input cost. So the more suppliers you have supplying memory, that's the reason we would prefer to go within NVIDIA or Broadcom, for whom having more competition in memory is a positive for their margins.
But what you said is kind of phenomenal. For every $100 that's being spent on AI equipment, NVIDIA is going to get $60 to $80 of that, NVIDIA alone?
Absolutely. If you look at, this year, the investments in AI infrastructure have been $250 billion, and NVIDIA's data center business is probably going to do close to about $180 billion. So they are the biggest beneficiaries of this because the most important part of that AI server is the NVIDIA GPU, right? A traditional server is priced at $8,000 or $10,000, and racks that have NVIDIA servers are priced on the order of millions of dollars. And they are the ones benefiting the most from this build out. And for what it's worth, the stock is actually trading right around or even slightly below the day ChatGPT was launched in 2022. If you look at NVIDIA's forward multiple of about 30 times, it's actually lower than the day ChatGPT was launched. So from that perspective, we actually think the stock is, not just showing very strong growth, it's also very compellingly priced from a valuation perspective.
So the stock's trading at just under $180. What's your price target?
$235, which is essentially the company trading at about 1 times its earnings growth. if you look at other Max 7 companies, other large cap growth peers, even the S&P 500, you'll see that companies tend to trade closer to 2 times earnings growth, and Nvidia right now is trading closer to 1 times earnings growth. I think what the company has been caught up is a lot of overstated concerns about China, about competition from Broadcom. But we think that the OpenAI announcement that they just made, tells us 2 things. First, that NVIDIA will be extremely well engaged with the Western AI ecosystem, which is going to be much larger than whatever is being built in China. And number 2, the preferred vendor status that they have with OpenAI suggests that they will have a very strong market share as that disruptive company builds out its AI infrastructure. And, I think that investment is a force multiplier for everyone else in the AI ecosystem, that when you have a disruptive force such as OpenAI investing to this extent, I think it puts pressure on every other hyperscaler to invest. And we think companies such as NVIDIA and Broadcom are very well positioned to benefit from that build out.
Okay, Vivek, thank you.
Thank you, Becky.
Okay, coming up, digging into a very lucrative partnership. Shares of rare earth producer MP Materials taking off since landing a deal with the government back in July. The company's CEO, Jim Litsky, joins us for an exclusive interview. We're going to talk to him next. Squawk Box returning after this.
Time now for today's AFLAC trivia question. Which bird holds the record as the fastest flyer, capable of diving at speeds over 240 miles per hour? The answer when Squawk Box returns.
Ian Peacock.
And now the answer to today's AFLAC trivia question. Which bird holds the record as the fastest flyer, capable of diving at speeds over 240 miles per hour? The answer? The peregrine falcon.
Welcome back to Squawk Box. Shares of U.S. rare earth producer MP Materials more than doubled since the company inked a deal with the U.S. government back in July. You can take a look at this right now. As part of that agreement, the Department of Defense became the company's largest shareholder. Joining us now in an exclusive interview is MP Materials Chairman and CEO Jim Litinsky. It's good morning.
Thank you, Andrew. Good morning.
It's fascinating because you were actually one of the early examples of a situation where the government backed you, but also took a stake in the business. We've been having lots of conversations about the government's role and what it means to effectively be independent, be connected to the government. I'm so curious if you could go back in time and just tell us about how that deal came about and how you thought about it.
But I do want to distinguish MP because I think there's a lot of sort of noise in the media. But if we think about Intel or Lithium Americas that were, was rumored this morning, that those are scenarios where you had commitments from a past administration where the Trump administration has come in and said, wait a second, we have no strings attached commitments to companies. We think we should get a piece of the action.
They didn't have to do this in this case.
They didn't have to do this.
Right.
Ours is really a different situation, which is we were executing well, there was a crisis, and the Department of War came and said, we want a true public-private partnership with you, MP, so let's do a deal. And so our deal is very different. In our deal, we can get into the politics, but there's actually a long tradition of public-private partnerships in times of national security crisis in the country. And so our deal is very different than sort of some of the other deals.
For the audience that may not know, explain what MP Materials is doing.
So we are a vertically integrated rare earth magnet producer. So we mine and refine materials in Mountain Pass, California. We send them to a factory in Fort Worth, Texas. And so we have the vertically integrated supply chain to truly solve the rare earth magnetics crisis that we have, which is critical for, essentially, it's the feedstock to the future of warfare and physical AI. So it's mission critical for our national security and our national security infrastructure and economic infrastructure.
And by the way, it's exactly what China used as leverage just a couple of months ago.
That's exactly it. When we went into Geneva, Becky, our economy, I don't think people fully appreciated the first trade talks in Geneva. We were on the verge of factory shutdowns across auto, aerospace. It was really, really close.
So how much can you produce? Is it enough to make up what we are getting supplied by China at this point?
So as part of our partnership with DOW, the goal is to accelerate everything that we've been doing to 10x our capacity, which will essentially solve the American imports as of today. Now, obviously, the industry is growing, but it'll take this issue off the table.
Yeah, how long will it take to get to that point, and how much do you produce today in terms of the demand here in the United States?
Yeah, so we're going to triple our existing factory, and we expect that to be online the tripling in 27, and then we're going to do another 7,000 tons, which is taking it to 10,000 tons, and that should be online in 28.
What is the average? What is the daily demand in the United States right now, or the annual demand?
Yeah, well, we import. It's a complex question because we import a little over 7,000 tons of actual rare earth magnets, but then there are about triple that in magnets in things that we import, like motors or actuators that are actually coming in as an import as part of a product.
You look at the stock. I think you were on the show 5 years ago when it was originally a SPAC. Stock's up about 380% since then, which is a remarkable thing, so congratulations to you.
Thank you. Yeah.
I'm curious, when you were discussing this with the government, how you chose, or how they chose to do a deal like this, and what was going through your head about it all?
Well, and remember, Andrew, we actually had two things announced in July. We had the public-private partnership with the Department of War, and then we also had a big deal with Apple, where we are now, Apple's going to be the foundational customer for our recycling business. So we're going to have the full closed loop of rare earth magnetics. So I think the market's obviously excited about both of those things. But the DOW deal really transforms us from what was historically a volatile business based on commodities prices and essentially subject to Chinese risk, mercantilism risk, to we now have contracted cash flows for the next decade plus. And so, obviously you can, see those numbers, but the entire nature of our economics have changed dramatically.
But how did you think about the equity piece of it? And the good news is, look, to the extent that you're successful, the American taxpayer will get to participate in this. But how did you think about that? Because there's probably other people who say, you know what, I want to be an independent. I want the government to be a customer, but I may not want them to be an owner.
Right, and they're by the way, DOW is now our largest shareholder. And now they're our largest shareholder. They're also our business partners, so they have an economic interest in our magnetics factory, separate from their ownership, and they're our largest customer. And so it's an honor. I mean, it's a really humbling relationship that we have to execute for.
Did it feel like it was a deal you couldn't refuse, because if you did, they would go to somebody else like USA Rare Earth?
No, well, I think we were in the position to get the deal because we had embarked on this vertically integrated strategy and executed, and I think they came to the conclusion that we were the only ones who could execute this in a timely manner and in sort of a thoughtful way.
But could you not get other investors to help you do this? Like, you really need the government to step in and do this?
Well, what the government wanted is a massive acceleration of what we were already doing. So this was different, again, from these other situations where you have companies that are sort of at risk or have, frankly, needed a quasi bailout. This was, we like what you're doing, accelerated. So there's a long there's a long tradition in this country going back to the railroad boom,
no question.
shipbuilding in World War I,
and this has been
bombers in World War II.
Like an issue that
this is
a national situation.
One of those, and I think what's unprecedented, Becky, though, is that the way the Trump administration thoughtfully fought for the American people. I mean, this is a home run for the taxpayer. So they're going to get what they want from a national security standpoint, but then there's economic.
Do you feel the same way about what may be happening to Lithium Americas or what happened with Intel?
Well, I think those are different because those are, and I don't want to use the extreme word, but those are quasi bailouts or something along the lines of that. And I think it is appropriate for the Trump administration to say, hey, wait a second. The United States government made a commitment here. There shouldn't be no strings attached to capital. If we're going to give you this capital, I think they should, but they should also make sure that the taxpayers are protected.
And maybe you'll think this is unrelated, and I know we got to go.
Yeah.
The sort of larger thing that's happening right now is what I would describe as a sort of vendor financing arrangement, where the customer is often now either paying or financing the suppliers, and the suppliers are financing the customers. It's a very, or taking stakes in them and doing look, we just talked about this with NVIDIA the other day.
There are shades of Cisco 2000
with OpenAI, and how you think the investing public should think about that.
Yeah, well, I think that if you use that analogy of the vendor financing and the Cisco boom bust collapse, I do think that the AI boom is playing out similarly in the sense that, if you think the Magnificent Seven today, right? There's just a couple of them that were around in the late 90s. The thousands of other companies essentially lost all of their capital or most of their capital. I think we will see something similar in the AI boom where you'll see trillions of dollars of capital spent with very low return, and then there'll be a lot of failures, but then out of that there'll be great successes that emerge. We obviously think that physical AI is going to be sort of similar to how mobile emerged as sort of the true use case out of that, and I think you're going to see something similar where the excitement right now that we see, where's the revenue, where's the ROI, and so now we're getting to this stage where essentially NVIDIA is taking equity because there isn't a proven business case. There may be, nobody knows, but it's later cycle from that return on capital standpoint, and so from an investor standpoint, it's probably a time to be more cautious of that. Admittedly, though, this is sort of a transformational time.
Jim, very quickly, you're no longer the largest shareholder. Are you still just as incentivized? You're not going anywhere?
Oh, absolutely. I mean, you can look it up. I have a very large amount of stock, and I'm the founder of the business. I love the business. I have a responsibility, and most importantly, this is humbling. I'm really a proud American. I want to do this for the country, and we're going to get this job done right. And so, I'm really privileged to get to do this, and it's an important thing to take this issue off the table. And so obviously our team at MP is, we're all excited to do this, and we've got a lot of work to do to get it done right.
Jim, thank you for coming in. It's fascinating. Congratulations on just a wild success.
Thank you. Appreciate it.
And we're kind of all riding on this just to make sure that you guys are successful.
If we were allowed to have audio and I played I Just Want to Celebrate, the day of it, would you know?
I'm hearing it in my head right now.
Would you know what?
I Just Want to Celebrate, of course.
You know who the... the name of the band?
I just want to celebrate.
No, another day of the... You know the name of that band, you don't?
Rare
Earth. Coming up.
I knew that.
You did know that.
People,
yes. You wonder what the hell am I asking you? I know.
Joe has some very interesting connections.
That's what I was saying about the entire time the worm was in my brain. I just want to sell another day. Yeah, because of Rare Earth.
You should buy the license to that song for the company.
We should. So coming up, but we can't play anything. YouTube taking steps. YouTube's taking steps to reinstate channels that were banned for posting content. Are you allowed to do that? posting content about COVID-19, Wuhan, laptops. It was all sparked by actions taken by Representative Jim Jordan, chairman of the House Judiciary Committee. He's going to join us with more on that and his reaction to Jimmy Kimmel's return. I think he's in the great state of Ohio. So.
Pitch.com.
YouTube announced yesterday it would open the door for channels that were banned to be reinstated. Some of the bans were for posting about COVID-19 or the 2020 election. This comes after Representative Jim Jordan subpoenaed Alphabet's CEO, alleging that YouTube was a direct participant in the federal government's censorship regime. Joining us now, Representative Jim Jordan of Ohio. He's the chairman of the House Judiciary Committee, and I'm glad to have you on, even though it's a phoner. I know you're in the great state of Ohio, Congressman. I mean, we heard something similar a year ago from, I think, Facebook, sort of copying to the same thing, and I mean, is this similar to this with Facebook? They weren't allowed to put anything out about the laptop, I don't think, or the lab origin, the Wuhan virus lab origin. Yeah. Is this similar? Is it the same things that they were banned for, or different?
Very similar. Google or YouTube admitted yesterday that they, like these other platforms, were censoring, were being pressured by the Biden administration to censor speech. I mean, you got one of these, Google is it's a huge market cap company censoring, half their customers in essence. And I think the big takeaway was they're going to reinstate people that they've actually taken their channel from them, that they kicked off. And then they also said they committed to never use these fact checkers like these other platforms, these independent fact checkers who think they're so much smarter than the rest of us. but are just biased individuals. So we thought that was a big news. And then I think that maybe the fourth thing that we heard from them was, look, what's going on in Europe? We've all seen this with the Digital Services Act, the Digital Marketing Act, are very troublesome. So here's a company who said, yes, the Biden administration pressured us. We, in fact, did it. We kicked people off, took their channels from them. Those people are going to be reinstated. And we've admitted that what we did was not consistent with the First Amendment in any way.
Through the good old days, though, it wasn't called censorship. It was called content moderation or rooting out. Hillary still talks about rooting out. It's got to be done. It has to happen.
Yeah.
Rooting out disinformation or misinformation in the eyes of the beholder, which was one of the problems. This is not going over well on with Democrats, though, Congressman. Representative Jamie Raskin issued the following statement. Today's letter from Alphabet has the ring of a false and coerced confession, like the shameful capitulations to Trump's shakedown of broadcast companies, and we can talk about Jimmy Kimmel in a second, and law firms. This humiliating performance is the bitter fruit of Trump and MAGA's relentless pressure campaign, forcing corporate America to submit.
No, I think it's missing the facts. Because remember, the Biden administration, I think we citizens should never forget, they established a disinformation governance board, Joe. As if some bureaucrats can tell you what you can say, what you can read, what you can post, what you can tweet. That actually happened. And but for a bunch of us all over the country saying this is ridiculous, that bureaucrats are going to decide what is misinformation, disinformation, what you can say, that is so inconsistent with our First Amendment liberties. And because we all spoke out, they disbanded that, thank goodness. But that's what's going on here. Not a shakedown or anything like that. They did it. They admitted to it. And never forget too, what they were censoring was responses and comments and tweets and posts about how they handled COVID. And I always point out, everything the government told us about COVID turned out to be wrong. They said it wasn't our money used at the lab, but they said it wasn't gain-of-function research done at the lab in China. Those are both wrong. They said it didn't come from a lab. Well, it sure did. They said the vaccinated couldn't get it. They said the vaccinated couldn't transmit it. They said masks worked. They said 6 feet social distance was based on science. And then they told us first virus in history where there's no natural immunity. So they were 0 for 8, and yet they were censoring people who disagreed with all the crazy things they told us. So that's how bad it was. And now Google has admitted, just like Meta did a year ago, that, we were pressured to censor. We did it. We're wrong, and we're not going to do it in the future, and we're going to change the way we handle things going forward.
And Congressman, the Jimmy Kimmel situation, it was clear to almost anyone that what late-night so-called comedy shows, what they sort of are actually all about. Not a lot of comedy, but maybe 500-600 Democrat or left-wing guests. Maybe you can count on your hands the number of so we know exactly what it is. Okay, so then Brendan Carr, and it's the public airwaves. I guess he had the right to say those things, but it certainly gave the left a huge gift in terms of now they're all First Amendment advocates. Who knew? But was that a mistake when he threatened the licenses of the broadcast network?
Here's what I know. It turns out if you're a late night show, you should probably not insult half your potential audience, and you should probably be funny.
But they're allowed to do that, Jim. They're allowed to. If they want to do that, they can do that, which is why they get the ratings they get.
Yeah, but Nexstar and Sinclair said we don't particularly like that for the multiple markets where we have ABC affiliates in, and they said we're going to take him off. This was a business decision. Don't insult half your potential audience and actually be funny. And if you do those things, I don't think you see Nexstar and Sinclair take the move they did. So I view this is the old Michael Jordan line. Republicans buy sneakers. Republicans watch TV too.
You open yourself up to the coercion. They want to get regulatory approval for a merger, and you could say that's what is behind.
Congressman, can I just read you something? This is what the President of the United States says. And you tell me whether you think this sounds like coercion or not. I think we're going to test ABC out on this. Let's see how we do. Last time I went after them, they gave me $16 million. This one sounds even more lucrative.
Well, I mean, I don't think you can say this is the pressure from the government because ABC put him back on. I didn't stay up and watch it, but I think he was back on last night. So how is that the government's taking him off the air when in fact the ABC themselves, Disney made the decision. Oh, we got two of people we do business with, Nexstar and Sinclair.
Right, I'm saying, but
a number of affiliates.
That does sound like pressure from the government, right? But there's pressure. It may not be successful pressure, but it's pressure from the government.
I guess you can say maybe some, but I don't think that's what drove this. I think this was a business decision. I mean,
what do you make of what your peers
actually to watch the show.
What do you think of like what Ted Cruz said about this? Government shouldn't be in this business of trying to pressure anybody about free speech at all.
No, fair enough. And look, I think we should be defending your right to speak, the most important right we have under the First Amendment. I always say if you can't speak, you can't practice your faith, you can't share your faith, you can't petition your government, you don't have a free press. So the right to speak is so important. I do believe what Mr. Carr is pointing out is that public broadcast airwaves are slightly different than what the Democrats tried to do, which was on platforms, which is on cable television. They actually, there were two Democrats who wrote a letter to AT&T, said, "Are you going to take Fox and somebody and Newsmax off of your network?" I mean, like, you got to be kidding me. So that's where the Democrats were, and now you have the FCC commissioner make a statement, and they're all up in arms about that. When in fact, I think you can look at this was a business decision that the government didn't influence, as evidenced by the fact they put him back on last night.
Would this ever get anywhere if someone tried to say, look, for the public interest of the center of the country, it's not being served by a broadcast network on the public airways? You could say that, or you could say it's essentially a campaign ad for the left, or I mean, it's not much different. It's really not much different at night. What if you watch it at night? It's not much different than that. It's fine.
Yeah, well, I think the country, and I think this is probably Nexstar and Sinclair's position as well. I think the country kind of like the days when I still remember Johnny Carson and it was funny, and it was and they poked at both sides, but it was done in a I think a fair way, a good way. And he had things like, I still remember the Jack Hanna from the Columbus Zoo going on Johnny Carson, and you had whatever animal was on that night, jumping on Johnny's hair and everything else. So I mean, it was humor and stuff you could watch. So many Americans just don't want to watch this stuff anymore.
No. For 4 years, Biden or a Democrat would go on, when Biden was a president, would go on Kimmel's show. It was almost it was almost homage. So they don't divvy it up equally. They don't make fun of people in power. They make fun of the people in power that they're on the opposite side of. All right, Representative Jordan, enjoy your time in that great state. Reds lost last night. Reds lost. Mets won. They're one back. They're one back again. And Chicago's lost like six games in a row. Come on, Chicago. Come on. See you, Jim. Thank you. See you later.
Yeah.
When we come back, can we expect air travel chaos if the government shuts down at the end of the month? We've got a warning from the airline industry. We will bring that to you next. And later, the FDA approving the injectable version of Merck's cancer therapy, Keytruda. That's the company's biggest revenue generator by far. We've got an exclusive interview with the CEO, Robert Davis. That's coming up at 8:10 a.m. Eastern Time. Squawk Box will be right back. government shutdown is looming over Capitol Hill, and if there is a shutdown, it could snarl air traffic. Phil LeBeau joins us right now with a warning from the airline industry because, Phil, otherwise things are moving along just perfectly.
We're at record levels right now, Becky, and generally speaking, and yes, there are situations that will pop up from time to time at different airports or different areas around the country, usually because of weather. Generally speaking, things have been smooth here for several weeks, actually several months for the airline industry. And as we look at the situation coming up next week, keep in mind that TSA workers, air traffic controllers, others who deal with the airlines, these are employees who would not be paid by the federal government if there is a government shutdown. What does that mean? It means they don't have to go to work if they don't want to. Now, as we've seen in the past, if it's a few days, generally speaking, you're not going to see a fall off in the level of service. Fewer TSA agents, etc., air traffic controllers. But they do have that right if the government shutdown goes into effect and they are not being paid. Take a look at the passenger levels right now. This is where we are in this country. Record levels last year of almost 2.5 million passengers on a daily basis. We're above that this year. Whether it's 2.55 or 2.6 million, it's not a whole lot more, but it is more than we saw last year, and we are getting ready for the holiday season. That's why the new president for Airlines for America, who has experience dealing with the federal government as the former governor of New Hampshire, he dealt with Washington quite a bit. Chris Sununu says it's important to keep in mind the potential impact a shutdown could have on the airlines.
If it gets extended, then it gets a little more serious because these workers are coming in and they're not getting paid, right? They're coming in as essential workers, but they're not getting paid. So every day that a shutdown potentially goes further, the system gets more and more strained.
Take a look at the airline stocks. They have come back considerably from where they were earlier this year. Bottom line is this, guys. Short couple of days, not a big deal. But this thing gets extended out, then you could see more issues at airports around the country.
Yeah, Phil, I guess they could carve something out and pass funding for certain areas like the airline industries, but it's not just the airlines that are faced by this. It would be the ports, it would be any inspections that are being done on any imports coming into the country. You can think of time after time where it's pretty essential workers, and yeah, you don't want them going without a paycheck because not showing up would cause a huge problem in certain areas.
And Becky, we've seen in the past, if it is a few days, generally speaking, you don't see a big impact. It's if it gets extended. And you can't blame some of these people, whether they're at Customs and Border Patrol or in some other job, who at some point would sit there and say, wait a second, I've been working for a couple of weeks without a paycheck. Now, again, that's a worst case scenario. Most people are hoping that there is a deal worked out, and if there is a shutdown, it's very short-lived.
Phil, thank you. We'll see you soon.
Coming up, Trulio Group founder and chairman, Saul Trulio, is going to be joining us with the new data on the economic power and influence of the nation's Latino population. Plus, Energy Secretary Chris Wright heading to the UN later today. But first, he's making a stop here. He's going to be talking to us in a wide-ranging interview right on our set in just a moment. Don't go anywhere. Squawk Box. Come right back.
HR.com.
All right, our next guest is here to share some new data on the growing economic force of Latinos in the United States. Joining us right now is Trujillo Group's founder and chairman, Saul Trujillo. He is the chairman of the Latino Donor Collaborative, the founder of Latitude Ventures Fund, and founder of the Velocity Business Conference, which is kicking off in Los Angeles later today. They're releasing part 2 of their U.S. Latino GDP report, which measures the economic growth and influence of U.S. Latinos at the state and industry level. And Saul, thanks a lot for being here. It's good to see you again.
Good to see you, and thank you for having me.
Okay, let's talk a little bit about what this report breaks down. Go ahead.
Great. Well, a couple of months ago, we announced part 1 of the study, which the big numbers are $4.1 trillion of GDP, which puts it in a context slightly greater than the GDP of India. So contextualizing it, it's right here inside the United States. It's not LATAM, it's not a lot of other things. At the same time, it's driving consumption. And one of the things that you all have been talking about the last few weeks with retail sales and other things is the consumption is a challenge going forward in our country. And part of it is when the retail sales were announced, it was basically mostly price ups as opposed to volumes. And so we have the great side of AI, huge amount of investment, that at the end of the day, the economy works 2/3 based on consumption. So we have a cohort here, the U.S. Latino cohort, that is driving much of that growth, and it's youthful, and it's going to only get bigger for the next 2 or 3 decades based upon birth rates, not based upon immigration or some of the other, what you might call contentious issues. But it's a reflection of the value of what we've had historically. So now we're seeing that the states of Texas in this report, the states of California, the states of Illinois, Florida, and others, their economies and the GDP growth within those states is almost anywhere between 50 and 2/3% driven by the U.S. Latino cohort. As entrepreneurs, business people, as people that are workers within sectors that need to grow. And now that we're really turbocharging the AI investment engine, where you're reporting almost every day some new investment, the question is not only the announcement of what you're going to do, but how are you going to get it done? And that's the other side of the equation where we need workers.
Let's break down some of these numbers. You are looking at state level forecasts that you're expecting California to surpass $1.4 trillion in Latino GDP, Texas $1.1 trillion. But you say the fastest growth is really coming in other state economies, Ohio more than 87%, Pennsylvania more than 75%, Michigan more than 65%. What does that mean, Latino GDP? That's what they earn and what they spend?
Yes, it's a combination. It's the same thing of everybody else. It's investment. So there's a lot of entrepreneurship building. Part of it's the consumption, which is the biggest part. And then the other side of it is that the value that's received in terms of the workers that are there, their payments into Social Security and all the other parts of our, let's call it their tax system that we have in our country. But it's great to see that it's not just in the big states that we always think of, Texas, California, Florida, New Mexico, that sort of thing, but across the country, these workers are needed, and also entrepreneurs are needed, as well as the whole consumption side. So we saw probably 8-10 years ago in North Dakota, when the pipeline was being built and they were doing fracking. Well, guess what? North Dakota, now 5% of their population are Latinos, because they went there to work, they created businesses, and they're contributing to the economy. Now that's happening in Ohio and many of the states that you were referring to. Tennessee is one of the states. So where you think about economic growth in states, whether they're red or they're blue, this cohort is part of the underlying infrastructure of how these states can grow. Because if you don't have workers, it's really hard.
So we're about out of time, and I want to get through a couple other points with you. You say it's reshaping markets. You've made the point that this is a younger demographic, and part of this report says that the cohort represents 20% of all video on demand usage, 26% of vehicle purchases. So I guess the younger demographic is doing things a little differently.
Well, I don't know that they're doing things differently. It's just that there's such a high percentage of the cohort that buys things, right? The retirees, the baby boomers, you know, when they reach that point in their lives, they're not spending as much on virtually everything. And so the younger working age cohort, which are the Latinos, they're making a huge difference in our economy for the consumption side of our economy. But now when we talk AI and we talk about all these investments, we need workers. And right now we're short 3.5 million workers, given the projects that have been announced, that you announce almost every day on the show. And we need to think about this as part of our economic strategy and not dismiss it, not just think about deportation, not just think about limiting immigration, because that's been the strength that Ronald Reagan brought to our country when he was president.
So thank you for your time. We appreciate it, and good luck with the conference today.
All right, thank you.
It's 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Let's take a look at the futures this morning. It looks like right now we are in the green. Dow futures up by close to 50 points. S&P futures up by 12. The NASDAQ up by 70 points after all three of the averages were down yesterday, but of course coming off of all-time highs from the day before. Treasury yields have been, actually they've turned up. The 10-year's at 4.12 again. The 2-year is at 3.57, and then oil prices this morning a little bit higher. Actually, WTI is back above $64 a barrel at $64.19.
Okay, joining us right now on set before he heads to the UN later today is United States Energy Secretary Chris Wright, and we're thrilled to have him at the table. Good morning to you.
Great to be here, Andrew.
Feels like we're going through an energy renaissance in this country in so many different ways. A lot of it driven by AI. How much of this is an AI boom versus something else?
Well, the AI boom is for the electricity sector. We haven't had much growth there in a while. That's the biggest driver of growth in electricity. Reshoring and manufacturing will drive that too. But a huge part of the growth in American energy is for exports to our allies in Europe and Asia around the world. And that's separate from AI.
And that's separate from AI. So how much are you thinking right now about what the new sort of configuration, given all the things that the administration is trying to do in terms of bringing back certain business to the U.S., what the energy requirements ultimately look like?
I guess in simple numbers, we think we need to add 100 gigawatts of new firm capacity in the next 5 years.
Right.
And when President Trump arrived in office, the plans and in queues was to close 100 gigawatts, mostly of coal, a little bit of natural gas, and only add 22 gigawatts of firm capacity, so a net reduction of about 80 gigawatts. So instead of minus 80, we got to go to plus 100.
The president poured a lot of cold water on Climate Week yesterday, Mr. Secretary. I'm sorry to break that news to you. I think he called it a green news scam, but really piled on what he obviously thinks is not as pressing an issue as we've been led to believe. I guess I'm leading to a report that you commissioned, and Steve Koonin, who was Obama's guy in science, has written about it, that the public perception of climate change and actual climate science is totally diverged at this point. It's not even in the same world.
It's amazing how wide that divergence is. I've been involved studying, engaging in the climate dialogue for over 20 years. Early on in my career, shale gas pioneer, right? Biggest driver of reduced greenhouse gas emissions. Also had technologies to monitor CO2 sequestration. Wow, if climate change is a huge deal, it's going to be great for my future business. But the more you dive into it, it's a very real physical phenomenon, but not remotely close to one of the world's biggest problems today. It's been used by politicians and activists to claim it is, call it a crisis, but that's simply divorced from the reality of the data.
I mean, some of the findings, it was in this piece in the journal, the op-ed piece from Obama's guy, Steve Koonin. Complex climate models provide limited guidance on the climate's response to rising carbon dioxide. Data aggregated over the continental U.S. show no significant long-term trend in the most extreme weather events. The IPCC, their sixth annual summary of things, they admitted that they can't tie carbon dioxide to increase adverse weather events. They admit it right there.
Exactly. It's always been in the data that there's not been a pattern. There's the only extreme weather event with a little bit of a trend is tornadoes, and they're going down. Heat waves, of course, are going up a little bit because the world is becoming a little bit warmer. But yeah, this whole use of scaring children and claiming urgent action.
People don't want to have kids because they don't want to bring kids.
And they definitely don't want to take Tylenol when they're pregnant.
That's what I was going to get you to. That if you look at some of the things that come out of RFK's HHS in terms of science, that I would say undercuts some of the Trump administration. They'll say that your science in terms of global warming or climate hysteria, they will say that it's two sides of the same coin, that it's not science-based.
Yeah, on the energy and climate side, I can guarantee you it is science-based. Look, I'm a tech nerd, science guy my entire life. And we commissioned that report, and I've been out talking about climate change based on data and facts. Just like everything in life, it's about trade-offs.
Well, that's what I was going to ask you about. Let's just talk about the trade-offs. I think that's the, by the way, I agree with you. It's a trade-off story. And the question is, we need a certain amount of energy to be able to grow our economy and do all the things we need to do. The question is, do you believe 20, 30, 40, 50 years, I don't know, hopefully we can live a very long time, that from a science perspective, we're going to care about CO2? Meaning, you may say to yourself, right now, given the trade-offs, you need coal or you need fossil fuel, whatever, right? I'm with you there. However, there could be a time, I think I guess the question is, in a perfect world, would you try to use energy sources that don't create the CO2 issue?
Oh, I think so. Absolutely. Yeah.
I don't think so.
We can eventually decarbonize the world, but that's generations away.
And decarbonize the world through technology?
Absolutely, through technology.
Chris, if you're arguing that there's no discernible effect, why would you, if it's a phantom menace in your view right now, then why give credence to the idea that you want to, that whole word decarbonize it? We're at 0.04% CO2. It's been 20 times higher in the past when it wasn't warm. So, I mean, the whole idea, the whole linkage between that and adverse weather it's not proven.
It is not at all for adverse weather, and you don't expect it to be either. Weather is driven by gradients. The poles are warming more than the equator, so the gradients are actually shrinking. Right. So yeah, do I think it's a huge threat for the world? No, but it does absorb infrared radiation. It is contributing to warming.
The world is greener.
The world is greener, the world's a little bit wetter, a little bit greener, in general a better place to be. But in the long run, if you look out 1,000 years, nuclear energy is going to become a huge energy source. And in the way distant future, we'll likely use nuclear energy to produce hydrocarbons. You can't have a modern world without extensive use of hydrocarbons.
So what's it going to take to actually get it there? What in terms of nuclear? I mean, that's been the holy grail of energy. If we could just get nuclear to actually work and feel safe, and people being willing to have it in their neighborhoods, that we could change this entire dynamic.
So, well, I don't think you can change the entire dynamic, because nuclear at the 6.5% of global energy today, it's about 5%. If we can reverse that trend, get it growing again, get it growing fast, it might be 10% of global energy in the year 2050. Energy systems move slowly. Wind, solar, and batteries, 2.6% of global energy. They're not going anywhere. They'll never get to double digits. Right. So nuclear can be bigger, fusion's coming along, but these things will move slowly. The belief, think of the Biden administration. They wanted to stand in front of fossil fuel production in the United States. They did nothing to change the world dependence on hydrocarbons. They just drove up the prices. Good for the 1% in the industry, but bad for the other 100%.
Talking about driving up the prices, we started by talking about AI and just this big boom. There is a concern in some states already where there is a real effort to bring AI and AI data centers into these states, that the end result is actually driving up the cost of energy for the ordinary American.
So it is a balance, but ultimately AI done correctly, and that's what our whole thing, bring common sense, bring data. We're not this crazy alarmist band, but we can deliver AI and stop the rise in electricity prices. It takes some time because we've been digging a hole, make it very hard to produce firm capacity. Let me give you one example. Google signed a deal with Georgia Power and Light, biggest utility in Georgia, to build a huge data center there. And with the way they're going to fund it, Georgia Power and Light locked in their rates for 3 years, no increases. The ultimate impact of AI should be able to make our grid more secure and actually lower the average delivery cost.
So one of the things that people critique in the AI space is they say, look, all of these data centers and tech guys are saying, if we're going to build this, you, the energy companies, are going to have to, provide 99.999% uptime, meaning that we get prioritized energy relative to everybody else. And, there's this question, the hurricane happens, something else happens, who is going to get the energy first?
Oh, consumers will always get the energy first. But how you get all those nines for the data centers is backup generators. Right now, there's backup generators all over the country, and silly EPA rules prevent us from using those backup generators. The electricity grid, people keep saying we need more electrons in the grid. That's not how electricity works. The only time we have a shortage of electrons is at peak demand time. We're going to, again, bring some common sense. So let's turn on all the backup generators that are sitting there at data centers today and at other critical facilities, and turn them on when we get near peak demand to keep our grid robust. Common sense will help us deliver more data center, more electricity, and lower the cost. But 4 years of careening down the wrong road is going to take some time to reverse.
There's the endangerment finding on CO2 that it sort of it set back utilities, it set back a lot of different industries, and it was based on the idea that you could say that CO2 is pollution because down the road you'd have increased weather events. You just said that there has been no linkage between the two. Is the endangerment finding, number one, it was preposterous when it started and an overreach, but it's still not gone. Is it in the courts?
Well, the EPA is working on a rule, and a decision will come out, and if they decide to remove the endangerment finding, which I personally believe the data overwhelmingly supports, get rid of the endangerment finding. Talking about extreme weather, deaths from extreme weather on a 100-year plunge. It's never been a safer time to be alive from extreme weather. So then it'll be challenged in the courts.
Cold's a lot worse than hot, too, for what kills people.
5 times more people die from the cold than die from the heat.
Well, it's causing that, too. The global warming causes the coldness. But go ahead.
Everything in weather is climate change.
Hot, dry, warm, wet year.
But yeah, it'll be litigated, of course. But that's exactly what we want, is discussing these energy climate trade-offs in a public setting. But yes, it enabled the Clean Power Plan, which started the rise in electricity prices that has everyone angry today.
But meanwhile, there's plastic building up on beaches in Africa that have never been seen by humans, and there's 50 yards of disgusting plastic and particulate pollution and chemical waste and nuclear waste, and there's not enough fish. There's so many things. You could be such a great environmentalist if you knew what you were talking about.
The funny thing is, I predict in a few years, President Trump will win the Climate Hero Award because his policies, which is pro-natural gas and pro-nuclear, those are the only 2 needle movers we have today to reduce greenhouse gas emissions. And he's not doing it for that reason. You're right. That's nowhere near our biggest issue.
Let's get the plastic out of the ocean. Leave the CO2.
It's a longer conversation. Mr. Secretary, thank you for joining us this morning.
Thanks for having me.
Coming up, Merck CEO Rob Davis on the FDA's approval of a new injectable version of the company's cancer drug Keytruda. We'll also get his thoughts on vaccine policy, drug pricing, and then later, Andrew Yang. I thought you were doing something. Andrew Yang wants you to put down your phone. Former presidential candidate and the founder of a new wireless carrier called Noble Mobile. Oh my God. Joins, I can see the jingles now. Joins us to explain. Squawk Box will be right back.
All right, welcome back, everybody. The FDA has approved the injectable version of Merck's cancer therapy, Keytruda. That drug accounts for nearly half of Merck's revenue. And joining us right now on set is Robert Davis. He is the chairman and CEO of Merck. Also, our very own Angelica Peebles, and welcome. It's good to see both of you. Robert, let's talk about this first of all. The injectable version. Why is this better? Why will patients want this?
Yeah. Well, first, you know, we're very excited about this because I do think this is an important advance for cancer patients. Why this is important, this is an infusion you take under the skin. It takes about a minute. Today, if to go and have an IV inserted and to have it infused intravenously is about a 30-minute process. So we're taking 30 minutes down to 1 minute, and we're allowing patients choice. They can go to a community health center, they can go to a doctor's office. Today, they have to go to a hospital or to an infusion center. So it gives better choice to the patients. It's good for the system because it allows the system to have more capacity to treat patients. And as we look forward, you know, the ability to bring the power of Keytruda to even more patients, especially in the earlier stages of disease, where you can hopefully start to think of cancer more as a chronic disease than as a life sentence. This allows you not to have to focus on your disease every moment.
Look, Keytruda has been an amazing development. It's been able to be expanded to so many different types of cancer. But there are critics out there who are saying, look, you're bringing this out now before the expiration of patent. This restarts the clock on the patent countdown. And you can look at Elizabeth Warren or other people who have said this is just going to make it more expensive for Americans. Why did it take so long to get to the point where you could do this? Because that does sound like a big difference for patients to have a 1 minute injection.
Yeah, well, obviously because this is the combination of Keytruda, pembrolizumab, with another drug, an enzyme, we had to go through a full suite of clinical studies to be able to bring this forward. And so we've completed that work and we're bringing it forward. But I think one important point to raise is this does not extend the patent of the IV form of Keytruda. So we still expect to see generic competition and biosimilar competition for the IV form, but it allows choice. The patients can choose to stay on the IV and they could choose to go to a biosimilar if they'd like to, but if they would prefer to be able to have this where you don't have to have potentially a port inserted under the skin, which normally if you are being infused with chemotherapy or today with Keytruda, you have to have a port implanted. So to be able to potentially avoid that if you're on monotherapy in combinations with orals or in earlier stages, it's just better choice for the patient. So we don't see it as supplanting the IV, just giving more choice.
And you've talked about the fact that you're planning to price it at parity to the IV, but what exactly will that price be, and how are you thinking about how that pricing will change as the biosimilars do come in?
Yeah, so we're not going to announce the specific price until we get closer to actual launch. So hopefully it will be later this month. But you are correct, the goal is to generally price at parity with the intention to not make price a reason to avoid this drug. We want to drive adoption of this drug. And as we look forward, once biosimilars, our goal would be to probably move with the price. So this is not necessarily a price play for us. It is a way to drive and continue adoption of Keytruda in its form, in this new form, to drive for the value we can get for total access and coverage, not a price play. That's not why we did this.
And you've talked about, you think that 30 to 40% of people will move over to the shot from the IV. So how important is that, hitting those numbers to actually moving through and growing through that patent expiration? Yeah, so it is part of our overall story, but we're so much more than that, to be honest with you. And as I mentioned to you previously, it is really, we are moving into a growth phase through new product launches. We have over 20 new assets which will be launching over the next 5 years, over $50 billion of revenue potential. And as you look in oncology alone, while this is obviously, we're so excited about this continued invention with Keytruda QLEX, we have 10 other new oncology assets which will be launching in the next 5 years. So it's about that full breadth built on the base of Keytruda and this 30 to 40%, but is important.
but I'm as focused, if not more focused, on driving that new growth as I am on what Keytruda can be going forward.
Will any of those new drugs be as big as Keytruda? I mean, is this the biggest that we're going to see? It's this massive, $30 billion in sales last year. So can we see another drug like that, or is it going to be, a bunch of these smaller ones?
So as we look forward, of the 20 total assets I mentioned, 10 in oncology, we expect almost all of those to have blockbuster potential. Many of those can be into the multi-billion dollars, but I don't expect you'll see another Keytruda in that suite, but you never know. We actually didn't believe Keytruda would be what it has turned out to be, so we'll have to see. But our goal, if we can bring the breadth and the diversity of our pipeline, continue to build on the leadership we have in oncology, add to that growing opportunities to drive leadership in cardiometabolic, in ophthalmology, in HIV, to us, that is the approach that allows us for sustainable growth for the long term. And I'm confident in that, and that's why you've heard me say I see Keytruda as more of a hill than a cliff, and I'm already looking at how are we growing beyond Keytruda as much as I'm worrying about Keytruda itself.
Well, one of those areas obviously is vaccines. It's a big business for you. And I wonder, watching last week's meeting of the CDC's vaccine advisors, what you took away from that meeting and where you expect them to go next.
Yeah, well, first and foremost, I hope people appreciate the benefit that vaccines have brought. We think of all of the preventable diseases that are out there: polio, measles, mumps, rubella, whooping cough. You can go down the list. These are preventable diseases. These are devastating diseases if they happen. And so vaccines have been a critical part of public health, and we need to protect that. If you look at what the ACIP, the recommendations they put through, I didn't see that they presented any new science in support of the change recommendation, and it did run contrary to years of scientific study supporting what was the existing schedule. So my concern is we need to make sure we continue to drive choice and we continue to preserve and protect this important benefit. And as we start to bring hesitancy to vaccines, my concern is people are going to not get vaccinated and we're going to face diseases we thought were gone, and that will be a tragedy.
What have you seen just in terms of demand for Merck's vaccines to this point? We know that there was vaccine hesitancy that began after COVID. What's happened in the last year? Overall,
The vaccine hesitancy that you saw starting COVID is continuing, so it has not changed. I wouldn't say we've seen an acceleration yet of increased hesitancy, but it's something we're always watching, and it's something we all need to protect against.
Are you dismayed by what you've seen and heard, just in terms of what's being put out as scientific evidence and truth at this point?
Well, I guess what I would say is I put a lot of faith and confidence in our own clinical teams, in the years of study through robust clinical work that Merck and other pharmaceuticals have done. These are well-designed studies. They've been peer-reviewed. They've been reviewed multiple governments around the world. So I stand firmly behind the safety and effectiveness of our vaccines, and I want to ensure that people have choice, but I want them to have a balanced understanding of the benefit these bring and not avoid them due to misinformation. That's my concern. We need gold-plated science.
mRNA, are those vaccines something you wish you had, or is that the future? Are there questions about differing safety profiles for messenger RNA versus the conventional vaccines?
Yeah, so so today we don't have mRNA vaccine as far as it is for treating, if you will, infectious disease. We actually are partnered with Moderna with mRNA for a cancer vaccine, which we're very excited about, the individualized neoantigen therapy, which is showing great early data in melanoma and hopefully will go broader. So we're very focused there. I think as you look at the vaccines landscape, there are multiple modalities. No one modality is going to drive it all. They all have a place.
Do you think there's cause for concern with the differing mechanism of action for like an adeno vaccine versus a messenger RNA vaccine? I mean, I've always thought that the half-life of like a piece of messenger RNA is like seconds. But you hear conspiracy theories that it's in people's, you've got spike proteins a year after any of that. Should you be more, because all vaccines do stimulate the immune system, and you wonder about the combination of all of them, and if you didn't need to take them, I don't think anyone would want them. is there more risk to a messenger RNA vaccine?
Well, obviously we haven't studied it in infectious disease, so I can't speak to what I haven't studied. But I would say
it's nice the way you can upgrade you can change it immediately.
Yeah.
It's so facile that it'd be nice.
Yeah.
I mean, it's a great platform if it's safe, right? It's hard to
but I would say that obviously we are moving as fast as we can with the partnership we have with Moderna. So obviously we believe in the safety and effectiveness of that vaccine, or we wouldn't be studying it. And nothing we've seen so far would point to any safety concerns. We need to finish our studies to prove the effectiveness, but we are pushing that through. If we can come out with a cancer vaccine that is meaningful, think how that's going to change care for patients going forward.
How do you design a trial that will pass muster with some people when these people, it's not fair to give anyone a placebo if they're going to die in 3 months? How do you design a trial? That was the issue on that drug earlier this week. There's concerns about which guy is he? Vinay Prasad.
He has raised concerns.
Right. He's raised concerns, but
But there are other people who say, what are you going to do?
Well, it's a tough ethical question because, and the way science has viewed it is where you have a preventable disease that you can cure. If you run the placebo study and expose patients to something they otherwise would not be exposed to, that is an ethical dilemma. Our approach has been to follow the science and to run the studies where there is established care. You reference and compare to that established care. You don't always go back to placebo. So I can't speak to the FDA's views of this. That's for them to speak to. But I'm firmly comfortable that the approaches we've taken from the way we design studies are safe and effective. They've been in place for many, many years, and I'd like to see it continue as we've been doing it.
And just sticking with DC, Monday is this deadline that the Trump administration has given companies like yours to voluntarily lower prices closer to in line with other countries. So are you going to voluntarily lower those prices? What should we expect to see from Merck?
Yeah, well, we're still in discussion, so I don't want to get ahead of where we are in our discussions with the government. But what I would say is generally, we need to find ways to lower the price in the United States. And also, I agree that we have to get prices outside the United States up. And as an industry, we're working to do that. My belief is the best way to lower price in the United States is to look at the dysfunction in our system. Today, you have for every dollar spent on a pharmaceutical, only 50 cents on average comes to the discoverer, the company that takes the risk, that makes the investment. The other 50 cents goes to the middleman.
The pharmacy benefits manager?
Pharmacy benefit managers, insurers, in some cases into the hospital systems, distributors. There's a whole list of players in that space. If we could find a way to take that cost and bring down the cost of medicines, you could reduce the cost nearly in half.
And you'd still be making the same amount of profit.
And we would still be able to make the same and invest in the necessary science that makes us the innovation leader of the world. My biggest concern right now is China is coming fast. I think people underestimate how good they are at the science they're driving today. We are the leaders of the world today. I don't want to see us cede that leadership. And so we continue to bring that message forward. We need to get foreign prices up. As an industry, we're working to do that. We need the government to help us through trade negotiation to do that. And we need to bring prices down. So on principle, I'd say we're aligned with the administration. It's just now figuring out how do we best do it in a way that preserves the innovation of this industry and the value we bring, but gives better pricing for U.S. patients.
Maybe they can move all the research to another lab other than the Wuhan lab over in China.
Well,
just a thought.
Yeah, we're just to be clear, for Merck, virtually all of our research is here in the United States, and importantly, we've been heavily investing to bring manufacturing back in the United States. Over $12 billion invested since 2018, another $12 billion between now and 2029 to build for the U.S. in the U.S., and that's where our mission is, and that's what we're going to do.
You are one of the companies, though, that has actually done deals with Chinese biotechs. You've scooped up some of those assets, and there's been some suggestion that the Trump administration might seek to crack down on that. So have you talked to the administration about that? Are you involved in those negotiations?
Well, I've not spoken specifically to the administration about those that consideration. What I would say is where we've done deals in China, that is to bring that science to the West. So we are developing those drugs here in the United States and around the world. It's not, they're not staying in China. So my view is you access the best science wherever you can find it. And if you find the best science, you're going to bring the most care to patients. It happens to be that we've seen a few deals in China that allowed us to do that. We've also done many deals in the United States and through Europe. So we look everywhere where we can find the best science.
Rob, thank you very much for coming in today. And Angelica, thank you for bringing them.
Great. Thank you very much.
Thanks. Truly fascinating.
Thanks.
A couple of corporate headlines to bring you. Shares of Micron rising in the pre-market. The storage and memory maker beating fourth quarter estimates, giving an upbeat first quarter revenue forecast. That's above Wall Street's current forecast. And Micron CEO is going to be joining the gang on Squawk on the Street. That's going to happen this morning at 9 a.m. Eastern Time. Meantime, Tether, the issuer of the world's largest stablecoin, weighing a major fundraising round. Bloomberg saying it may seek $15 to $20 billion for a 3% stake. That would value the company near $500 billion, on par with giants like SpaceX and OpenAI. And Boeing, partnering with Palantir to bring its AI platform into defense and space operations, including classified military projects. Palantir shares rising on the news yesterday. They're up again right now in the pre-market.
Up next, we're going to talk markets and some comments made by Jay Powell yesterday about stock valuations. We'll get to that right after the break. And then later, Andrew Yang on his new wireless carrier launch and why he's paying people to use their phones less. Squawk Box will be right back.
Fed Chair Jay Powell calling the central bank's policy stance mildly restrictive, in his words, and saying that he considers the body well positioned to respond to economic developments. Join us now, Peter Krause, Aperture Investors Chairman and CEO. What do you say about the stock valuations when Fed people or Treasury secretaries talk about things? Janet Yellen, it was the biotech industry, I think, and then it doubled from there. Did he say anything out of character for him? Or everybody knows maybe that historically maybe we're at rich valuations, I guess. Is that all he said?
I don't, but Powell did not operate or talk about the markets out of character. He was right in central casting. You know, he drew a line saying that we're going to have a policy change. That was the big statement, actually. If you really think about it, take all the noise out, he changed the policy. He said we went from restrictive and rising rates to lowering rates. The speed at which we lower rates, that's a question.
It's still restrictive, he intimated.
He's saying it's modestly restrictive, but it's less restrictive than it was, and there's nothing in the dot plots that suggests that rates are not going to go down. Yeah, we have a big debate about how fast are they going to go down and what's the impact of tariffs on inflation and how weak is the labor market. There's all that, you know, noise, but rates are going down.
But in the back of his mind, and they almost think that if we get a 3% print in inflation, by definition, they must think that it's a one-off because it's a 2%. They say they haven't moved the goalposts.
They say they haven't, but that is.
Well, you think they have?
Question. I think I think 2%. We got used to 2% because we were at 2 or lower for 15 years. Just don't forget, 2008 was a very unusual financial depression, and literally wiped out almost all the levered balance sheets in the world. And the government and the rest of the financial markets tried to support that over a long period of time, and you had very low prices, very low inflation for 15 years, and very low interest rates. So when we talk about 2% inflation, that's an anomaly, not a normality.
You would move the goalpost. I mean, the difference between 2 and 3 on the dollar long term is
it's huge. 1% huge. Bad. I'm just saying that 3% is not a outrageous rate of inflation. Yeah, 2's better than 3, obviously.
Called it a depression, Andrew. Andrew is the living, walking authority on the difference between 1929 and 2008. Are you not now? I would say.
I can hope.
We'll see. Well, Andrew would say that 29 was different than 2008.
Yeah.
So would I. That doesn't mean that a depression is only defined as 1929.
Right. You using the D word for the financial crisis?
Financial crisis was
came close. Small D, maybe
came
small
close.
D. Yeah.
Came close, but obviously, look, there was a crash in 29. There was a crash in 2008.
Don't give away the whole book.
How
don't give away the
government ultimately reacted to it actually
was very different.
Was very, very different, and there were, the crash in 29 was really the first domino of a whole number of other dominoes that then fell. That frankly, oh goodness, look at that promotion.
You didn't see how I did that?
Thanks for that. But those dominoes were a series of mistakes, frankly.
Yeah.
And I think we hopefully learned a lot from that period. By the way, Ben Bernanke, as you know, when he was at Princeton, did his thesis on the Great Depression.
Exactly. Right. I'm going to give Andrew a promotion because obviously I read his first book and I thought it was terrific, and I haven't read the second one, but I'm sure it's going to be terrific.
God bless you.
But I do think that 2008 till let's say 2020, before COVID, was a very unusual period of time relative to anything other than 1929. And you could call it a depression or a deep recession or the Great Recession. It was a financial depression, and the entire financial network in the world was restructured, and so was the Fed. You'll recall, Andrew knows this better than anybody, the Fed's balance sheet was like $700 billion coming into 2008, and it ballooned to $13 trillion, and so did the rest of the central banks in the world. We're still working out that problem. So, at a 3% inflation rate.
Nobody seems to think that we need to bring it down. I mean, the administration's answer to this at this point is to
that's their answer, but I don't believe that. I think over time the Fed's balance sheet's too big. And everybody would say it's too big. The question is they don't know how to bring it down. And
without causing massive stress.
Without causing a massive mess. So it's got to be very slow, and that's what they're trying to do. Anyway, the point I'm trying to make is interest rates are going down. And basically, fiscal policy is expansive, and that's what's driving the economy, and that's why the market is where it is.
We had two guests earlier this week say that we've already hit bottom and that the economy's reaccelerating right now. But we need to keep lowering rates to make sure that we come out of what was this is Mike Wilson, was a rolling recession that we've already been through. Is that possible?
Yeah, that's definitely possible. You have a bifurcation in the market between the bond market and the stock market. The bond market is looking back, it's looking at labor. Labor is a lagging indicator. Stock market is sentiment driven, it's looking forward. And as the stock market looks forward, it sees expansionary policies, lower regulation, significant fiscal spending, and taxes in the form of tariffs, which are offset, more than offset by AI spend. So the equity market is saying, listen, I think things are going to expand. So I am sure that people feel that that is true. I think that that is true myself. And I do think that lower interest rates will help that. I don't think rates are going to go down that quickly. And all this, concern about we're at the high mark of an equity market, markets go up over time. By definition,
by definition they do. And look, by definition, it's likely we're in a bubble of some sort that will pop at some time, but who knows when it's going to.
Who knows when?
And the question that I would ask you, though, is it's when you think that sentiment changes. So right now, there's such an excitement around this AI boom. There's so much capital going into this. We keep talking about the sort of vendor financing role. I mean, sort of some very strange ways that this whole boom is now being financed. And that is new, where, you have NVIDIA now effectively supporting its biggest customer.
Its biggest customer.
To buy chips, right? Like this is a different thing.
Yes.
And there's going to be more and more of that.
Boeing sold planes and it financed the buyers. It's not a lot different.
It's not a lot different unless you believe that the folks who are buying the planes can't afford to buy the planes. And so the question is, long term, do you think that AI and everything that's happening here is going to prove to be so profitable that these financing arrangements are going to look brilliant? Or do you think we're going to get to a point where people are going to say these customers actually can't pay for this stuff?
Great question. Let me say three things. Number one is, if for the equity markets to continue to grow and to be robust, the AI euphoria, which is driving the market, must broaden out. If it does not broaden out, then the AI euphoria will create a bigger bubble, and the decline when that bubble breaks will be bigger. In order for the market to broaden out, we need to see rates continue to fall, we need to see labor resolve itself, and we need to see growth. I think those things will happen in the next 2 years.
Right. So you think labor does resolve? Because the other piece of this, which we haven't talked about, is the flip side of the AI boom, which is if AI is successful and creates the productivity we're talking about, there will actually be less jobs.
Yes, there would be less jobs in some industries, but more jobs in other industries. And I do worry about the fact that we're taking out of the country individuals that are willing to work at low levels of wage, and we're not replacing
in immigration, in our immigration.
And when you literally stop immigration, zero. Population growth in this country is like less than 1%. It's 0.7, and most of it is immigration. So when you go to zero immigration, that's a significant problem for growth. We need population growth. We're going to have significant productivity gains with AI. Significant gains. That is a good thing. And in fact, that's going to drive growth in the economy. But if you don't have some population growth, you're not going to be able to capitalize on that.
But you don't want to open the border.
Say what?
You don't want to open the border.
No, okay. There's not a politics discussion. I think.
Well, you never said illegal immigration. No one is against immigration, Peter. So use the word illegal.
Yeah, but we need an immigration.
We need some kind
immigration. We need some
no
kind.
one will argue with you.
We need some kind of immigration.
But we don't need a force open 11 million people.
Joe, I don't want to debate the politics. I just want to say that this country needs population growth. It's one of its strengths, and you need to engineer that in an intelligent way.
Right. You need to have some babies. Elon Musk is trying.
Yeah.
Thank you.
Welcome back, Squawk Box. Our next guest recently launched a wireless carrier aimed to encourage its customers to use their phones less. Joining us right now is Andrew Yang, founder and CEO of Noble Mobile. He's a former candidate for president, also candidate for New York City mayor, and more recently the founder of a new political party called Forward. And I do want to ask you about what you think is going on in this country and this city, but I want to talk about Noble first and understand what's happening here. I saw this ad, which is very funny, by the way. Explain what Noble is doing, and I want to get into the economics of what you're trying to create here.
Oh, sure thing. My friend Mark Cuban started a company called Cost Plus Drugs, where it buys generic drugs in bulk and sells them to the American people at a modest 15% markup. And I thought, can we do that for data? It turns out that Americans are paying twice for our wireless data as Europeans, Australians, Israelis. There's a hidden data tax on Americans, so we thought we might be able to.
You mean our cell phone bill?
Yeah. I was paying Verizon $140 a month until very recently. Obviously, switched to Noble. And I was a customer for 25 years. I made a purchasing decision because Verizon was the best network. But at this point, the networks have essentially achieved technical parity with each other. And I was paying for a distant memory that was no longer really accurate.
Are you arguing, like, where does this tax come from? Is this a monopoly or a duopoly or an oligopoly between these companies?
Well, a lot of your viewers hold Verizon AT&T stock not for the growth, but for the cash. They're paying out $18 billion in dividends every year. And if you look at the market nationwide, Americans are spending $167 billion a year, $83
No, I'm just
per
saying,
month.
but are you saying that the reason we're paying more is because they're a duopoly or a cartel? Like, are they artificially holding prices higher, or are they using what they're making to try and reinvest and give us the next technology?
Well, clearly they're not investing in network capacity, they're investing in dividends. And the reason why Americans are paying $83 a month as opposed to the 40 or 50 it should be is because every year the big carriers ratchet up prices because that's the way they can make a little bit more money. But they're not investing in networks in the same way they are dividends.
So let's understand what the Noble service is, what networks it's running over. These are not your own networks.
I joked, it's like I was busy building cell towers. No, we're running on the T-Mobile network, and what we do is we give everyone unlimited data at $50 a month, but we will give you up to $20 in cash back based upon the data you use. So that's the put your phone down incentive, where if you don't use much data in a given month, you can get $12, $15, $18 back.
And we should say, what's so amazing and what I sort of was enamored by was an ad campaign which was basically saying, put your phone down. That was the entire sort of idea, which is that you actually want people to use their phone less, not more.
Yeah, I'm a parent, and you tell your kids, hey, look up and touch grass and the rest of it, and then you're staring at your phone all the time. I'm also someone who likes money, and so if I knew that I was costing myself money every time I was doom scrolling, I would feel like a chump. So now with Noble Mobile, you actually get money back if you put your phone down.
So if it explained that, so you paid $50 up front.
Yes.
On a monthly basis, and you can get up to $20 back?
Yeah, that's right.
So that means that the bill could ultimately be $30.
Yeah.
And how much do you have to not look at your phone to get the $30?
Well, so first let me confess to all the viewers, I'm a heavy phone user. I use my phone an awful lot. And if you use your phone an awful lot, you'll pay $50 and you're done. But if you were to use your phone a little bit less, the average person uses about 12 gigs of data in a given month, so they'd get $8 to $10 back. That would be normal.
Okay, now the question becomes, how are you able to afford to charge just $50 and possibly less over the T-Mobile network, and T-Mobile charges more than that for the same service?
Again, it's because of the pricing power that's maintained by the carriers. It's supported by billions of dollars in ads, and everywhere you look, you see wireless ads for the big three. But the truth is, this is a for-profit business with hard-nosed investors. We think there's a ton of growth in this area because Americans are now looking to put their monthly bills.
You're buying access to their network on a wholesale basis.
Yeah, that's right.
So what does that same $50 cost you?
No, I mean, obviously we can't disclose all of the ins and outs, but just let me say that you can make money at $50 a month for unlimited data.
So this is not being subsidized by venture capitalists early on at this $50 rate, or possibly even down. Are you taking losses on new customers?
No, we are not. Every single customer makes money from day one.
And T-Mobile is happy with this arrangement?
So T-Mobile believes that having different offerings in the marketplace is going to be good for consumers. Also, Verizon, AT&T tend to be a little bit more expensive, and so if you see an upstart brand growing, it's probably going to be at the expense of a couple of their competitors. Verizon's #1 in market share here in New York and around the country. We think that's where a lot of the growth is going to come from.
Not to mix in a little politics, but you did run for mayor of the city.
Yes, I did.
So what do you think is going on here? Who are you supporting?
I wish that it were not as fragmented a field. I wish that Eric Adams dropped out. He has no path to victory, and that you had a true race between Zohran Mamdani and Andrew Cuomo, and then we could see what New Yorkers really want. In my opinion, we're being penalized for the fact that we had a closed primary in June that disproportionately empowered voters that may or may not be in the mainstream.
So therefore, it sounds like you would not be supporting Mamdani?
I think Mamdani is on track to win. I'm someone who wants what's best for New York City, and so I'm hoping that he does good things for the city.
But it sounds like you're voting for Cuomo?
No, I met with both of those candidates as well as a couple of others, but I haven't endorsed.
You want what's best for New York City, so you're hoping Mamdani does good things.
I think he's on track to win because you don't have a one-on-one race.
You can't stick with what you said. It'd be a disaster for New York if he does win, just because you're a Democrat.
I have a very long right. First, I'm not a Democrat, and second, I had a long write-up about my thoughts on.
That's right.
I'm like most of your viewers. I'm an independent, Joe. That's 50% of the country.
What do you think of Kathy Hochul?
I don't think it.
And what do you think of Kathy Hochul's decision to endorse him?
No, I think that it's politics. She was under a lot of pressure to endorse Zohran because he's the Democratic nominee, and every day that I'm sure that drumbeat was louder in her office.
And do you think that made sense, given some of the things that he's now said about her?
No, again, I mean, I've been on the inside of some of these.
Well, that's why I'm curious. You've been inside the system, so I'm curious, sort of like how you actually see what's happening here.
Yeah, well, what I see is a party politics that's not really solving the problems of New York City residents or New York State residents, which is one reason why people are leaving the state, in large part around affordability. It's one reason why I started Noble to try and lower households' costs. And this is the kind of thing, in my view, that we should be talking about in terms of what our office holders are or are not doing.
What's different between what you do and what Mint Mobile does?
What we're doing is building in an incentive for you to use your phone less. What Mint's doing is sort of a discount offering, but they're different approaches. I like anything that saves Americans money. What we have, we think, is better and more innovative because the savings you get back in your account, we pay a 5.5% interest rate within Noble. So we want to build a set it and forget it savings plan, which we think is the first of its kind.
That then you can use to pay your phone bill?
Yeah, you can just use it to pay your phone bill the following month.
Quick final, go back to politics for a second, just nationally.
Yes.
Since you ran for president. What do you think of the Democratic Party right now? Is there anybody out there that you think is interesting to you?
All right, I'll make this pitch right now. I think the Democrats should have their primary this year. Waiting until 2027 is a disaster for the party because it's a leadership vacuum. No one knows who speaks for the party. There are a bunch of candidates, many of whom I know, who are stealth running already. Just pull the primary up, anoint a leader, and then have that person speak for the party.
Who would you put on that list right now?
It's the same list we all have, but I will say I'm friends with a lot of these characters. I think Westmore, Maryland is going to be very, very formidable. He's a positive individual. I know him from New York and other places. But he's one of several. I think it's going to be a governor. I think it's going to be someone who is not part of the Biden administration. You don't think it's some new person who's going to emerge out of nowhere?
And that's sort of, I think a lot of people in the Democratic Party, that's their hope, frankly, that there's a new name.
It better.
Well, I think that we're going to see some surprises in that field, but there are about half a dozen governors who, right now, in my mind, are going to be the front runners.
Okay. Andrew, it's great to see you. Good luck with Noble, and we look forward to following the progress of all of it, and the city, of course.
Thanks for having me, guys.
You bet.
Thank you.
Okay, folks, that does it for us. Make sure you join us tomorrow. Squawk on the Street begins right now.
Good
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Futures steady a day after that breather from Megacap Tech and remarks from both the president at the UN and from Fed Chair Powell. 10-year remains locked in around 413. We'll get new homes today. Our roadmap begins with the AI trade rebounding from yesterday's losses as the Fed Chair said stocks seem, quote, fairly highly valued.
Plus, two big interviews coming up this hour. An exclusive with Micron CEO Sanjay Mehrotra. That on the back of the company's latest earnings and, of course, guidance. And ARM Holdings CEO Renee Haas will join us as well. We'll talk about that company's latest partnership with OpenAI and NVIDIA in Project Stargate. The numbers are all just staggering.
Let's begin, though, with the markets after the AI trade did cool off a bit yesterday. The Fed Chair weighed in on this record run for stocks. Take a listen.
We do look at overall financial conditions, and we ask ourselves whether our policies are affecting financial conditions in a way that is what we're trying to achieve. But you're right. It by many measures, for example, equity prices are fairly highly valued.
So people had some fun with that one, Jim, taking us back to things Yellen once said about small cap biotech or even Greenspan in '96.
Well, I think that Powell's a little bit more attuned. I have a list of 55 companies that are up 50% during the month of September, of which only 6 are profitable. That's put together by Ben Stoto. Happy birthday to Ben. And when I look at it, it's staggering. This too is staggering. I mean, these are companies that if I were Powell, I would have said, look, there's a cohort. Now, I know that Janet Yellen mistakenly identified biotech. Biotech was actually doing well. She was very ill-advised. But these companies, and David, I could show you a lot of them, but they're all the ones you know, the IONQs, the Okla, the Dokla, the Rigettis, the D-Waves. These are 50%. I mean, how could you fairly value? How about perhaps overvalue, given the fact that only 6 make money?
Is it reminiscent at all? I'm starting to come back more often to the period of the mid to late 90s. And obviously it's interesting hearing from a Fed chair because we remember 96 and irrational exuberance from Greenspan, of course, which was way early, way early. But more so even than that, Jim, it's the numbers that we're trying to deal with on the spend for AI.
Absolutely.
And whether and how much of that is going to produce significant revenues over time that is going to meet or exceed the capital invested, and whether it would all be worth it. The question's not even really, it's asked, but nobody's even pondering it at this point in the sense of, we're doing it, we build it, they will come, I guess.
We have 2 of the best people to ask because their multiples aren't, well, Renee Haas's multiples high from ARM, but Micron's not that high. See, the problem is NVIDIA's 27 times next year's earnings, the way I get it.
Right.
So you always get caught up with the idea that, wait a second, before you just say these are ridiculous levels, I mean, take a look at NVIDIA's not making them, it's
no, and also the money being spent is by the biggest companies, many of them. Right. I mean, and the most well-capitalized companies we've ever seen.
Are you talking about the circular deals?
Well, yeah, I'm talking about a lot of those things, and they are the end customer oftentimes. That said, Oracle's accretion of value on the $300 billion, $60 billion a year that OpenAI is apparently going to pay them for data centers, essentially, and how the market immediately valued that at what? It's because a 20% margin, maybe, so 25 times up, boom. $100 billion from NVIDIA. Not exactly certain as to how that's structured still. A lot of it may end up being lease payments is a possibility, at least reported by others, and I've heard that as well. It's not just like they're writing them a check, an equity check, and getting shares.
Like CoreWeave was. That was CoreWeave.
Oracle borrowing $15 billion in the bond market. My reporting on XAI, which is absolutely 100% true. $10 billion at a $200 billion value.
But how about Alibaba? You want to go Alibaba?
Not even close, by the way, to enough money. I mean, the money, you can't even conceive of how much is needed.
Well, you're using the $3 trillion or the $4 trillion by 2030. What are you using?
I don't know. I'll go low. $3 trillion, right? Sam Altman's saying by 2030. Now they will have $100 billion in revenues. He says at OpenAI.
But the demand.
They're going to lose $44 billion between now and then. It's not that many years away.
No, but Jensen, if he were here,
and that's not even counting all the money we just talked about.
But he's saying, look, you have to spend it to meet demand. Sam Altman was saying, look, we have so much demand, we don't know what to do. Meta has a huge amount of demand. Alphabet has a huge amount of demand. This morning we found out that Amazon, in a big upgrade, Amazon Web Services probably not growing 18, but growing 22%. I mean, we don't even know how the convoluted nature of OpenAI and Microsoft Azure. Maybe you figure that out. I'm not there. But then, David, Tesla, okay?
Yeah.
ADAS. And you're going to hear that from, we'll hear that from Sanjay. Just when you get this automated driving.
What the amount of compute it's going to use?
Compute it needs. So, on the one hand, Carl, it all seems ridiculous. Trillion here, trillions. On the other hand, the demand is so big. Now, I was with a bunch of people in the last, I'd say, 3-4 days. All of whom think that their job's going to go away. These are all high-level people.
That is the really interesting wrinkle, is that how much end market demand can there be when that market itself is going to be displaced by this technology?
Well, that's
the page 1 of the Cincinnati Enquirer today is about a 77% surge in utility costs. Ohio is the number 5 state for data centers.
It's a big deal, and I know that Pennsylvania had a conference. Cincinnati, they got other problems. Cincinnati without Borough. I mean, they're pathetic. I can't watch them. But I do think that Ohio and Pennsylvania, man, if I lived in those states, I'd be worried about my electric bill, and they're going to have to deal with that. I would not. Texas, by the way, what a place to build.
Well, and they're building, my gosh, there's so much, I mean, it's enormous, the Stargate project. Again, there we're talking about hundreds and hundreds of billions. You've got to come up with new creative ways to finance this stuff. It's going to just go on and on. Again, there's sort of a sense. We had reporting from there yesterday. They invited a lot of people down. There were all the partners. We'll talk to Renee House in a little bit.
They have it. They can borrow, David. They could all borrow.
By the way, everybody's got to come in here. It's I mean, private credit, I've talked about that. By the way, I've also often talked about the fact that the CapEx numbers for the hyperscalers are understated because at the end of the day, they're borrowing so much that the private credit ends up owning the data center. They then simply paying a rent for it, and they're great credits, so it's even understated there. Jim, is it all going to make sense 10 years from now?
Well, you saw Michael Intrater. I mean, Intrater would tell you that the value of these things is not as finite as people think. Now, Michael Sembles has a piece coming out shortly with JP Morgan, which questions the value of these.
I'm looking forward to reading that. And then you did mention the circular nature of things. It is somewhat reminiscent of, again, the late 90s, not the dot-com side, on the telecom side as well. Remember when Cisco and Juniper, remember good old vendor financing?
Well, Rosenberg today, David Rosenberg brings up Nortel, and when companies were literally tying their business to suppliers. Now, others will say there's a difference between fiber's infinite capacity and data centers, which is not the case.
No, I mean, look, and a lot of those companies had customers that were not able to pay, as you know more than anyone.
That's true.
Because one of the principal buyers was the fellow who was a gym teacher. What was he?
Bernie Evers at WorldCom. Yeah, no, that's true. It is, again, it's not, history doesn't repeat itself, but it does, as Mark Twain say, rhymes.
But I'm liking your, 98, 97, because I don't want people to say, I heard Intrater on, the CEO quote me.
Intrater was with us the other day.
Tell me he wasn't compelling.
No, he was interesting, and you could sit and talk to him for an hour.
Interesting. What is he, like in a card game?
It was interesting.
Yeah. It's interesting. Yeah. He's damning with faint praise.
We kept it at a high level. We didn't get into we didn't get to the deal. Are we going to be promoting the book now every day? Is that requisite?
Well, I got a book signing next.
Do you have a copy for us so I can hold it up?
There's many days to do that.
Okay, we got lots
of time. What's the title again? How to make money in any market.
Yeah, well, people want.
So how do you make money in this market, then, boss?
Growth stocks. Oh, come on. You want to make money? Rigetti, partner. How about IONQ? Do you know what? I had an interview with IONQ, Quantum. And someone said to me that is the solution. They're the solution. I said, what's the problem? Well, they burn light. I bumped into a guy in an elevator the other day. He asked me how many data centers are there. I said, I don't know. He's like, you gotta get a data center. Yeah, he questioned whether if I bought a data center that would run afoul of our no stock rule.
Your own data center.
This fellow, I own a data center. So what, you just buy a data center?
Own a bar, own a spirits label,
Bar San
own
Miguel,
real estate,
Fosporo, and Kramer's, what are we going to call it?
I'm in for a gigawatt.
Kramer's done better data center.
Sure, why not?
Sam said we're going to add a gigawatt a week,
I'm in for a gigawatt. Carl will be in for a gigawatt. We'll get it.
I'm in for a gigaball. My dogs love it.
Pretty soon we're talking real power.
When we come back this morning, an AI doubleheader, as Jim said, we'll talk to Micron Sanjay Mehrotra followed by ARM's Renee Haas. As Squawk on the Street continues on this Wednesday.
Micron topping Q4 estimates last night. Sales rising 46% thanks to the AI boom. Sales up, these things are up more than 50% in the last month. So let's not look at this down and say something's wrong. That's important. Joining us now is CNBC exclusive, Micron's chairman and CEO, Sanjay Mehrotra. Sanjay, it's a delight to have you on the show again.
Great to be back on the show, Jim, and the team.
Okay, so first, before we get into the idea that maybe AI is overbuilt, because I know you've heard that a million times, AI was not just the theme. That wasn't the only theme last night. It seems like that you've got strong demand, mobile, PC, of course, data center, and server, also for auto. It was rather remarkable. Every one of these is hitting on all cylinders.
Jim, in March of 2024, we had told you that Micron would be one of the biggest beneficiaries of AI. Memory is central to AI. Micron delivered a stellar year in fiscal year 2025, with our annual revenue growing 50% to $37.4 billion. Of course, that was fueled by growth in AI data centers. Micron has, of course, strong position in other markets, such as mobile phone, where AI-enabled phones are requiring more memory content. And of course, with end of life of Windows 10 and broader adoption, increasing adoption of AI PCs, we are well positioned in that market as well. So yes, it's correct. From data center to edge, particularly smartphones, with Micron's strong positioning of product portfolio and the market trends really evolving nicely across the board with AI as the driver of our growth, we are excited about the opportunities ahead. We have guided to our first fiscal quarter to be a record revenue quarter as well as a record EPS quarter.
So what also I think is astonishing for people who are close followers of Micron, as you and I both know, is that the gross margins are extraordinary for almost every product line. It's almost as if everybody is short product or no one else has what you have. And that was, both of them came up last night.
Yes, we have definitely driven our success here and growing momentum as we are into our fiscal year 26 now through our technology leadership, most comprehensive and best positioned product portfolio in the history of the company, driving the mix of our product sales toward higher value solutions, and of course, leveraging the industry demand supply environment, healthy demand supply environment, and executing well on our cost reductions as well. This has resulted in healthy profitability. As we look ahead, we see healthy demand supply environment in calendar year 26 as well for the industry, with growing momentum in AI data centers and broadening across the end markets, edge end markets such as smartphones as well. Supply, Jim, is tight, and in calendar year 26 we see supply getting tighter, and our product position is good. We will of course continue to optimize our sales focused on return on our investments and disciplined investing in growing our supply as well.
All right, now Sanjay, one of the things that you provided that I was most grateful for is why it's booming, because I think we'll certainly get to it, a belief that maybe AI has gotten ahead of itself, but you talked about 30-40% productivity uplift in selected Gen AI cases, code generation, growth of AI agents. So it seems like that you actually see strong demand. Demand is real, and there are actual things that are going to generate a lot of profit for people who buy your product.
Yes, you see, hundreds of billions of dollars of investment in AI infrastructure, and of course, memory is at the center of that. Over the next several years, there will be trillions of dollars invested in AI, and memory will actually benefit significantly from that as well. Will be a significant portion of those investments over the next several years. Micron, of course, is using AI in our operations day to day. We gave several examples of that. Manufacturing being a large example where we are using AI to accelerate yields, to accelerate quality ramp, bring products to market faster. And as you see, other corporations are beginning to leverage AI, and large hyperscalers are starting to monetize AI as well. So we are excited about the opportunities and really the critical enabler role that memory plays in AI. Without memory, there is no compute.
Hey Sanjay, when it comes to CapEx and incentivizing CapEx, I mean, the three of us are old enough to remember when you were launching projects under the auspices of the CHIPS Act, where the current administration is using some somewhat different tools. And I wonder, can you compare the two eras in terms of what's more effective in drawing that investment?
We very much appreciate President Trump's focus on bringing the semiconductor manufacturing to the U.S. We concluded our agreements on our manufacturing plans and projects here in the U.S. with the Commerce Department in June. Micron plans $200 billion of investment over the next several years in bringing leading-edge memory manufacturing here to the U.S., as well as investments in R&D to secure technology leadership position for U.S., particularly in memory, as the semiconductor memory champion, uniquely positioned as the only U.S. semiconductor memory manufacturer here in the U.S. So we are absolutely focused on bringing those projects to fruition with our first fab coming up in Idaho. And with our investment plans, leading-edge memory production for Micron will become about 40% in about 10 years time frame, with first wafers coming out of leading-edge memory in our Idaho fab, which is under construction now, in second half of our calendar 2027. So we are well positioned here, excited about the opportunities ahead, and very much aligned with President Trump's vision of bringing leading edge manufacturing to the US, and our projects will create tens of thousands of jobs here in the US over the course of next 7 years.
Sanjay, it's David. I'm curious then, speaking of the administration, whether you're aligned with them as well on their view in terms of the H-1B visa, the $100,000 either annually or one time. Still not completely clear. Is that going to have an impact on Micron, and what are your thoughts in terms of the new policy?
So of course, with respect to the new policy, we are monitoring the developments closely here. But we may be somewhat different than many of the other companies that have been discussed recently in the media. We are a large manufacturing company.
Oh, you do?
As I mentioned, our investments will create tens of thousands of jobs here.
I don't believe you.
Over time. And of course, we are very much investing already, well aligned with the administration's focus on workforce development and talent development here in the U.S. We have been engaged with K-12 programs, engaged with colleges for apprenticeship programs, educator training. A trade skill development, and of course engaging with four-year colleges and universities as well for advancing semiconductor and tech curriculum.
I don't believe you.
So very much invested, because as we have...
I don't believe you. Sorry.
A productivity story more broadly. Productivity started to accelerate before the pandemic. I viewed the pandemic as an accelerant to that.
I don't believe you either. At 7 a.m., we got the mortgage applications. New home sales today at 10 a.m. Eastern Time, of course. And at 10:30, EIA Petroleum Status Report. Whoa! We have the 2-year FRN note auction at 11:30, and then at 1 we have the 5-year note auction. Well, what a jam-packed day we have today. Good morning, retail traders. This is the Sneaky Snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. Oh, buddy. Hey, he's here. I'm here. Oh, we missed open dip here yesterday. I had that on watch. Open the door. Let me in, please. No, MU. Disney, I want to drop so bad. I really do. I can't stand Bob Iger. I think his butthole stinks. But who am I? Hike. How much time do I got here? I got 3 minutes. Well, shoot. That will not give me enough time to get my coffee going. So that could be an issue. But I will get the water going. That will give me enough time to put the water on. Oh! Will it give me enough time to take off my shoes? Yes. Oak. AMD. And we gotta look at Apple. And Meta. How come I got two of those up? There's Meta. Well, shoot. Two bad trades, and they happened on yesterday. So I can't have any more the rest of the week. Averaging two bad trades out of an average of 50 to 60 so far. Which is a real good average, don't take me wrong, but I don't know nobody's 100%. Oh gosh. How dare you? Got a big bounce on AMD right at open. Apple. Disney I want to drop. I will not be happy until it gets under $100. Oklo. We'll see it pull back. SPY. I would rather trade the SPY. Okay, today's the 24th of September, the month that we all want to remember. And I'm looking at the 664 calls. Do. Well, late last night we were on bed. Old Mother Hubbard put a lantern in the shed, and when the cow kicked it over, she winked her eye and said, "It's going to be a hot time in the old town tonight." And they just jumped a good 12 cents right there. The 664s. Today's lotto at 113. Strike is 664. That's the trade we're looking at. And it's one notch in the money. Okay, getting about ready here. What do you think, Jim? Think you should give it a shot? 113. Are we going to hold this support? No, it drops a little more. We got a double bottom right here. Okay, get ready. At 112. Definitely can go lower. $102. Watch Apple. Apple has a triple bottom, quad bottom. Tempted to give this a shot. $106. The 664s. Nancy. Come here and rub my back, baby. I smell coffee. Okay, we're about to support. There it is. 3 black crows. 94 cents with a tight stop. It's a little bit risky business. I'm typing in risky, RISKY.
Let me tell you.
Quit laughing at me.
Wouldn't it?
Chick was laughing at me. I didn't appreciate that. Stop laughing. We need a good breakout here, please. Oh. Coco K Overwater Canaba. Check her out. Nancy, I need a back rub, baby. Well, it's not working out so far. We're kind of consolidated for the past 3 minutes. Good morning, Martin Brex. Good morning, Mike. Right now, we're even on my beach trade. For you people on YouTube, I call the first hour and a half my beach trades. Retirement. I'll get up in the morning, have breakfast at the resort, get my coffee, and turn on the Wi-Fi, and set up my platforms. And when the bell rings, I get my 3 or 4 trades out of the way, or at least one good one. Hopefully 2. Right now, it's not cooperating. I hate to get up out of my chair. I can't get Nancy out of the bathroom. If I did, she'd go in there and make me a vodka tonic, and I don't want that. Bassett says rare earth minerals from China are flowing. Powell's cautious take on stocks yesterday. I'm trying to tell you, they're overbought. If I don't get somewhere here soon, I'm going to cut this out and wait. What I mentioned earlier. Gin and tonic equals vodka and tonic. Is there a vodka and tonic? I'm just taking a guess. I'm not. Okay, we're at 98 cents. I'm up $40. Jim, have you ever thought about selling? No. No. Not yet, no. Gin and tonic's better than vodka and tonic. Okay. Make it a gin and tonic, and Nancy knows. We're in, oh God, what the heck? Let's get ready to say we're up. Jeez. That's not a good sign right there. I might get out of this one right now. I don't want to sit here all day looking at a stupid sell-off. Should have bounced up by now. I have 66327. Right back. I'm gonna get my coffee going. Smelling that stuff. Smells good today. Oklo pulled back to the 63. ACRH is at my support. Yeah, fat catcher buying the dip on Disney. IWM has a double bottom, lower low. We got a fallen wedge on the SPY. We're at the 63 on the SPX. And I got a lower support right around 6656. We just hit my support. Ooh. SPY dropped more. Remember, I talked about a lot of stocks were overbought yesterday. Google at 249.22, they admitted that they did censor conservatives during the Biden regime. I know many of them that got kicked off of YouTube, demonetized their huge accounts they had. They built up for years. That's why I never did go strong with my YouTube, because I didn't want to rely on it. Okay, we created a new orb on Google here. SPY could get 66211. Looks like the gains ain't gaining. I got support at 66211 for SPY. I gotta message my sister and see if she got her. Might have to end up helping her out too. You wouldn't believe how many people I helped. Someone messaged me yesterday, I'm starving, Jim. I had to get him some food. I'm gonna go make my coffee. Slash ES is about almost a little bit above 6,700 is what I got for now. 6702 area for slash ES. That's on the 2-minute. SPX hit one of my bars from yesterday, one of my supports, and three crows. I'll be right back and we'll get my coffee. I want to enjoy it while I'm losing money. NVIDIA 177777. Tesla new high. AMD pulled back. And Amazon had a good pullback yesterday and the day before. Meta, where's Meta? Meta. Meta's close to my support. 754.98. So another buck down. Oak. Oxy was a buy when it was under 40. I thought it was under 40. UNH, wasn't someone trading that? Now I see where that flag come from, where that support on SPX was. It's off that symmetrical flag you had yesterday. Let's see what Tedolini looks like today. Magnificent's not on here for 2 days in a row. Tesla going insane. What was LAC? That airline? LAC, what is LAC? Oh, lithium. Boy, it had a heck of a run yesterday after hours. track record for percent increase. That coffee tastes good today. We broke the 200 on the SPX. Tesla stock is rising. Elon Musk speaks out on a $1 trillion pay package. Can you imagine? 1 trillion. Woo! I turned on CNBC for a moment and they were Sorgensen or whatever his name is. You think Elon deserves $1 trillion? I say yes. I say yes, sir. I'm about ready to walk into the kitchen. I mean, into the air conditioner and turn it down a notch. 75 degrees and I'm hot. Spied retesting here. Took $90 loss on the spy calls. For some reason, I got that support line there. You got a double top on LAC. Turn down the air conditioner. Air conditioner not making that rattle no more. SPY 664s are at 73. $20, 20-cent jump. SPX just run into the 200. Open new high. Open. It has options too. September the 26th. There's a bunch of them at $8. It's up already. I don't like that. Why is it up already? 22 cents. The $8 strike. SPY's back to 55 cents here, so we got a 1-2 thribbits. What's the SPY? I might try to do this again. Yep. $54. I got a 1-2-3 on the SPY. That's why I took it. Oh, I hate it when it does that. They move on me right when I push it. When I was a child, my family would travel Western Kentucky, where my parents were born. It's a backwards old town, it's often remembered. Memories were born. What's the name of that song? Do 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 do. Mulberry County. Montgomery. No. Paradise. That's what it. $6.64 strikes at 54 cents. It's often remembered so many times that my memories were worn.
When I was a child, my family would travel down to western Kentucky where my parents were born. And there's a backwards old town that's often remembered so many times that my memories are worn. And Daddy, won't you take me back to Muhlenberg County, down by the Green River where paradise lay? Well, I'm sorry, my son, but you're too late in asking. Mr.
Peabody's coal train is hauled away.
Well, sometimes we travel right down the Green River to the abandoned old prison down by Avery Hill, where the air smelled like snakes and we'd shoot with our pistols. But empty pop bottles was all we would kill. And Daddy, won't you take me back to Muhlenberg County, down by the Green River where
Paradise lay.
Well, I'm sorry, my son, but you're too late in asking. Mr. Peabody's coal train is hauled away. Then the coal company came with the world's largest shovel, and they tortured the timber and stripped all the land. Well, they dug for their coal till the land was forsaken. Then they wrote it all down as the
Progress man.
And Daddy,
Won't you take me back to Muhlenberg County, down by the Green River where paradise lay?
Well, I'm sorry, my son, but you're too late in asking. Mr. Peabody's coal train is hauled away.
We're at 58 now. Let's do a double top to the V-Wop.
When I die, let my ashes float down the Green River. Let my soul roll on up to the Rochester Dam. I'll be halfway to heaven with paradise waiting, just 5 miles away from wherever I am. And Daddy, won't you take me back to Muhlenberg County, down by the Green River where paradise lay? Well, I'm sorry, my son, but you're too late in asking. Mr. Peabody's coal train is hauled away.
Got my loss back here.
New AI features are landing in Chrome. Have you seen our newest episode of Behind the Br-
Man, you talk fast, baby. Let's break to 663.27. Tesla's coming back to a double top. Nvidia's coming up to the 200. Apple had another new low. We're about ready to break resistance on that one. Cup and label, not a handle. Broke out of a wedge with a 1, 2, 3. On Apple, Meta came back to support. Spies at 62. If we get up here, we got an ascending triangle.
browser?
I'm at 64 cents. I'm even. I'm up 100 on that one. SPX has come up and got an ascend. We're at the orb, at the orb support level, which is now resistance. We break it, we'll go higher. I'm at 65 on my calls on the SPY. 66. So as you get close to the VWAP or a double top, you might want to, depends on what kind of mood you're in. We got 66340. If we break the VWAP, we'll run up and hit the 6380 area. That you get out now here at 69.70. Don't get no ideas out there, ladies. Well, I had a real bad crimp in my neck last Saturday. Painful. I think I'll put on some cannabis oil on my neck. Woo! We hit the VWAP. We did hit the VWAP. Now what are we going to do? Are we going to make a business decision? So that's why I say exit your trade. It's kind of a bullish setup. It's 919 right now, 1019. Okay. Wednesday economic calendar. Events today, we got the mortgage applications. Fed speaks Daily, whatever, DALY. Shareholder meetings, top analysis calls. I'm not seeing anything in there. We're at 68 cents. Can we break the VWAP here, please? Or should I sell it? River. Baba trying for new highs. You got JD, and I got PDD, and I got K-Web along with them suckers. We have an ascending triangle here. So it kind of wants to break out. We got a head and shoulders on the SPX. So I think 666050. Is that what you see? Resistance to break. 666 0.50. Ah! Looks like we got an undecisive market here. Just want a good little breakout, please. I'm not seeing much conviction yet. I think if we break the VWAP, we'll be convicted. There'll be some conviction. Tesla, there's a lot of conviction in that one. Let's see what those PX has to say. The open options are up 44 cents since last time I looked at them. Come on, Titellini. She's not on, man. This is horrible. I think her and I could have some serious dialogue. This one on the right. See that little smirk? She knows it. Stop your blinking. It's very unprofessional. You kept me up last night, James. Google at 249. Well, I got a long target at 465 for Tesla. Long. I haven't looked at Nile in a while. Nile. Impressive. PLTR. Someone said Oracle was pulling back. They really hyped this one up. I think they overhyped it. An MU. No Indian guy on MU. Well, shoot. Let's look at another watch list. Here's the Mag 7. We got Google down. Someone asked me about Microsoft. Tesla's the winner today on the Mag 7. I'm at 62 cents on my calls on the SPY. Should have sold them at 68, 9, but I didn't. I want to see if we can break this resistance. It's a little shy, but I'm going to stick with 66340 to break over the VWAP. No, I'm doing my I'm doing my hand thing. Yep. Tesla new high. 6606, yep. Wait for the refill on SPX calls. Well, if I was to take the trade, I'd almost would want to wait. You got a three-headed snake down here, this support right here, but that would be breaking the 200. We did hit this previous resistance, that head and shoulders, and we came back and retested that shoulder line, and we did it again. We'll know something here in a few minutes, what it wants to do, I think. SPX. This is a TTM squeeze chart, if anybody's curious. And I'm in the SPY, so I want to see if I can break this ascending triangle. And if we do, we'll move up. We're there again, so I make a business decision and go make lunch. Come on, break it. We're there. We're at resistance. 67 cents. Yeah, it's going to be one of them kind of days. Had a bigger draw than expected. Oh God. Trump taps Ben Carson. I don't know if he can be trusted to take on role of nutritional advisor. Okay, watch the SPX here. Let's see what the SPX is saying. Opens drop. The option did. SPX, the 24 Lotto, 6670s. So far the market's telling me not to trade much. So I might go make lunch.
I'm selling the 165, 160 put spread, both which expire next week. I can collect somewhere between $2.25, $2.50 for that.
You think
And
so?
that premium is going to really, really kind of whittle away very quickly if the stock just kind of remains here or even starts to retreat a little bit. The reason I like this is because even if the stock continues moving, if there's a blowout, further move on the upside or so, this is a completely risk
SPX is now at 420.
The value of this trade can never
The 66,
be greater than
70s.
the width of either side of the call spread or put spread, which is $5. So I'm collecting a lot of
Boom, baby.
here, really looking for Alibaba to either just kind of level off here or even retreat back a little bit.
Okay, a good look at Baba today, which is a 10% higher in trade this morning. Just want to get your overall thoughts, Scott, on the market today. A pretty muted session right now as we await some more
No, that's what I just said.
economic data, and perhaps as the markets continue
I
to
use the word
digest
stubborn.
Powell and Co.'s comments. What stands out to you?
Yeah, what stands out is exactly what you just said, that the market is very muted, that we're seeing a VIX right around 16 or so, which, you know, historically that's not really cheap, it's not expensive at all, but I'm surprised that
Your
we're
opinion.
not seeing elevated volatility or a little bit higher volatility, just giving all the macro headwinds that are out there, the news source, the geopolitical.
We do have an ascending triangle on the SPX.
To see volatility a bit higher.
Kind of
So I
failed
think
a little
this is,
bit.
Again, as we've spoken about in the past, a really good opportunity for those that want to keep long positions in the market or, you know, just stay in the market. Great, but buy some protection that is fairly inexpensive.
Okay, a good look at the market there, and also Baba this morning. Scott, always appreciate it. Thank you so much for joining us today. Scott Bauer, CEO of Boston Trading Academy. Coming up, we will dive into the sectors making the moves this morning in the first hour of trade, and we'll get you a closer look at how President Trump's comments on Ukraine is impacting defense stocks worldwide. Morning Trade Live will be right back.
What did he say about Ukraine? Donald. Jimmy's on watch.
Morning movers, be the first to find out what's shaping early market action. Check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to what moves the market. Download the
I
Schwab
think I'm gonna
Network
go make
app
salad.
and stream anytime, wherever you are.
Not in no hurry.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Welcome back to Morning. Sam Barnes coming to you live from the floor of the New York Stock Exchange. It's time now to take a look at the sectors that are moving markets this morning. And on that note, let's bring in Alex Coffey, who joins me now. We've got the S&P 500 that's flat as a tack right now. But is this another case, Alex, of yesterday? Don't be fooled by the headline, what's on the surface. You need to look under the hood.
Yeah, it often is, Sam. Good morning to you. It's a relatively low volatility day, but we watched how that can turn into something a little bit more as yesterday progressed. But again, it's a bit of a tug of war under the surface. If you were to look at the overall
I agree,
market,
tug of war.
Of course, it's down small.
Okay, get ready.
Change
SPX.
The S&P 500, the Nasdaq 100, but anymore, I begin and end oftentimes in the same place, and that's the Magnificent Seven, where we'll start here. What you'll see is a kind of a mixed market, but it's really being offset by some pretty nice strength in Tesla today. So Tesla shares up almost 3%. That's offsetting weakness in Apple. That's offsetting weakness in Alphabet and Nvidia. So certainly something to monitor as we look coming to the market generals, if you will, and one of the more volatile ones in Tesla really carrying more than its weight today.
Okay, so a bit of push and pull going on in the Mag 7. And just outside of that, we're also seeing Oracle continues to struggle today as well, down at 2.3%. Let's just take a look at the sectors today. What stands out to you there, Alex? Because it does certainly seem like we're looking at a similar-ish picture to yesterday. Talk us through what you're seeing.
Yeah, we really are. Maybe not as dramatic in some places, Sam, but when you do look at the sector breakdown and take a look at the overall market, what you'll see is there's a pretty nice mixture of
Shouldn't look like a Sam to me.
There's certainly some bright areas. There's certainly some areas that are more dull in color. The duller the color, the smaller the move. But when you look at the breakdown components of the S&P 500, it's just over 55% of the names are higher. But really the standout sector today, when you look at the performance sector by sector, it's basically mixed as well. It's 6 up, 5 down, but notably energy is way out in front. The energy sector is up 1.5% as crude oil continues to work its way towards the mid-60s for the WTI. And when you look at that, it's largely due to maybe supply draws that we've seen over the last week and expected to continue this week, particularly in the U.S., but also perhaps escalating geopolitical tensions or the potential for escalating geopolitical tensions, particularly when it comes to the conflict between Russia and Ukraine, with the president speaking, I would say firmly yesterday.
That's a 200 here.
At the UN. So something to watch there. But again, a mixed day, but some interesting sector leadership. And of course, there are weaker sectors as well: real estate, materials, and I think most importantly, communication services.
Yeah, talk to us about some of that weakness right now. I mean, what really stands out? You mentioned communication services as well. I mean, that has been something that in recent weeks has been working. Why do you think we're seeing some of the pullback in a few of these sectors right now, Alex?
Yeah, you can never, with certainty know, I think, why some of these names might be down, but you look at the names that make up this sector. Obviously, a name like Alphabet's going to carry an outsized, portion of this. Meta as well. Alphabet is down today by about 1%. Netflix is also under pressure. Some of the game makers, Take-Two, EA, under pressure. And then
we got 66.70 at 360, and I don't know about it.
Sector,
close to the 200.
Does contain those names, even though they're offset dramatically by the likes of the Alphabets and the Metas. But AT&T and Verizon are both lower as well. Now, I'm not going to pin this entirely, but I did see something, and I don't know that it's being discussed much, but VoIP PAL has filed an amended suit against Apple, Alphabet, and Samsung, in addition to suits that they already have pending against AT&T, Verizon, and T-Mobile, basically saying that how that process is set up kind of locks them out. Of course, this VoIP PAL company really uses that voice over internet protocol, basically Wi-Fi calling technology, basically saying that, you need to have the SM card, you need to use the carrier, you have to have these technologies, and that these companies are basically working together to kind of lock out some of these other players.
Okay, interesting story to highlight. Thanks for bringing that to us, our attention, Alex. And thanks for getting us across what you're looking at today in the markets. Alex Coffey, let's widen our scope and take a look at global markets here and where things stand in Europe in the final hour of trading right now. We've got the FTSE is higher by 0.3%. The DAX is also doing a similar thing. However, the CAC is on the back foot today. So a little bit of a mixed picture across Europe right now.
I'm in the 66, 70 at 360, 360. I'm in the 66, 70s. Let's have a breakout. Let's have a breakout. It's the head and shoulders. Can we do an ascending triangle breakout? I bought it all, the 200 SMA. It's a breakout. Past the orb. What was support now becomes resistance. Watch that red dotted line. I want it to break this time. Form that ascending triangle off the 200 SMA. I want a breakout, not a fake out. Let's break that orb today. Got in at 360. Now it's at 430. That's $70 a contract. I could sell them here at 430, but if we break the ascending triangle and jump past this orb, which is this jagged red line, this could run much higher. Let's go, baby. We're about to break the wall. I'm at 450 and that is nice. Oh God, every time I get to this point where I sell it, we break out. $460. Got a ascending triangle. Got a ascending triangle, let's break it. I'm at 480, I want to make it. I want to eat at that fancy restaurant. It's about $50 a plate. I'll take a ribeye, medium rare. Just don't cook it pink. my care. There it is. 470. I'm up $110 a contract. Are we going to break it? We're past the sending triangle. We're past the orb. So we could come down and retest the orb and then bounce on up and find new resistance levels up in this channel right up in here. And if that happens, this thing will be worth $600. $6 a contract. Stay in the trade, Jim. There's the drop right there. It has to hold here or I get out. Just like that. I didn't play that guitar for 5 years because my dog died. He was the only audience I had when I traded stocks. There's $5. Anybody take the SPX with us? Let's go, baby. Are you still in them? I'm at 71 on my calls on the SPY. $5.20, please. $5.30. Make a business decision. YouTubers, you take this trade with me? Moringa says, let's go for it. We're at 520. I mean, that's a pretty good bounce. It's $160 contract. It did exactly what I said it would do here. And when we hit that, broke that resistance line on the ascending triangle, come back, boom. Then I'm going to go make my salad. Sold the SPY calls for 70 cents. You got scared? Don't get scared. Don't be like Randy. I got out at 70 cents. Yes, I did. Yes, I did. Yes, I did. Look at the pullback on the suckers now. It tells you how much conviction's in this market. We got 1, 2, 3. I left one on the table, so might add them 2 back here. Once I stop singing, you see the market pulled back. You see why I'm the singing day trader? Brian Washboardjim, the singing day trader. And I had 2 more. We're at the 200 right here. It could drop down to a double bottom, and that'd be a head and shoulders. Or we got 3 black crows. I'm gonna grab them here. So the new order, new world orders. $3.30. I got 2 at 330 and 1 at 360. No, I knew it'd come back down there, and there's your shoulder. Double bottom. No conviction in this market yet. Average is 340. I need to ask the room a question. I had a girl call me a narcissist yesterday. Is she trying to pick up on me? Does anybody know? Is that a pickup line? Maybe that could be the new song, Living Goose. Jim's a narcissist. She's down on her luck, and I'm trying to help her out, and all she could do is call me a narcissist. What the fuck? Bitch. You see what you can do? Woo! The Ringa says dumper. I think it's a good idea. Because I could see it leading into trouble later in life. Good advice. We are now at $3.10. So this is a major support, I think, right here. This double bottom. I should grab 3 more. I got 3 at 340. And if I grab 3 more right here, this will bring it to 320. If I can get them at 3. And then I'm going to go into the kitchen and make a salad with a cheese chip. And a coffee latte. I've never been called a narcissist before. I had to look it up. I'm gonna ask Sue, am I a narcissist? I don't know how to spell it. Dang, 265. This is not what I wanted to see. Doot, 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 doot. That would have been a good spot to add, maybe. 260, 270. Oh, it's 6 minutes past 10 o'clock, 11 o'clock Eastern time. And I'm in a trade and it's lunchtime for Bobo. So I might have to get my assistant to help me out here. Oh, my name's James. I'm his assistant. We've been trading together ever since the Biden regime. Right now we're at a triple bottom support. I am the evil side of what we call the sneaky snake trading strategy. I'm scared of snakes. So, I've got a song here. Get ready to play. I can't be a bear. I'm here. We need to break the triple bottom. I'm a bear, and I don't care. 1, 2, 3, the triple bottom. It's time to light, forming a megaphone. If we can break the 63, I think we'll have a new one. If you can count to 3, you might go up here. It's a megaphone. 1, 2, 3, 4, might be 4. I'm a bear, I don't care. Let's break the resistance. Gotta break the 200. You and me. I'm a bear, I don't care. Let's go somewhere. Climb a tree for some fun. Oh no! Let's hold this number 4. Now we're at a 4. Shit. Ooh. 265. I'm going to end up even today if this thing don't break out. Looks to me like the Bears are trying to get control of this market. More drama. Support's down here at 66.49. We'll wait it out. $220, three of them would be $660. $660 more dollars added to the trade. We'll just wait, see if we get a double bottom here. I'll go up just a little bit. $66.50.20. No, I had three more there. If we hit that. Not, I just leave it alone.
Bell, live at the NYSE, right when it counts.
Believe me, when it comes to investing, you'll love Carl's way.
Yep, I see what you're saying about the mic. Next time I do that, I might just bring the volume down on the microphone. Another red day. Here we are at support. $1.80. I have 9 now. Tesla's also flagging. Getting ready to squeeze. Spy calls. Let me look at them because right now I'm in the SPX. I want to watch it close. SPY's a double bottom with a lower low. So I'd say it'd have to break this right here before it becomes bullish. 662.82. Before it becomes bullish. I would wait until it broke that. You see that, Daniel? The previous resistance right here. Support. Or see if it retested the triple bottom. If it holds 662.40, I'm gonna go make salad and watch this from afar. If I sold them right now, it'd be down $34 a contract. And we're up back. Let's see if Titolini's on here.
Ripped off left and right. I mean, everybody and every pharmaceutical, company out there has the capacity to make something like GLP-1, and they're doing exactly that. And it's incredibly difficult to actually protect patents these days. So I would actually look at Eli Lilly and tell you that's exactly why GLP-1 and all this success initially is leading to sell-side activity over here. Is everybody is getting a piece of exactly this. My trade, though, happens to be a little bit more about the kind of technicals in here. The chart right now is turned into an utter kind of chop fest, but I'm looking forward to kind of chop back into that 700 realm. It looks like it's rolled over recently. A little bit of sell-side activity here, as you're going to see in a moment with Rick. So I'm not going anything wild, just the Ox 17 expiration. I'm going to buy a 242.5 okay, put and sell a 740 put. So 742.50, selling the 740 puts. It's a $2.50 wide put spread. Again, 742.50. Selling the 740 puts. This one's done for 90 cents. It's just a very slightly out of the money put spread, looking for this kind of drop back down, possibly to 700. Although I only need a few dollar movement in Lilly.
All right, so right now Lilly trading about 740, 434, and we've got the chop fest that you mentioned up here. So Rick, walk us through it.
Yeah, so for the most part, I do see the choppiness point here, but mainly lower highs, as well. So choppy, but a little bit more towards the downside here. Now, that is a little more complicated because we have recovered off of these recent earnings lows near 623, so quite volatile recently here. For now, though, our green line, 725, this was a series of low points recently. This was around where price stabilized, but the reason I highlighted it is going all the way back here. That was our low point and our worst close. So even though it's been breached a few times and passed through, we seem to still be gravitating toward this level as a supportive area when we do cross back above it here. So that's why I chose to highlight that line specifically here. 742, 740, it's hard to see given the scale of this chart. Basically, you'd be looking to hold on above the lows we've established today so far, go below those lows we are near we've established today so far.
We're
So
at
looking
215.
for more declines here, but given the scale, it's a little difficult to see here specifically. So we can see that
Ready, Set, Go says it's ready, but not set.
Clustered moving averages suggest either very choppy price action or very sideways price action. In this case, we kind of had both. We had sideways period, then big swings to the upside and the downside here, and now we're kind of back toward this confluence point here near that 750 level. So a noteworthy point to either hold or break above here in this case. If we were to also look at our standard deviation channels and volume profile study, we can see the point of control, the heavy trading area, is right about where we are now. Once we start getting below 740, things start to really thin out. And that's also, we can see our blue line, our linear regression line, 733, line of best fit. That's our idea of fair value. So by this measure, relative to its own history, pretty close to where you might expect shares to be, perhaps even a little above where you might expect it.
All right, yeah, right now trading just below that 745 mark for Eli Lilly. So Don, let's get to your last final trade here. Goldman Sachs, bullish or bearish?
I'm bearish. I'm 3 bears today. 3 bears across the board. I am just, by the way, when it comes to Goldman Sachs, I'm seething bearish on this one. So Goldman Sachs is up right now 40% on a year-to-date basis. 10% in the last 12 trading sessions. Predicated on exactly what? Lowering interest rate, okay? A slowing economic kind of backdrop over here. So quite frankly, the only technicals I'm looking at is completely vertical chart. This thing is absolutely parabolic in the last couple of trading sessions. Probably well overdue for some type of a pullback here. Rick will look at like RSI in just a moment. Nevertheless, okay, I'm building a bearish trade, but not in the here and now. I'm going to go all the way out to the November 21st. Let some of the fundamentals, if you will, kind of grip hold of this marketplace. But for the life of me, I looked into some of the reports of Goldman Sachs, and you just really can't get to that 40% year to date. Is their business really 40% better off, than it had been, if you will, a year ago, or even over the last couple of years? Nevertheless, no 21st expiration. I'm going to buy the 765 puts, buy the 765 puts, sell the 755 puts, $10 wide put spread done for a $2.70 debit. Again, I'm all the way out over 50 days to expiration, taking a big swing at Goldman Sachs for the downside.
All right, Rick, so take us through the charts here, and also, what's the RSI indicating here for Goldman Sachs?
First of all, thank you for the children's book idea, Goldman Sachs and the 3 Bears. That would be, wonderful children's literature there. But anyway, so
right now I'm even.
That's the old highs that we saw here. That's
We're
about
at the
where
200.
would be looking to see the price action go, breaking through this trend line and shifting downward here. So today we have some candle activity that does not look too promising. You can see yesterday we had this spike up to 825.
If we break this wall, we'll go higher.
Yearly highs here, but price action actually closed a little lower than it opened here. Now, this is not exactly a bearish engulfing candle. The previous day would be green, but similar type of activity where we have fallen off sharply from the open, and our real body, our range of the open to the close so far, the last rather, is swallowing up the previous day here. So that's not very promising bullish activity here. However, we still are holding on to that trend line here. If we do start to move lower, we can see that our 9-day EMA in blue here near 795 would be the first area to look for a potential foothold here. Then 776 or so would be our 21-day EMA. RSI, we can see broke through our downward sloping trend line here, but now it's starting to level off. It remains overbought, which is a sign of strength here, but the bearish signal would come with that crossover back below 70. So if we were to think about our other studies here, volume profile, well, once again, our volume node in this case, the major one is all the way down here, not really too terribly close, coinciding with this range we saw before near 720, 700 or so, that general area here. But right now, we're at our +1 standard deviation channel. Potential resistance at 807. Seems like we're stalling out right around this point here.
All right, Rick, right now Goldman trading at 803.66, shares down about 1/3% so far today. But I want to say thank you to Rick Ducat for walking us through all of those charts, and Don Kaufman for his 3 bear trades today. Thank you both for being here. Coming up next, we're going to spotlight Micron Technology after the latest earnings report. They beat the street's expectations. That's next when Trading 360 returns.
Sometimes, you know, you could have done better. The same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com.
We gotta be extra careful in this
Slim
market today.
And mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network. Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are. Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. It's time to spotlight Micron after the memory company posted strong earnings and guidance above expectations. Joining us now is Ian Tien, the CEO and co-founder of Mattermost. Now, Ian, thank you for being with us today. Could we just start with some of your takeaways from the earnings report?
Yeah, I think the big thing is Micron's earnings are really showing that AI growth is cascading beyond GPUs. So all across the stack, you see more of these sort of unseen variables, unseen needs, that unseen suppliers that are really being brought in. And high bandwidth memory is so important when you think about, hey, I'm going to be building these AI data centers. Well, how do I get the information to all those different millions of GPUs now? High bandwidth memory is absolutely essential to that. And this signals a lot of broadening in the AI sector from that magnificent 7 to all these different parts of the ecosystem that are really showing growth and margin expansion and a lot of excitement.
Yeah, I mean, the high bandwidth memory you're talking about is just crucial to this data center build out that we continue to talk about. You know, I guess that should lead us into this spending, this CapEx spend that we're seeing more of. You know, how is that story sort of shaping the broader AI race, this race into how much can we spend and how much can we put into this data center boom as Micron fits in it?
Yeah, absolutely. So these AI is way beyond software. We talked about like Llama and OpenAI and ChatGPT and all these sort of software models. Then we talk about the GPUs like NVIDIA and the infrastructure like Oracle building up the cloud data centers. Memory is another piece of that is another component of that infrastructure that really needs CapEx investment. And you see that on both sides. You see in the CapEx investment of the AI data centers, you need to build out dramatically. You see Stargate, you see the Oracle deal with OpenAI, and then you see Micron itself doing heavy CapEx investment to secure manufacturing and supply chain capability. And there's a very small number of other providers, in this space, Samsung and others, that can provide this, very crucial resource. And what you see is the innovation of delivering high bandwidth memory coupled with the demand that allows for not only strong margins,
okay, get ready for double bottom
next year.
Again.
And so you mentioned Samsung, which, arguably has been a bit of a laggard here. Has their slight lag sort of opened the door for Micron to take over in terms of market share?
Oh God, Marty, shut
very
up.
well positioned in the being sort of aligned with the need, as well as having significant U.S. manufacturing capability, which is kind of a number of investment areas. How do you have resilient supply chain with all these data center build-outs, a lot of them happening in the U.S. So when you think about Micron as a little bit more of a pure play and Samsung a little bit more diversified, you have the more direct exposure with Micron in the AI build-out, in AI build-outs.
And another part of this conversation, this AI build-out conversation, no matter which area of it we're looking at, is the demand component. So as it relates to Micron and with memory demand, do you have any concerns there?
I think the traditional concerns around memory is volatility and margin
Got
profile.
66, 50, 20 has to hold.
And the question is, how long will the demand continue to be strong, and the innovation also to be strong, so that you can create sort of next generation offerings to the market with your supply chain, with your manufacturing capacity that will keep margins high and strong. And it's going to be, how to get more efficient, how do you align to the next generation of GPUs and data center architectures that will be the key factors, and can you maintain those margins and maintain those growth. The other piece is, what about new market entrants?
She turned this into CNBC.
On the memory side and sort of like-for-like competitors, but also in-memory computing, different architectures that would, again, transform how hardware actually functions. And at the scale of millions and millions of GPUs, you have to look at both of these possibilities.
And so with Micron's margins, we did see their margins rise. Does this indicate to you that memory for AI is still relatively limited?
Absolutely. So rising margins is about scarcity. It's about, there's so much demand for these data centers, so much demand for AI, that the margins are floating up. And you'll see this in any manufacturing. When the resource becomes scarce, there's more pricing power for the small number of suppliers that actually have inventory. And it's always going to be that balance of how much inventory can they produce to meet demand, and that competition between a small number of players being sort of true competition when you've got sort of like for likes, when you have a very strong value proposition at the top end. So that is, I think, the foundation.
You got to be very careful today.
Power of the suppliers right now.
So are we going to see some of that, scarcity and the pricing power have ripple effects through this broader data center build out?
Yeah, absolutely. So when you think about what you're really looking for in the data center build-out is efficiency. So yes, you can pay more for memory, but if that lets you train your models materially faster, that's going to have a very material impact on the economics of the data center. So it's not just pricing power in terms of it holding hostage these data centers, but it's actually giving them something they didn't have before. So one of the examples is, Oracle that did this $300 million deal with OpenAI. But it's really because Oracle has an advantage. It's built, it's specialized in databases. It's got a cloud that's really specialized for data, so that provides economic advantages for relatively the same cost. So when you think about the bottleneck to training these models, it's very much you have to think about, well, how fast can I now move data across these GPUs? If I've got well, where's the bottleneck move? If I used to be GPUs, I don't have enough GPUs. I'm going to buy $100 billion of GPUs. Great. Now, how do I move the data across the GPUs so that I can make the workloads happen faster? So yes, there's going to be rising margins and potentially rising prices if this is the right technical architecture to provide greater yield of training, greater faster advancements, faster cycles. So everybody wins. You might pay more, but you're only paying more if you're getting more productivity and efficiency out the other end of your CapEx investment.
All right, Ian, my last question is twofold for you. You know, we are seeing
Twofold.
pressure today for Micron, down 2% right now.
Yeah, quit pumping it.
Great quarter and good guidance indicating they have demand, they have customers, they have a pipeline.
And the price is up too much.
The question is, you know, why are we seeing this pressure today? Why are we seeing
Because it's up too
moving to the
much.
downside? But then my second question is longer term, what's your outlook overall for Micron?
I think overall for Micron and the AI industry, I think it's very strong. It's very positive. I think that in the demand for more AI capacity, it is unparalleled and absolutely a structural change. In terms of any stock being up or down today, that's more for the sort of volatility experts. I think about fundamentals and where the puck is going.
All right, we appreciate you being with us to break down Micron's earnings. That's Ian Tien, the CEO and co-founder of Mattermost. And coming up next, we have the disruptors. We'll take a look at ServiceNow following an upgrade as one analyst is turning bullish on the software company's AI story. Trading 360, we'll be right back.
Well, that was a good idea. Jimmy.
Jimmy just burned his toast. I got to end this thing at 1:15.
Stay connected to the markets with Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques, like
My house got a little smoky.
price patterns,
Damn.
moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Trading 360. I'm Marley Caden here at our Chicago headquarters. Let's head to the New York Stock Exchange for a check-in on the markets, and welcome in Nicole Petalides, our lead anchor here on Schwab Network. Nicole, we started the show with a mixed picture. We had a bit of a mixed.
I don't know why they threw this chick in here to be the boss.
Checking the board, you know, we're entirely in the red.
Yeah, look, markets have been selling off a bit. We saw that yesterday. It fizzled after we hit a record high on the S&P 500 yesterday. On Monday, the Dow, the Nasdaq, and the S&P all hit intraday, all had record highs, but there's certainly this back and forth action, and with Powell's comments yesterday talking about stocks being fairly highly valued, that too may have just put a bit of a damper on things. Most folks still expect two.
Why would he say
and
that?
maybe even one in January. Barry Knapp said he was hoping for that. He thought that would be the right move overall for what the Fed will do. But we did see that the S&P hit a high of 66 $36.99. Gold also has been hovering around highs. Yesterday hit a hold of a high of $38.24 troy ounce. So those are two of the big picture stories, but it's a lot of fun taking a look at some of the key names on Wall Street. Lithium stocks, for example, Lithium Americas was up 80%. Amazon got a nice upgrade. We're watching Micron after its quarterly report, where we've gotten in home sales and we're waiting on PCE, the inflation print on Friday, and durable goods and GDP tomorrow. So there's a lot to take in. So there's always a market moving event at any moment during the day. Microsoft is adding Anthropic AI model to its Copilot assistant. We've had a lot of partnerships in tech lately, so we'll continue to follow all of that as well.
Yeah, AI continues to be our big story here, and it certainly is a big part of this next one that we're going to talk about for Adobe.
Why would Powell say that?
Downgrade, shares down about almost 3.5%.
Stocks are overpriced.
On this downgrade, but can you walk us through the note and how AI is a part of the picture here?
Yeah, and that's the question, is how much of a part of the picture is it really? And I think you hit the nail on the head there, Marley, because the earnings came in on the 12th of September and were viewed as solid, but that the long-term growth concerns remain. Bank of America at that time talked about AI beneficiary. Will it be one? Will it be an AI winner? Will it be an AI loser? And so today you had Morgan Stanley cutting it to an equal weight, Keith Weiss with a 450 target, down from 520. Today it's at 349, so they still see some upside potential, but why and what are the concerns here? They talked about decelerating revenues, decelerating digital media annual recurring revenue. Some of the concerns there, it does have a competitive moat, so it's still in a good position. But most of the analysts here are just being a little more cautious at the time because they don't know exactly how they'll monetize generative AI, the functionality there. It's just lagged initial expectations, and the high hopes for Adobe was more on AI when we learned on the earnings. So that was the big picture. I will say, as far as the whale trades that we've seen over the last 24 hours, most of them have been leaning towards the bullish side, 55% to 44% bearish, 18 unusual whale trades. 14 of those were calls. Also, Qualcomm, this is a bright spot, said it's using Adobe's Gen Studio marketing tool. That's something good there. But the big picture is, will it be a winner or a loser? This is how Bank of America really phrased it in AI. Will it be an AI beneficiary? And that is the long-term concern that remains on a name like Adobe. Marley?
Yeah, and you said it, even with the price target decrease, it's still above where it's trading, currently trading at 340.
I didn't know you said that.
The average analyst price target's at 456.18 right now. So thank you, Nicole, for walking us through that one. That's Nicole Catalini's our lead anchor here on Schwab Network. And now it's time for the disruptors. Kevin Green, our senior markets correspondent, is here with today's company, ServiceNow. Different story here from Adobe. They actually got an upgrade from Morgan Stanley. Can you take us through the details, KG?
Yeah, we see ServiceNow getting an upgrade from Morgan Stanley up to an overweight from equal weight here with a new price target of $1,250. That's up from $1,040.
This down
here. They're really kind of optimistic when it comes to the artificial intelligence theme when it comes to not only just the industry but this company as well. They did kind of mention, because the stock has pulled back a little bit, that even though they are executing really well, some of the headwinds that they face
triple bottom right around another $18
and
down.
Federal spending, which they do get a significant amount of money from federal contracts, could be a little bit of a cause for concern. But they think that for the most part has been priced in. This reward for this name could be a little bit higher here, and they're actually looking at growth when it comes to subscription growth of around 20%, as well as expecting 20% plus free cash flow growth through fiscal year 2027. So they are obviously optimistic on this name, and that's why they have that new rating as well as that price target. And once again, it has pulled back a little bit of headwinds. They were actually probably one of the first companies out there outside of Microsoft that was able to reflect and show that artificial intelligence can actually increase the onboarding of new customers.
Support.
And so some of that luster has kind of worn off a bit. They do have some competition.
I'd like to see it drop more.
But at the end of the day, they have a subscription type of model, which is the majority of their revenue, about 90%, 95% of their revenue. And so if they have more consumption,
that's on the daily.
The thought process is obviously not only just their existing customers will increase their utilization, but also new customers are going to be brought onto the platform here. So very optimistic.
We had triple bottom on the weekly
that we have for the software space, as we just talked about Adobe not getting as much love.
Yeah, I love the adage that the analyst uses in this, saying, bottom line, investors appear to be missing the forest for the trees on ServiceNow. And implying quite a bit of upside, that price target of $12.50. ServiceNow trading at 942.02 today, up about 1.5%. But KG, as far as an example trade and what one might look like for ServiceNow, what are you thinking?
Yeah, so for this company, when you're kind of looking at the stock price, especially for retail investors, the stock's trading at $940. It was trading over $1,000 at one point in time. It can be a little bit expensive, but if you are optimistic on the name and you do believe that the price is going to move to the upside over the next couple of weeks and or months, I'm actually looking at a very unique one here. It's actually selling a put spread, but actually selling this in the money put spread. So looking at selling the 1,000 put, buying a 980 put.
I agree with you.
January monthly
Livid goose. He's probably in shorting the market.
Wide spread. So the max that you can actually receive on this trade is that credit received, so $1,300, with a potential max loss of $700. Now that's if the stock is really actually below that 980 level at the time of expiration here, and you have a break-even point of $987. So you're looking for, once again, a consistent move to the upside. As it gets to around 30 days up to expiration, that's when you're going to start seeing time value kind of roll off here. This is a way to get some upside exposure, but also to try to minimize or have a risk-defined outlay when it comes to the premium received as well as that max loss. So once again, bullish trade here. You need a little bit of time. You need a little bit of a move to the upside. But if you think this note's correct, this is the direction of travel when you look at the strategy.
Kevin, we appreciate you being with us to break down ServiceNow and also for that example trade. That's Kevin Green. And coming up next, we're going to move into our 360 round, bring in our panel to discuss the latest for crypto, following some recent weakness, a sell-off we saw on Monday, and institutional adoption. That's next on Trading 360.
She really gets under my skin. Yeah, I got to be very careful today. Today's lunch. Big knife. Look at the 1 hour on this. We're at the 63 on the 1 hour. We have bounced off this before on a big bad day. I'm in the red so far for today. 280. God, man, 245. It didn't hold support. Damn it. I'd like to see a turnaround, but I don't know. This market's bearish. I can't believe Powell said that. He shouldn't be talking about stocks. It's not his job. Now it's time for my coffee. Okay. Maybe she's off the air now.
The U.S. when they're actually investing to grow instead of investing is a bad thing in your company. I think that's one of the key takeaways that I got from this news. If they continue to build out what they have, the population that they have, the scale that they have overseas, and it's not just overseas. This is also going to help them globally also. So I think that's one of the key things and the key takeaway that I had, Diane, from this news was, the partnerships with NVIDIA is good. Maybe they can get a little bit of pushback that the government's giving Alibaba for using NVIDIA chips. Well, these companies, NVIDIA included, Baidu and some of the others, have stated they need NVIDIA chips because they're the most advanced ones. So maybe this will break down some of those barriers also.
Yeah, maybe this will be helpful to NVIDIA, especially as it's, kind of seeming to be a pawn on the chessboard between the U.S. and China. Kev, what's your take?
I think that the news cycle now is NVIDIA developing a bit of a cool kids table, right? I mean, now your stock jumps if what? If you're developing some type of a partnership with NVIDIA. Diane, it's all my high school worries all coming back again. There's developing a cool kids table, and you have to hang out with NVIDIA to be one of the cool kids. And so, this is a big investment. It's not surprising. Everyone wants to be in business or partnered with NVIDIA, and we should look for a steady stream of announcements like this as NVIDIA, like we've said in this program many times, continues to widen its path into partnerships. It's great for NVIDIA. It's great headlines for Alibaba. And like I said, this is now the headlines that we need. What's going to be the next name to show up with a partnership with NVIDIA?
Yeah, and they say you have to spin big to make it big. And Kevin, I'm sure you were at the cool kids table. You give me those vibes, so I'm sure you were. All right, Tom, let's talk Micron. I mean, they beat expectations. The stock flagging, it comes so after a big run-up so far this year. What's your take?
Yeah, this, the price action that you're seeing in the stock, it's not surprising because we've seen that from, a lot of companies in the tech space post earnings because the run-up going into those results was so great. Now, they gave us that mid-quarter update in August. They beat those raised expectations on EPS revenue. They guided for a little bit higher. Those high bandwidth memory chips are now up to about 40% of their total revenue. That's where the high margin part of their business is. Pricing on DRAM and NAND remains strong at this point. I think this reaction in the stock, now down 4% on the day, is just a reaction to the run-up that we saw in there. Maybe it's a bunch of people taking profits at this point because it was severely overbought on a technical level. And, as the growth rates there, will that continue? This is a really cyclical part of the chip business, the memory side of it. I think one of the keys is the legacy part of their business in DRAM and NAND is getting pushed to the side as far as the generator of revenue and margins moving forward. And that's probably a positive for Micron. The CEO did come out with some positive comments. They build these chips here in the U.S. for the most part. That's going to help them as far as tariffs and restrictions. But at the same time, they said before that they were going to invest in Micron for any regulatory actions that they might have
On the 1 hour.
against them. They do sell some chips over there. It's not a big part of their business. They compete with Samsung and SK Hynix also over there. They're taking some market share also. But I think if you take a look at the price action, I think this is just a sell the news type of event. And maybe it's a buying opportunity for people that have been waiting to get in if it continues to fall here.
That's a great point. And you've got analyst after analyst boosting their price target on Micron. Among them, Wedbush has boosted it to 220 from 200. And it's so funny. I got a note early this morning from Dan Ives. This is just across the AI space and saying the AI trade is just hitting its next stage of growth, calling it a 1996 moment, not 1999, because there's been worries about that. Kev, what's your take on Micron?
I think, you know, this is, remember, yesterday's show, we covered Micron, and this is exactly what we talked about. That good earnings, as good as they are, might not be enough to take the stock higher. And that's what you're seeing. It was in our presentation yesterday, and it goes, this is part of the fascinating part of this business. When the bar is high like this, how good do they have to be to hold the stock right there? And apparently it wasn't high enough. Now, you're right. Bank of America, Citigroup, JP Morgan, all coming out with price target raises. How long will the sell-off last? There's the question. There's the great problem solving that you have to deal with when you're trading these names, Diane. So, yeah, you're right. Tom's right. It's not surprising that they had great news. They had great follow-up. Their CEO gave a great interview this morning, and the stock is still down.
Okay, let's talk about a huge mover today. Lithium America's big rally, up more than 90% right now after multiple reports that the Trump administration is seeking an equity stake in the mining company. It seems like just overall the playbook is shifting as it relates to the government and these stakes. Tom, what's your take?
Well, I think, you know, this is not the only company. It's Intel, it's MP at this point that the government's looking to maybe invest in. You know, those loans that were announced for a lot of these companies to help them build out, you know, their businesses. Hey, let's have an equity stake in it. And I think that's what the administration is talking about at this point. It's like, hey, we're going to loan you all this money or give you all this money. Hey, why don't we get an equity stake in that? You know, you have to look at the lithium mine that they have in Nevada, in Utah, in that area, that you know, is going to at one point produce 25% of the lithium globally. So why not have a stake in that? I think this is a positive for the stock. I mean, it's a $5.90 stock at this point. So probably some good news for the company at this point. 10%. Equity stake in the company, not a bad thing. And then you got to look at GM. GM was upgraded today.
GM
38% of that mine that Thacker Ridge. So you have to take that into consideration also. That hey, an equity stake's not a bad thing, and that's why I think you're seeing the stock pop here. And it's a low-priced name also.
Okay, yeah, I mean...
Well, we didn't hold support.
Get in this one, easier to get in this one. Kev, what's your take on this one?
National security, Diane. That's what this is.
Get Marley off the air.
Is, you know, the current
She's ruining this market.
Really focusing on securing all the things that could get held back from other countries in times of national crisis. And so
I don't think Marley knows how to trade stocks. She's smart when it comes to the companies, but yesterday I said we were way overpriced in a lot of stocks. I only had 2 on my list that were worth buying, and I can't remember what they were. Well, 66.26. 26 didn't hold. That was a gap. Tesla's pulled back. Baba. Just save your money. Don't be trading it. Oh God, NVIDIA. AMD. I want it so bad. Ugh. I thought GRWG was a pot stock. Speaking of pot stocks, let me see. 05, we got Hive. CYC, ABAT. ABAT's a good one to watch. Dadgum, look at ABAT. How, see, it's had too big of a run. CYCN's another one that I used to watch. It had news. The company announced it entered into a license agreement with MIT as part of a strategic relaunch. Announces license agreement with MIT to relaunch advancing phase 2 ready treatment for resistant depression. What's resistant depression? Let's find out what that is. Resistant, SISTDEPRESSION. A treatment. TRD, treatment resistance depression, is a condition where depression does not respond adequately to standard antidepressant treatments. So it's resistance to treatments. I got the answer to that. Get laid. Guarantee it. I got that right now. Resistance depression. The only thing going to cure it is if I get laid. Yeah, I said it. Did you hear that, Michelle? She's not on here. Ooh. Yippee-yi, B-I-O. Vegas told me last time we're moving up. Vegas told me last time I go out and have Italian meal, I need to have a lotto, a coffee with it. Not a lotto, but did I say lotto? I think I did. A mocha or something. So I'm having that with after my salad today. The SPXs. Let's go. 240. Yeah. This is Washboardjim waiting. Hello, how are you doing today? Woo!
What's going on, Jimmy? You're on your talk show?
I'm eating, am I what?
Are you talking on your YouTube right now?
Yep, but I can walk away from it. You do? Oh no. They can't hear you. I'm drinking I just had a salad and I'm drinking a coffee after it. Like you said, after a meal. Coffee with creamer. Yeah. Yep. 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 SPX is trying to start to, yeah. SPX is trying to rebound here. Mm-hmm. Did you have your meal already? Yeah. Yep. Oh, okay. Yep. Yep. I didn't see the pictures. Okay. Yep. Yep. What? Yep. Yep, she can do that. Yep. And don't forget, 4 more days.
4 more days, so I'm getting the hell out of here.
Yep.
Yeah. I look forward to my week, but you know, I still have to turn on my scanner for the round.
Will you be thinking of me?
What?
Will you be thinking of me?
You were thinking of me, yeah.
I'll be thinking of you.
Like you were thinking of me, I'll be thinking of you.
All right.
Yeah. But my phone works when I'm away, so you can message me or call me.
Okay. I'll do that.
So, yeah, but I'm not leaving till, you know, Saturday. When Sunday morning I'll leave. My flight's at 6 o'clock in the morning, so, you know.
So what does the lay of the land look like now? Because we're here on Schwab Network. Fast.
Excited to hear about meals. I'll be excited to hear about what the meals are going to be like.
Hi, I'm Alex.
I'm Jane. And I'm his mom.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real
Either way, it
time.
won't matter.
Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Yep. It's a siren.
No politics, no spin,
It's
just
come and
the
gone.
market
That's
from
what I'm
open to
talking
close
about.
and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Okay.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Well, I hope you bring underwear. You don't?
Schwab Network delivers real-time
excited.
market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to
Wow.
economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free
Okay.
on schwabnetwork.com.
Welcome back to Fast Market on the Schwab Network. I'm Diane
Now I know a
Kinghall
secret about
alongside Kevin Hinks joining from the SIBO. We've got you covered from exchange
I
to
made sure I had
exchange.
5
Time now
pairs
for our
of
cash
underwear
tag
brand new.
segment. For that, we want to bring in our next guest. That's Landon Swan, co-founder of Likefolio.
Yeah,
Landon, thank you so much for joining us as per usual. You've got to look across CarMax and beyond today. You often track, obviously, consumer data, trends,
that's interesting.
purchasing intent. So what are you seeing right now in terms of sentiment as it relates to CarMax?
Wow.
Yeah, so I mean, CarMax is you can't talk about them without talking about Carvana, and they used to be the innovative one. CarMax used to be sort of the innovative one. They flipped the whole used car selling and buying experience on their head. But now Carvana's kind of come in and taken that spot. And so what we've seen is, yes, they had a great quarter last quarter. I mean, their EPS was up, I think, 42% year over year. Same store sales up 8%. They're making $2,400 gross margin per unit. Doing really well as far as, quarter over quarter, year over year. But the stock is selling off. I think it's down about 25% on a 1 year basis. And meanwhile, CarMax has doubled over the last year. And you can see here, if you look at just web visits, which is a very important metric for both these companies, but it's down significantly. It's down about 13% on a year-over-year basis, with the stock down 25%. So maybe the stock has come down a little too far, perhaps, but we're really seeing that it's losing market share to Carvana. Really, the consumer experience is just better with Carvana. That's what we're getting. We're getting better happiness numbers. They're making about double on their gross margin per unit. A lot of people question those numbers, but that's what they're reporting. That's what they're showing. And you can see the difference in just consumer enthusiasm around these two names. I mean, CarMax down 13%, Carvana up about 15%, and the stock reflects that, as I said. And what's really scary is if you look at what we like to call consumer mind share, like what percentage of when people think about or talk about these companies, what percentage is each one? CarMax 2 years ago was 68%, last year was 65%, this year it's 57%. So Carvana is continually eating away. It's not going to be long before CarMax is under 50% compared to Carvana. And that's a big concern. Now, the counter argument is the PE ratio, right? I mean, you've got CarMax at, I think, 16 or so. Carvana is over 90, so it's a huge difference. I mean, there's a ton of growth priced into Carvana.
I'm back.
And not a lot of growth priced into CarMax. I mean, they're the market, I think, is expecting them to continue to lose their lead, and that's what the data is showing. So I guess it's a bit of a value play, but for me, I'd rather bet on the company that's outperforming and growing and doing things better, even if they are a little bit more expensive. So for me, CarMax is fairly priced right here, and we don't see a huge turnaround coming on this quarter.
Landon, they put up fairly good numbers, but the stock, your data, and I read 3 analyst notes on CarMax today, and 2 of them.
Oh, it's an interesting trend line, Livid Goose.
They said, I believe it's up to $16 billion, their loan portfolio, and delinquencies are starting to tick up. So not only do they have a market share and a business problem, but they're starting to get into a little, loan delinquency issue as well that's probably hurting their overall profitability. So but what do you think it is, Landon? In your opinion, what is what is Carvana doing? Remember, we've talked about this many times on this show, that how does Carvana get those margins on sales? Tariffs should be favoring all these used car dealers as new cars are getting tariffed as they come over. What do you think it is that's putting Carvana so far above CarMax?
Because of the markup.
This principle that says you find one thing and you do it really well, and you kind of push everything out. Now, I'm not saying that CarMax's loan operations need to go away, but it's a bit of a distraction, and they have to. It's a value add, and it's a diversification of revenue. But if you're going all in on being the best at finding a used car and selling a used car, sourcing them and flipping them, that's what Carvana has decided to do.
They don't sound very loud today.
It's trying to do that while at the same time finance everybody and deal with these loans and handle the bad payments and all of that. It's a lot. And so I think Carvana has sort of honed in and made efficiency and expertise their hallmark. And so they're able to become much more efficient. They're able to have their costs a lot lower, and of course that means the margins are a lot higher. Now again, I can't explain why they've got to basically double the gross margins. They're obviously far more efficient. CarMax is getting more efficient. I mean, they introduced an AI virtual assistant that cut their service costs by 30%, a sales assistant that increased their sales productivity by 24%. So they're going in the right direction when it comes to efficiency and technology. I think Carvana just beat them there. Now, Will CarMax turn that corner and change things? Obviously, I don't know, but it's interesting that Carvana did it so quickly and jumped out ahead. And CarMax is, like I said, they were the early innovator 15 years ago or so. They come in, you get a quote, you can sell your car right away, you can buy one with no hassle. Far different experience than you going to just a normal dealership. They were the innovators, but now Carvana has taken that spot, and so CarMax is playing catch up. If they can get their technology in line, if they can focus,
if we break the 63,
they can turn things around. But right now, it's a bad metaphor, but they're in the rearview mirror, and Carvana is doing everything right.
Double topping up here.
Focusing on what they do, very simply what they do. One thing.
Another big heavy sell-off today.
Antiquated in that approach. Now, again, it's a value question, right? PE 16, PE 90. That's huge. That's a huge, huge difference. If you think they can turn it around, then yeah, if one's way more attractive, it's what, 4 times?
Huge.
So I think that's the argument for CarMax, but
6550s are now at 240.
The great jockey rather than the so-so.
I love both of your analogies there, like the fast horse analogy and potentially the rear view mirror, because listen, when I was shopping for and debating between a new or used car this year, I looked at Carvana. CarMax ended up coming up as an option, but it was kind of like low on the list for me. It was either going to be, straight to like a normal dealer or Carvana, because I'd also, Tom White, who we talk to regularly, had talked about his experience selling his car on Carvana, and he just seemed so happy with it. So to your point about the buzz, it seems like the buzz is there, and at the same time, I'm glad you brought up AI, because I was going to ask that question. How much is AI a piece of this? And it feels like Carvana has figured out the AI piece of the puzzle better than CarMax, and you wonder if CarMax is trying to do too much. What's your thought on that, Landon?
Yeah, I mean, I think they have to innovate with technology. They have to, and already they've done it, and they've gotten some really good feedback. They've gotten some good results, so they're going to continue down that path. I think that Carvana has focused more from the beginning on making it a very seamless digital process, just get you in and get you out, and make it a really simple. And at that scale, if you can cut costs, that's what's going to, your margins are going to be much, much larger. That's what we're seeing. Now, CarMax is pushing their omni-channel where you can start online, finish in the store, you can do it all digitally, whatever you want to do. So they're kind of, they're moving in that same direction, but they also they're set up to be more of a come in and look around kind of.
Here we go.
I mean, their stores are much larger.
We're at a double top.
As online as Carvana, and so it's different. I don't think that you can turn it around and get it to where Carvana is. You can do things that push technology, that increase efficiency. You can do those things, but I don't think they're ever going to get to the point where Carvana is without massive restructuring in just how they do their business, and I wouldn't recommend that. I think they got to stick in their lane. So long term, I think that Carvana continues to eat at their lead. And continues to, I think they'll flip on the mind share. I think they'll get over 50% within the next year or so. And it's, CarMax is just going to be second place, and they're just going to have to be the best second place they can be. But that's just the way I see it going forward, yeah.
All right, well, CarMax has earnings due tomorrow. Adjusted EPS is expected to come in at $1.05. Revenue is expected to top $7 billion, which would essentially be little change year over year. Thank you, Landon. That is Landon Swan, co-founder of Likefolio, with the latest sentiment data. All right, now for the trading perspective on all things CarMax, let's kick things over to Kevin Hinks and Tom White back in the picture. You had experience with Carvana, but Kevin, let's talk your takeaways first before you guys jump into that example trade.
Tom, Diane, this is an almost identical reverse to what we were talking about with Micron yesterday, and that is the bar is going to be pretty low here. Yeah, you're talking about a 15 and change PE on CarMax versus a 90 and change PE on Carvana. At some point, that has to correct ever so slightly, unless Carvana's putting this company out of business, which I don't think is happening. They're still quite profitable. So, based on that, based on the activity of the stock, based on where it is on the 50-day moving average, I looked at something one thing, no weekly options, so you got to do a monthly trade. So I bought the November 25th 65 call. I sold the monthly October 17th 65 call. I did that for about 90 cents, trading maybe a penny or two more than that now, but this is just one way to buy the cheaper implied volatility. You're buying about a 52, selling about a 66 in aggregate implied vol. So that makes the calendar spread slightly cheaper. So this is just, you're looking for a move, a little recovery back up towards $65, guys.
Yeah, I'll take a look at this November. You're going out 58 days to expiration on this because there are no weekly options, but you're buying a lower implied volatility in that 65 call that you're buying, selling the October monthly options that expire in 23 days, that same 65 call. So 1 month wide call calendar to the upside, giving yourself upside exposure for a low entry point. 90-cent debit is your cost on this trade, so $90 in risk per spread. You can see here the apex of profitability at or near that 65 strike. Now, the option market's pricing in about a $6 move either way, so about 10% move in the stock either way, which would kind of line up with the strikes on this one. The idea here is you're buying a lower implied volatility, selling a higher implied volatility. That lowers the entry point cost. You want it to go at or near 65, but you probably got a range between about 60 and 70 that you're going to still be profitable on this one, Kevin. And this low price exposure to upside for Carvana is what you're looking for, just due to that vol dispersion, right?
Exactly right. You're using the momentum of the implied volatility, a little higher in the event month, a little lower in the second month, to lower the net debit you have to pay for this calendar spread. And then you're looking for a move towards 65. You've got some time. You don't have a large debit to worry about. So this is one you can be very patient with, Tom.
Low bar on this one, as Kevin mentioned. So if you do see any surprises to the upside on that low bar, this takes advantage of it. The thing you don't want to happen, you don't want the stock to go lower. You don't want the stock to go maybe 2 or 3 standard deviations to the upside. You don't want a $15 move rally on this one, Diane. And as you mentioned, my experience with Carvana, I was a little skeptical, but it was amazing. I was done in like 15 minutes. It was great.
Oh, wow, that is nice. I mean, in the olden days, you could not do that, 15 minutes. All right, thanks, Tom.
Are you stuck in a trade, Martin Brex?
And Kevin, of course. Coming up, we've got the breakdown. We're taking a look at KB Homes ahead of earnings due after the close of trading. We'll be right back.
Dude. $175. Triple bottom. Can it hold? We'll find out real shortly. At 66.32. Okay.
Stay connected to the markets in the Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
I'm debating.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall here at the New York Stock Exchange. Before we get to the breakdown, let's take a look at where the major indices stand at the moment. So got a little bit of flagging today. The S&P 500 right now lower by about 1/3%, down lower by about 1/5%. NASDAQ 100 off by 0.5%. Small caps lower by just shy of 0.5%. All right, let's talk home builders. KB Home in focus today with earnings due after the bell. The Street's expecting the home builder to report earnings per share of $1.50 on an adjusted basis. Revenue is expected to top $1.9 billion. The home builders are getting some love today after the latest home sales data came in much better.
That's kind of just holding sideways right now.
Single-family homes jumped 15% year over year to 800,000. All right. Time to bring back in Tom and Kevin back here into our show. Kevin, I want to get your take because obviously you always get all the data first. We had that home sales data that was so much better than expected. Talk to us about your take here.
Yeah, you and I talked about mortgage applications this morning doing a little better. 30-year mortgages on conforming loans. It came from 6.39 to 6.34. Jumbo loans, 6.48 to 6.44%. So all the interest rates are coming down, and you saw a big jump, 800,000 new home sales. That is a big number, and all the data is starting to turn to a bottoming in housing, reflecting the lower interest rates that we've been seeing in the market. Does it show up in KB Homes? We'll find out. Remember, their average selling price, $480,000 to $490,000. So that could be considered that beginner home, first-time buyers. So it's going to be interesting to see how KB Homes does, Diane.
Yeah, and again, you got the home builders higher. D.R. Horton higher today after this news. You've got KB Home also higher, Pulte higher as well. So catching a bid today off the back of this new home sales data. Tom, you've got an example trade in KB Home. What's the approach here?
I think the approach is, are we turning the corner as interest rates come down? Kevin mentioned the slide that we've seen. Remember, the 30-year fixed mortgage rate was above 7% at its highs, and that new home sales number was the best that we've seen since January of 2022. So the incentive of lower rates is going to drive the home builders here in the near term. We're expecting 2 more rate cuts by the end of the year. Does that mean that 10-year yield starts to come in, gets below 4%? I think that level of 6% as far as 30-year fixed mortgage is going to be key here moving forward. So I looked at the strategy in this one. The stock kind of sold off when Lennar reported. Lennar gave a pretty bleak outlook for the sector in general, despite the fact that we've seen a slide in interest rates. But I don't think you're going to see anything maybe sparkle until we get that 30-year fix below 6% at this point. But maybe it'll be there by the end of the year if we get a couple more rate cuts. So the option market pricing in about a $3.50 move either way, about 5.5%. Either way going into this report. Implied volatility elevated. It does not have weekly options either. Not a lot of liquidity in this name. It does pay a dividend yield of about 1.6%. If that continues, decent yield on this one. And after Lennar's earning, I looked at a strategy that's pretty conservative, gives you some upside exposure, but allows you to buy the shares, collect a yield on the dividend. So looked at a covered call strategy. For every 100 shares of stock you buy, you sell 1 call. I looked at selling the October 17th monthly options that expire in 23 days, the 65 strike call. So out of the money to the upside here by a couple bucks. Gives you a little bit of room to the upside. You're going to pay roughly about a 61.20 debit, right? Because you're buying the shares at a discount. You
okay, we're coming down.
$120 in risk on this one if it goes
160
down to 0. Remember that.
That's a 50.
But your break even is also the debit you pay. Kevin, when you look at a trade like this, it's pretty conservative. It gives you upside exposure. But even if the stock kind of stays here, maybe goes a little bit lower, goes a little bit higher, you start looking at ways to offset costs and risk on this by potentially rolling or adjusting that short option over the next 3 weeks, right?
Yeah, here's the great thing about this trade. You're selling this call for about $2, $2.10, somewhere in between there, which means if this rallies and your stock gets called away, right? You're not selling it at 65. You're selling it at 67. So you're selling it significantly higher than it's trading, about 7.5% higher than it's trading right now. So this is a nice way. And if it doesn't get to 65, you've got some
Lulu
nice
bounced
premium
today.
for the next 23 days. There's the one problem. You still got 3 weeks to go, but pretty solid premium, pretty good hedge on the downside here, Tom, that allows you to buy it at a net debit of around 61 and change.
Yeah, Kevin, and we talk about this when we talk about covered calls, is the fact that a lot of people, if they own stock, right, and they're selling upside calls against it, it goes through there. Say we get an upside surprise in KB Homes, it moves to the upside. You could potentially close that call, roll it to another month, roll it up, if you don't want your stock to get taken away. But even if the stock does go above the 65 level, Kevin, it's still a really short-term profit on this one. Yeah, the max gain on this one, 380. If you get your stock called away here on this, that's about 6% return on the risk that you have. So there's 2 different ways to look at this, right?
Yeah, the stock is still down 27% in the last 12 months. So if you think that housing's going to recover in the fourth quarter, interest rates are starting to take effect. This is one maybe you want to extend duration, hold on to the stock, collect a 1.5% dividend, and just kind of keep rolling those options from month to month.
Yep, and you do have that assignment risk on the short option if it goes above the 65 level. But as Kevin mentioned, you have that potential to roll or adjust that short call. Diane, on the conservative paid to wait type of strategy here in the covered call.
All right, good stuff there, guys. That's going to do it for us today on Fast Market. I'm Diane King Hall alongside Tom White and Kevin Hinks. Download the Schwab Network app, available in the Apple App Store, and tune in 24/7 on schwabnetwork.com. Stick around. You've got Next Gen Investing.
I'm here.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds.
Well, didn't
That
hold
means
support.
You can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Nike looks so cheap right now.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell,
Nike.
we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com.
chaotic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange, the countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
No can do.
Where are you going?
Schwab.
Seems like these minutes are lasting forever.
Approach to wealth management.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey. And Alex, we are seeing some pressure today on the overall markets. I mean, again, we're seeing basically, if you took the four major averages, you could say we're roughly around 0.4 to 0.5%. We're not seeing any moves beyond, of course, the NASDAQ, which is leading the weakness down about 0.5%. But we are still seeing some names of strength, as Tesla is actually really our only Mag 7 today, firmly in the green, up almost 3%.
That's been the story all day long. Tesla offsetting weakness amongst its mega cap tech peers, but it does seem that things are starting to solidify.
There's always a but
in the negative direction here intraday. Jenny, as we take a look, about 45% of the S&P 500 components are higher, about 35% of the NASDAQ 100 components are higher. Both these numbers were closer to and above 50% just a few hours ago. So Oracle has been weak all day, and it's finally seeing some of its other peers break that direction. Alphabet, Apple, both have been down over 1% for much of the session, continue to be that way. So not a huge move lower, but notables, you're starting to see a couple of these days start to stack together now, where the news has been largely positive, but not enough to keep the party going.
Yes, and I think that has been a good way to characterize really this week as a whole, because I know we said there was such an appetite for some of this dip buying for quite some time. We're still seeing that because as it stands, I mean, markets are poised to have a really, really strong month of September overall, but led hugely by some of these big swings in tech, which then also do tend to feel the burn of some of this weakness most substantially. So that's kind of what we're seeing today play out into this like rotation theory, where we're seeing the rotation out of some of these big tech names. But throughout the next hour, we have an equity focus for you all as we'll get through. Again, as we've started off our show with a tech theme every single day this week, we'll also be looking at the charts of both Intel as well as Oracle and discussing the latest move with Alibaba. Its shares are up 8.5%, actually coming off of 3-year highs earlier today on their further push into AI. We'll discuss the latest with the Microsoft Anthropic partnership as well as Costco earnings still ahead. So wide variety today, but a definite theme of big tech, which has been pretty much our theme all month.
And really the last, 10 years plus,
True.
20 years, really going back to maybe 2000 even in the late 90s. But the reason is because these are the stocks that are driving innovation, but they're also driving stock market performance. So I always often say, hey, your analysis begins and ends oftentimes with the Magnificent Seven. Today is going to be no different, but there are plenty of other things to get through. Speaking of which, you're late into an earnings season, or at least in that gray area between one and the other when you're talking Micron earnings. And I think what we suggested could happen might have actually happened, which is, hey, the numbers are good, the guidance was good, maybe the stock already priced that in before we got those numbers.
I think so, and I think that the move was hugely muted off the bat, and then we saw some pressure this morning, but it was basically looking little changed, and then now seeing some of this pressure start to pick up as we're now down about 4.4%. But as with the expected recovery in the NAND and ongoing demand for cutting-edge DRAM, we've seen revenue growth was a robust 46% year over year, a 21% jump from last quarter. Non-GAAP gross margins also did recover to 45.7%. That was up 920 bips from last year and 670 from last quarter. Earnings also saw a substantial boost to around
Plug at
$3
240,
per share.
sound
That
at
was a record for the
18.
company. So much of this was unsurprising, though, to the extent of which their momentum going into next year, that was very impressive. They did say that the big three NAND producers scaled back production in the last couple of quarters in order to clear the supply glut that is expected to weigh on prices, in hopes to see short-term margins at least have a short-term blip, while then hoping for this long-term recovery in supply and demand going into 2026. So it appears that was wildly successful. NAND prices are soaring. Micron did say it's actually raising its NAND demand outlook for the rest of 2025 because of these strong enterprise buildouts. Additionally, as has been the case for many quarters, DRAM represents a hugely strong opportunity for data center ramps and seemingly the never-ending appetite for these AI expenditures. So they do expect the supply of both NAND DDR5 as well as, of course, HBM, their high bandwidth memory arm, to really see demand for the remainder of this year at a substantial pace. So
Yeah, it wants to break to 63.
They did give a really strong outlook, and I think
Outlook.
that nothing about this.
Hovering up against the 63 right here. Come on, Alex. Let's break to 63 so I can jump in this trade.
Anticipating more movement day to day than we're actually.
If there's anything
getting.
like
That's
yesterday, I
usually
jump
a good
in and
thing,
the thing
because
tanks.
The big moves outside of things like earnings and news announcements typically coincide with downside disappointment and surprise. So it really just goes to show that Micron didn't get to up 35, 36% over the last month on 2 or 3 big days. It was a lot of really methodical, nice green candles stacked together, and that's a little bit more of a constructive
130,
rally
see?
than the ones that have
I didn't jump in it, but
a giant move on an earnings event and or on a news announcement. And
so I'm watching the SPX right here. I'm iffy. After yesterday's pullback and then another one today. There's 130 to 150.
Their conviction that AWS will see revenue acceleration. They also see AWS specifically rising by around 22% now in 2026. That's 4 points above consensus, with share losses peaking now in 2025. So Project Rainier, which is their compute capacity build with Anthropic, they do expect to be the primary driver of this growth acceleration. So all that to be said, Amazon is still, even though it's the worst performer, it has the most buy ratings of any other Mag 7 name. I mean, it's like 97% of analysts right now that do cover this stock.
1, 2, 3, triple top.
Equivalent. Still a lot of conviction for a name that is
130 to 190.
Yeah, the other thing too that really stands out is even the ones that don't have buy ratings, they're just sort of in the neutral or the hold camp. They're not really pessimistic around this particular stock. So it's been a nice performer. I think that this is one of those situations, though, where I talked about incrementally positive news not being enough to keep the party going. The stock opened higher today and it traded alongside the overall market. So I think a lot of positivity exuded from the analysts. I think it was Wells Fargo, you said, but not enough to keep it going. Interestingly, too, and some of this has to do with the fact that earnings are closer than they have been in quite some time. But on a 1 month basis, given the fact that you now have, I don't know, 6 candles, it looks like, are red in a row. I know we haven't gone a ton to the downside, but you're starting to see implied volatility over the last month get to the highest levels that we've seen in that month. So still relatively low on a historical basis, and as you extend out in time.
I just think their commentary's worthless today. So we got 3 white soldiers now. Oh God. Boom, baby. 280. $2 to 3. Yeah, that was a bull flag. Now we're coming up to the 200 EMA. What was resistance, triple top, can now become support here. Unless the market just has a complete breakdown again. Prepare ye in the name of the Lord. Get ready. This is it. It's got to hold. 66.50s. Come on, baby, let's go. Washboardjim's getting in here at 175, 180. Whoop, 70, 75. Right here. I need you to hold. Can you hold for Bobo? Can you hold for Bobo? Hold for Bobo. Risky, 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 risky. Oh, God, no. Hold it. My name's Washboardjim. I'm a loser. You can do it. Do you remember when I took your mother out on a date? Randy. The crowd's going wild at the sports arena. $2. Rambling man, ramble on, ramble, ramble, ramble round. Mm-mm. 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 Okay. Jim, your air conditioner's on. Come on, baby. I was at 210 a second ago. It's retesting support. Up to the 200 EMA. I'm at 215 right now. I'm up $45, $50. Contract 60. Come on, baby. If I hit the 200 EMA, I'm gonna get out today. I'm at 170. We're at 225. Keep this baby alive. Take me to the 200 EMA. 6641.73. Thinking about selling it. Just it's the only way I ain't line. Oh yes, 250. Woo! Yes. That's how you do it. Is that how you do it? I do it. Come on, Jake Paul, you pussy. What are you doing fighting little boy? I'm here. Yes. I needed that. Did you see that room? Randy?
Back out. Back out to reps. Back out to reps. Back out to reps. Back out to reps. Buy in the dips. 3 black holes in the market skips. Blue flag waving, profit saving. Washboardjim keeps the trade winds blazing. Break out to reps. Buy in the dips. 3 black holes in the market skips. Blue flag waving, profit saving. Washboardjim keeps the trade winds blazing. He teaches dummies, yeah, you and me, how to ride the waves of the S&P, moving averages, patterns bold. The man's got wisdom worth its weight in gold. He don't stress, he don't shout. Jim knows what it's all about. Yeah. Back out to reps. Back out to reps. Break out to reps. Buy in the dips. 3 black holes in the market scripts. All flag waving, profit saving. Washboardjim keeps the trade winds blazing. Break out to reps. Buy in the dips. 3 black holes in the market scripts. All flag waving, profit saving. Washboardjim keeps the trade winds blazing. Break out some reps.
Yeah. Nailed it. I'm the happiest guy in the world. I needed that. We're back at the 63 again. It's a good one. Jimmy liked that song so much I'm going to play it again.
Back out. Back out some reps. Back out some reps. Back out some reps. Break out some reps. Buying the dips. 3 black holes in the market scripts. Full flag waving, profit saving. Washboardjim keeps the trade winds blazing. Break out some reps. Buying the dips. 3 black holes in the market scripts. Full flag waving, profit saving. Washboardjim keeps the trade winds blazing. He teaches dummies, yeah, you and me, how to ride the waves of the S&P. Moving averages, patterns bold. The man's got wisdom worth its weight in gold. He don't stress, he don't shout. Jim knows what it's all about. Yeah. Back out some reps. Back out some reps. Break out some reps. Buying the dips. 3 black holes in the market scripts. Full flag waving, profit saving. Washboardjim keeps the trade winds blazing. Break out some reps. Buying the dips. 3 black holes in the market scripts. Full flag waving, profit saving. Washboardjim keeps the trade winds blazing. Break out some reps.
Prepare you in the name of the Lord. So this is called the yin yang. I'm waiting for it to come back to the triple top. This is really, this is a good strategy. It keeps you from chasing the breakout. Just keep in mind, what was resistance now becomes support. So you have the triple top breakout, then it pulls back and retests the triple top, and then it runs up and hits the double top. And then I have my 2 moving averages, the EMA and the SMA. So it hit both of them. I got out at the double top. It ran up another 30, 40 points. 60 points right there. Now it's come back and retested again, the triple top. I just don't want to take too many chances today. That was good enough to get me back to the green. If I just make a couple $300 today, I'm happy. Because I know, others deals will bring tenfold. Fivefold at least. 5x. 1,500. Okay, prepare ye in the name of the Lord. Ladies and gentlemen, get ready. Are we ready? Say yes or no. I'll be moving these up to 66.40. I'm going to buy 3 contracts. This is SPX. Calls. Scalping. Lotto. Strike. 6640 at $2.60 with a tight stop. Very tight. Let's go. I think you know what to do. On the count of 3, break resistance. We're at $2.80. Keep your microns on. Oh. I lost my setting for toss predictor. I don't know what that is. I don't know what that is. Could we get a bounce, please? RISKY. Come on. Don't make me go into the kitchen and have another coffee. And don't make me go into the kitchen and charge up my battery on my phone. Because I'll do it. This is still bearish, folks. So, I mean, I'm just working off of a double bottom here. And it's got to work, if you know what I mean. My name's Washboardjim. Remove the drawing. See, we're under the 9, so it's bearish, you know. See what side of the street I'm on? If we break this resistance of 6632.02. We will move higher. Oh, I just farted. I just wasted it. I'd rather burp and taste it than fart and waste it. You're gross, James. Did you hear that on YouTube, that fart? Tell me if you did. We are now at $2.80. We have walls to break. $2.90. $3. I'm up $40 I'm up $50 a contract. $3.10. When you're a rookie and you got 5 of these and you're up $50 a contract, that's $250 in 5 minutes. Or less, maybe 4. Oh. So I got a special guest. It's going to come on the show today. Hello, I'm Mr. Smiley. I sit around here with Jim and says he's watching his trades. He's taught me so much. I'll give you a close-up look. What he gets called out as a sneaky snake J-hook. Some call it a fish hook. Some call it a cup and handle. Snake, breakout, pull back, boom. Who is that odd man? His name is Washboardjim. He's the founder of the Sneaky Snake trading strategy. Oh, the handsome liberal. What is this? I'm going to see what the handsome liberal has to say.
And here we go. Now, this is a common sentiment coming from many that support the current commander-in-chief that love President Trump, stating, Trump is the best president we have ever had. Now, regardless of how you feel about the current commander-in-chief, whether you love him or hate him, we can all agree on the fact that there is a host of presidents with some really significant achievements in the past, such as ending women's suffrage, giving them the right to vote, giving folks civil rights, ending slavery, defeating the Nazis, and liberating millions of people worldwide, up to recent times such as defeating the Soviet Union in the Cold War, etc., etc. So we'll just top it off with the obvious question. What has President Trump accomplished that would be more significant than many of the achievements that were just named? Two of Trump's biggest achievements. Would love to see those in the comments, giving him the title of best president we've ever had. What say you? And here we go. Now,
no comments yet. The handsome liberal. Sir, you got a squeaky voice. Now they're at $2.15. We could do this again if we want to. Prepare ye in the name of the Lord. First, I'm going to go get some water. And I'm debating on if I want to have another cup of coffee. Tonight's Wednesday. Now the time is near. I'm getting ready to take another trade. We have a 1, 2, 3 triple bottom to make. The 6640s at 190. Oh, will you give it to me? I'll take 195 to do it my way. I'm in the 6640s on a triple bottom. Now how in the heck did that happen? 19955? I don't understand. Now I did it my way. I'm in at 195. Yes, matey. Let's go. Let's make some biscuits. Washboardjim, is it true that you were a homecoming king nominee in college? Yes. It's true. Can we see how you looked when you were a homecoming king nominee? Yeah. No. We can't reverse. We got to go up the other way. This is not the path to take. This was me, homecoming king nominee, wearing a tuxedo. Year of 1994. You can do it, Jimmy. There's something happening here. Come on. We're now in between the 21 and the 9. Now this is called a squeeze opportunity. When you have the candle in between the 9 EMA and the 21 EMA, we're about to the next level of breaking resistance, and that'll be the 21 EMA on the 1 minute time frame. Today's a difficult day though, so you got to really have a tight stop just in case. Stay in between those two candles, please. I command you. Stay between the two candles, two moving averages, please. I command you. Could I get the FFC over here real fast? I'm trying to keep the candle in between the 9 and the 21. Yes. No. Damn it. This is a bear flag because we're going on a downtrend. But it could be a falling wedge. We got to hold right here. This could be a bull flag. If we hold right there. That's a falling wedge. Oh no. Oh God. Okay. Panic attack. I need a Tylenol. No wonder I have Alzheimer's. I need a Tylenol. All you had to do was stay in between the two moving averages. Can't go down much more. I got to get out because I ain't going to sit here and watch it go to 120. $1. It's definitely bearish now. Damn. Goddamn the buck. Oh, please. No. I said it would go to $1. It's been a pretty tough week. No red trades yet today. Well, I had one. Yeah, I did. There we're even. I got 15 contracts, so I either sell them now, get out the heck out of this. It was 145, 150. Now, to save my skin and for me to win. And this thing will bounce, of course. One. Come on. There we go, 155. If I could just get a... There's a... Oh, yeah. Now we're talking. Okay, I'm out. I don't know how he does it, but he did it. And that's all that matters in this cold, cold world of ours today. And again, and again, and again, and again, and again, and again, and again. Chat rumors? Glory, glory, hallelujah. Glory, glory, hallelujah.
Glory, glory, hallelujah. His truth is marching on.
3 white soldiers.
I've seen him in the watchfires of 100 certain camps. They have gilded him and altering the evening news and dance. I can read his righteous sentence by the dim and flaring lamps. His day is marching on. Glory, glory, hallelujah. Glory, glory, hallelujah. Glory, glory, hallelujah. His truth is marching on. Glory, glory, hallelujah. Glory, glory, hallelujah. Glory, glory, hallelujah. His truth is marching
That Washboardjim is something else, ain't he? Who agrees? Sheba? Is that Washboardjim something else? Yes. Well, my partner, Magnificent, now has been run off. Who run my Magnificent off? Well. So we had us a long-legged doji with 3 white soldiers. We consolidate the first soldier, and we got to break these 2 moving averages back up to the 200. You're getting there? Good. Were you profitable? Yes. And that was on a tough day, too. So I'm going to walk into the kitchen, and I'm going to pinch Nancy on the ass, and I'm going to warm up the water. And if you hear the door slam, it's me and Nancy in the bathroom. And don't ask what we'll be doing. It's really none of your business. I've had 3 bad trades this week. That's not good. Two yesterday and 1 today. We're retesting resistance. If you can count to 3, you can trade with me. I want them 2 bits, 3B, triple top. Pulled back, retested, run back to the 63. So this is the squeeze. If it holds here, we break out. And it's 121, 221. So, I mean, it's that time of day where the risk level is a little bit higher. I bet you if I turn this on, that stupid Marley chick will be on. Yeah, she can talk.
5 net credit here. So buying the puts, selling the calls, same expiration, same strike price, same quantity here. So the risk profile, not the most interesting thing to look at here. It's just a straight line that mirrors what you would do if you were short the stock position here. So $3.9 million debit paid here, unlimited max loss because of those naked short calls here. So always keep that in mind if you are ever considering something like this here. This is our shortest term trade, only 9 days to expiration. Last time I checked, it was already profitable. The break even came in at 249.85 here. So even moving even further in the profitability direction than I saw last year. Expected move for the expiration about plus minus 4% still. So perhaps even some room to run still for this bearish play.
Okay, very different than your first trade. Last but not least, we look at the healthcare sector. We're looking at XLV, and over 1 year down over 12%. There was a lot of high hopes on healthcare and pharma, and it really just hasn't panned out just yet. Tell me a little bit about the bearish trade you found.
Yeah, exactly, Nicole. I mean, this is a sector that I think has pronounced legislative risk at this time here. I mean, we see that the presidential administration is suggesting there's links between acetaminophen and autism here. Not making any comment about that, just showing that this is a daily influx of news for this sector here that can be kind of unpredictable and difficult to grapple with. I mean, think about everything else in the budget bill, the large projected cuts to public health spending and Medicare and things like that. So this is a sector where you really got to stay on their toes because the news can be quite unexpected here, and it could throw things for a loop. The trade itself, is this one's a little bit more complicated here. So this is kind of like a back ratio type trade. This trader was buying, buying the closer puts and selling the farther away puts here, both at January 16th expiration here, plus 20,134 puts and minus 27,500 122 puts here. So this came out to be about a $3.8 million debit paid. We have this rather unusually shaped risk profile here where we have this long flat area representing the max loss here if we were to get a bullish move here. Then we have that triangular shape where our max profit point would come in near that short strike there near 122. That would equate to $20 million profit here, so this could pay off handsomely if things do work out. But then it can't be too bearish, because if we start to get too far down, if we start to cross below 95.17, then we would start to lose money again. But the initial break even, that point would come in at 132.06, only about 3.1% to the downside here. Expected move for this time period, 7.3% plus or minus here with 114.
We are now at 140.
Here. Also, this was definitely an opening trade too. The volume far exceeded the open interest here, so this would be more of an opening bearish play on this particular broader sector here, not really focusing on any one company, Nicole.
All right, Rick Ducat with NVIDIA, Google, and healthcare ETF.
25.
Options trades today. We really appreciate it, Rick. Great to see you. Thank you. Coming up next, a look at Alibaba, the massive AI.
We have 8 people in here now. Jesus.
For the global tech race right now, Alibaba is hitting some new highs. It's up 8%. We'll talk all about it. We'll be right back.
Only 8 in the chat.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's
MNPR.
Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more.
MNPR.
Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to the watch list. I'm Nicole Petalides. We're live on the floor of the New York Stock Exchange. I want to talk about Alibaba. Today it's up about 8%. And Corey Johnson, Chief Market Strategist at Epistrophe Capital Research, is with us, taking a look at this name, which is really jumping. In fact, closing around these levels would be the highest close for Alibaba since October of 2021. The AI spend is the story, Corey. Tell us more.
I'm sorry, Nicole, I'm not hearing the program right now, so hopefully they can get that fixed on your end.
All right. Well, the big picture here is we are taking a look at Alibaba, and Corey's going to take a look at some of the tech names and such, because that is definitely his specialty. But looking at a name like Alibaba, which has had AI spending and has caused this name to really jump here today, the tech giants overall doing incredibly well and really trying to lead in the world of artificial intelligence. Over year to date, it's up 108%. We'll be right back.
Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome back. Talking with Corey Johnson, Chief Market Strategist at Epistrophe Capital Research. Looking at Alibaba, for example, with its AI spend today, now we're seeing this stock here up 8%. And as I was noting, this stock is now looking at the highest close since October of 2021. What do you think about the AI spending plans?
Well, it's pretty amazing that a company announces they're going to spend $53 billion and the stock goes up. Costs go up when the stock goes up. I think it shows the excitement of the notion of Alibaba joining in the AI parade here. But it will do so with significant constraints. Alibaba does not have the same tools available to it that the big companies in the U.S. that are going into AI and with such great guns, and with even bigger guns, Microsoft, Amazon.com, Google, also with much bigger spending plans around AI and building out AI data centers. But, to think about what Alibaba is, it's an interesting combination of lots of different kind of U.S. companies. And I think we have to think of here as kind of the Amazon Web Services model that is part of Alibaba now, and the notion that they'll be building out data centers all over the world. But it's going to be tough for them because they don't have the chips that everyone else has access to.
Well, we think about all the companies trying to get around NVIDIA, all things NVIDIA. I mean, Huawei started to fill the NVIDIA hole in China.
Yeah.
Maybe this move with Alibaba's spending, does that reduce their reliance on NVIDIA AI chips?
Well, they're not going to have a reliance on NVIDIA chips because they just can't get them. So at least certainly in China, they can't get them. Be curious what they do when they're talking about building out data centers in France and Brazil, and whether those countries will be given access. Alibaba will get access to NVIDIA chips in those places because they can't in China. So that'll be some challenges to the administration's ability to control where these NVIDIA chips goes. Of course, NVIDIA's told us they want to sell everything to everyone. It's good for their company. They think it's good for the world to be built on U.S. standards. But fundamentally, if you can't build below 7 nanometers in size, because the equipment to build those things aren't there, Huawei can do all they want, and they certainly are. And indeed, Alibaba says they're going to develop their own chips. But they will be limited to that quality because they can't get the greatest equipment available from ASML in the Netherlands. Those are the tools that are used to build the best chips, whether they're coming from NVIDIA or they're coming from AMD. And without those chips, without the AMD, the MI300, or without the H100s from NVIDIA, it's going to be tough for them to build anything resembling those chips without the tools to do so.
We think about the cash flow, and we've seen some cash flow losses, but they're spending, and you said the stock went up. That shows excitement about what the AI landscape could look like for a company like this. But the stock, as I noted, is up over 100%. Does this have more growth? Can this help the bottom line of this company?
No one's looking at bottom lines anymore. Certainly no one's looking at a cash flow statement and free cash flow for these companies because of the investments that are required here. And it's kind of amazing to see it. And there are hints in the air of a reckoning may come someday. I don't see the market really reacting to that notion right now. But this notion of companies spending more than they're making even when they're vastly profitable. I mean, you looked at a really great quarter from Micron yesterday, and yet when they announced their CapEx spending, and it showed that they were spending so much more than some of the greatest profits they've ever had. Every single quarter they're spending even more. They really are building
it's got to stop.
Future here, which
the spending's got to stop.
Excitement about the potential here, but certainly the returns are not there on a free cash flow basis, which is really the ultimate return in real returns on business.
So at this point now, when you think about names you like in the world of
where the hell did this come from?
Because it's so competitive and generative AI and the monetization.
I forgot all about that.
We're not necessarily seeing in full force just yet. What names have the most potential in your opinion?
Well, so what's really interesting here, and you and I have talked about this a lot over the last 6 months or so, is going beyond the semiconductor and looking what these build-outs look like, and looking at the companies that are doing data center build-outs, and we're seeing certainly the move in Oracle stock that I own. It's my bias here. I report that fully, but when you look at how the kind of the build-out is getting into other businesses, we're also looking at now that we're seeing the data centers go from a reasonably small footprint to the scale up, bigger and bigger footprints, to the scale out to
okay,
wider
we're coming back down to 130 again.
Things like networking become really important here. So you look at the importance of whether it's the optical component companies or even the companies that historically made things like routers.
Marley's trying to get your job.
And others who are starting to build the equipment to connect these data centers to each other. Look at the move in Corning in recent months, a stock that I sadly do not own enough of, has had a fantastic run lately because the notion that we're going to need to connect these data centers as they scale out, as they expand over great distances, whether it's a local area they're going to or even connecting one data center to the next. I think we're going to see that as an emerging theme over the course of the next year or so.
Yeah, GLW Corning, I see a $93 price target from Citigroup today, and over 1 year up 80% basically.
Marley's trying to get your job, Nicole.
Run there. When we think about those Mag 7 names, is there anything that worries you about the group?
I think the Mag 7 is a lot more different than people give it credit for. The Tesla is a very, very different company from NVIDIA, and that Amazon is a very different company from Google. And there are
well, there's a lot of diversification in the Mag 7. It'd be horrible to see them all be the same. Then you wouldn't know. So diversification is quite good, sir.
What about the Chinese stocks? I mean, when you see Alibaba here at 3-year highs, the other Chinese
Baba at a 3-year high.
On your radar?
You know, the accounting of Chinese stocks, the accounting requirements of Chinese stocks, the ability to audit these companies, the responsibilities that these companies have towards their audits are all lesser. The risk in investing in Chinese stocks is so much greater because the disclosure is worse, the accounting is worse, the audits are worse, that I think investors can't look at these as kind of the same thing but in China, because it's just not. Your rights as an investor are not there. And when the tide goes out, these things could really be, we're going to see some real damage, I think, to investors, as we have seen in the past from equities linked to Chinese businesses.
Right, Corey Johnson, Chief Market Strategist, Epistrophe Capital Research. Thank you so much for joining us here on the show. Appreciate it. Coming up next, Adam Coons is standing by. He'll take a look at the markets. There's opportunities, but also some risks you'll want to pay attention to. As markets have been hitting all-time highs recently, he'll explain. We'll be right back.
sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
All right, welcome back. Adam Coons is with me, Chief Investment Officer at Winthrop Capital Management. As markets are at new highs, are they too frothy? Where are the bubbles? We have so many questions for Adam.
The bubbles.
Welcome back.
Thanks for having me.
So how are you feeling about this market now?
I mean, like you said, it is frothy, so it does feel a little bit extended. But when we look at the economy and the real data signs, it's hard to see a case that the market should be going down or anything but what they are doing. Housing has the data out of sales and housing was better than expected.
Yeah.
The employment numbers, look a little shaky here and there, but generally speaking, the consumer's still spending normally. And, all signs point to the economy is still relatively healthy.
Yeah, it's still chugging along. It was interesting when I saw the OECD report yesterday. It was talking about the blow that's coming from tariffs. And at the same time, you have the Fed raising their GDP numbers. You've seen the resiliency of the economy thus far. Sort of where do they get that from? Because a lot of the folks who come on don't necessarily think the tariffs bring on lots of inflation.
Yeah, I'm in that camp. I think generally speaking, tariffs, one, I think are overstated. I think people think, too simplistically about it that, an iPhone, the cost of $1,000 is going to be 25% more or whatever. Right. And really, it's not the price it's sold to you, it's the component price. So I think the impact from tariffs generally is overstated. And I think even if we did see, a rise in prices because of tariffs, consumers don't necessarily have so much discretionary income that they can just say, hey, we're just going to keep buying like we were. They're going to have to make different decisions. So overall, I think all that just pushes inflation lower. And I
Tesla just trying today to break resistance.
Like that, but I think the rate of inflation is just going to stay in this general kind of 2 to 3% area.
And
you think so?
Feeling too that fundamentals have been pretty good with earnings and such. That we're not necessarily seeing bad news ahead, right?
Totally. I mean,
totally.
The reason the stocks are up is because they are hitting their earnings expectations. The earnings that are coming out are positive. And so until we see that change, there's no real cause for the stock market to go down.
We had a great market drive over the weekend. We were asking the folks what they're most concerned about. On that was economy and tariffs and debt.
Tariffs. Shut up.
They seemed more worried about trade and tariffs and things like that. But the debt deficit certainly got enough votes. Are you worried about that? I know that the administration's trying to bring rates lower so that they can handle some of that debt or refinance some of that debt. Your thoughts?
Yeah, I mean, the refinancing of the debt, that is troublesome, primarily just because they're just not that massive buyer that we've had in the past. So when
it's now 142
$7 trillion or so of treasuries that are going to mature that you're going to have to refi.
We've been working on trying to break out of,
or at least pay up for them.
Oh gosh, what did I miss?
And they've already said this. They're going to have to issue more short-term debt until rates come down. But you've seen buyers continue to shrink. And so it's just difficult until the Fed decides they're going to start.
Another beautiful play.
I do think it's going to be difficult for the market to clear and digest all of the issuance. It's going to have to happen. And so what that really means is there's probably a floor on how low rates can really go.
I want to get to some of your picks here. I see tech and cybersecurity, but just a quick thought. As President Trump yesterday was talking about Ukraine and maybe that Ukraine can really fight back with the help of Europe. And then there were folks who said maybe defense stocks are back.
I don't mean a defensive play, I mean actual aerospace and defense stocks.
Oh, good
is
question.
that something that you follow closely? Did you like that group?
Yeah, and so you saw defense companies run up just with Trump coming in office, and you saw geopolitical issues start to pick up, and so that made sense, right? If the geopolitical environment is shaky, those stocks may see a rise. I think that's fully priced in for the most part right now, because overall, I think we're moving towards de-escalation globally than escalation. You may see spending from different parts of the world, but the spending is shifting, and it's to lower cost things and more unmanned robotics and those sort of things that could actually drive the overall spend down over the long term. So I think right now I would stay away from defense stocks because, like I said, just from a valuation and where they've run, it's just still too far.
And that's not where you see the growth. I mean, you were talking about Alphabet, Google, Fortinet, CrowdStrike, and Reddit. So in the tech realm, I'll start with the first bunch, which is the Google and the cybersecurity names. Some of your thoughts.
Yeah, so I mean, look, the AI story isn't going away. Do I think it's overblown and overused? Absolutely. But we really like the big players, the hyperscalers, to use the term everyone is using right now, because they're not a one-trick pony. They're not, they're using AI to enhance something that they're already doing, versus those names that really have only one thing that's just completely anchored to AI. So it's either going to be, like I said, in the big software names, but then on the security side, obviously, as it grows, as the pie grows, there's going to be a need for more complex security. So that's why we like CrowdStrike and Fortinet in that space.
Understood. And where does Reddit fit in?
Well, Reddit fits in as kind of that contrarian name that not a lot of people know. But when you look at the growth that they've had, and I really, from a valuation standpoint, it's one of those rare names in tech that stand out. So for us, it's one of those, it is a little bit of a long shot, but we like it, like I said, from a valuation and the overall trends to that website.
There he is in person. Thank you so much, Adam, for being here from Indiana today. Thank you, Adam Coons, Chief Investment Officer at Winthrop Capital Management. All right, still ahead, how have you been feeling about the IPO market? You've seen a resurgence of new names coming to market. What's next as we've seen this IPO surge? Some market trends, the outlooks for 2025. We'll be right back.
Marley's coming after your job, Nicole.
The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions. From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close. Here on the floor, I bring you sentiment from traders driving the action.
I'm going to sleep good tonight.
We break down the data, technicals, and trades you need to see before the bell rings. Live coverage of the close every single day. This is Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Hey, investors, you know the market moves. And Schwab is here to help you move with it.
Fabulous.
So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Sam Vardas, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Welcome back to the watch list. We bring in our panel to talk all about the IPO market. You've seen a lot of great names: CoreWeave, Circle. We've had Figma, Klarna, StubHub, just to name a few. Brianne Lynch, head of market insight at Equities, and also Jim Neeson, managing partner, Connor Group. Thank you both for being here today. Brianne, you're right here on right by Wall Street, and you've seen a lot of the action. You know, maybe it's a more normalized IPO trend, but it's been a resurgence from an area that was somewhat, you know, left behind. What do we think? We see more IPOs coming?
Absolutely. So Q3 is shaping up to be the biggest quarter for IPOs since 2021. So after this drought of IPOs we've seen over the past several years, it's been clear that there's a lot of investor interest for these fast-growing tech companies. So the successful examples we've seen have really paved the way for others to follow.
And what do you think here, Jim? I mean, when you think about, obviously we've had a bounce back. We had sort of a dead zone for a while. It's now, you know, people think that market conditions are more favorable. They're bringing companies to market. There's a lot of money on the sidelines, too.
Yeah, absolutely. I mean, it is official that after 3 years of an IPO chill, we are in the midst of IPO spring. We have 253 IPOs thus far this year, and it's actually an 80% increase from this exact moment last year. We're forecasting between 325 to 350 IPOs this year, which is a really significant step up, and a lot of companies in the readiness queue getting ready for 26.
So what kind of names are you watching for? What's on your list here? I mean, you talk about the 250 IPOs, we're up 80% year over year. What names stood out to you thus far, and what are you waiting on? What's on the list, the standby list?
Yeah, so I think we've actually seen some really good public companies flip in terms of their filings. So you saw Anderson Group go out, you saw a Navan, a BitGo, a MapLight, but I think there's some also other ones that have been in the gym exercising for a while that are highly anticipated. You have Stripe, you have Databricks, you have Cerebras, you have GrubMarket. And what I really like is that is a breadth of a lot of industries. Not only is it sort of the crypto, AI, and sort of other IT companies, but you have software, SaaS, B2B, B2C, fintech, energy companies, a really nice breadth of industries looking to get positioned.
And we think, Brianne, there was a time where we were really looking at a lot of SPACs, and there were some direct listings. So what do you think about how things have been coming to market, the strategy? They're doing the road shows. I mean, for example, StubHub wasn't as well received as a Bitcoin type, you know, or a stablecoin type. Your thoughts?
What we're seeing is that there's a lot of appetite for fast-growing companies and a little bit more wiggle room around profitability if they can hit those growth numbers. So you think about StubHub. This is a 2% growth company. We didn't really get the investor excitement for that. But when you have a Circle or a Figma growing at 30% plus, that's really where we've seen investor demand. So as we look further into the pipeline, it's these strong growth stories that are the ones investors are interested in, and they've been waiting a while, and more investors are coming to the private markets actually to access these companies as they wait.
Yeah, that's what I was saying. Like a lot of money on the sidelines, they were surveying some of the wealthier folks, and they were more into private equity at this point. They want to be involved in companies, new companies, listing, things like that. How do you think 2026 will fare?
I think something that's changed the dynamics of the market is the Stripes, the Databrickses of the world. These large private companies have access to essentially unlimited capital in the private markets because there's so much demand, because they have so much growth. So they don't have the same pressure to go public to access the capital markets as companies maybe did 20 years ago. So that is changing the dynamic where these companies are able to grow into centaurs and much larger companies while private. And a lot of that growth is now happening in the private markets instead of post-IPO.
And what do you think, Jim? I mean, where do you see 2026 going? You think we can surpass this year?
Yeah, I do. And a couple points I'd put out there. So first off, if you look at venture capital and private equity, they've kind of had 2 to 3 years where there hasn't been a lot of liquidity. There's 1,051 unicorns in the US, 1,500 globally. And you have a lot of companies and businesses that have sort of been growing their top line and their earnings to get ready for 26, 27. So I actually think we can see a significant step up. One last data point, we have a proprietary data set at Connor Group where we look at our clients. We help companies 12 to 18 months before an IPO. We actually survey them, what is their IPO plans? We have 114 clients looking to go out 26, 27, and that's a 75% increase from the previous year. So again, a lot of companies that are sort of looking at the markets, right?
That's
now
huge.
have all-time highs across 5 of the indexes. There's a lot of good signs, especially with the economic sort of wins as well, that we're going to be picking up a better year 26-27.
Yeah, when I look at Figma, I mean, we talked about some of these names and how they're doing. I mean, I saw that one I was just looking at, I think it was CoreWeave was up 50%. Figma has come down. I mean, some of these names have come down. Sometimes the listing price gets some euphoria around it, and then they come down.
Little Bob, baby.
Find their footing. I mean, what are your thoughts on how these things price?
There's definitely been some exuberance in the market, as we saw with Figma and Circle, those two in particular. What we saw there really was the roadshow process did not factor in the retail demand for those names. So yes, they spoke to institutions and had a sense of what those big buyers were buying, but the retail market really came in enthusiastically, driving those stocks up. And yes, in the case of Figma, they've come back down to earth a bit, and that's a healthy thing. But I think as we think about how to price these longer term, that retail investor sentiment piece becomes more important.
I also think that I was talking to the folks here at the New York Stock Exchange. They have a million meetings with potential listing companies, and one that they said that was very popular was AI and software. I mean, there's no doubt we've seen stablecoin and crypto. We've had bullish, Gemini. Jim, what do you say as far as some of the themes of what IPOs are you thinking will come? I mean, bullish has come off of its highs. I just peeked at that one. But what is the big picture on the world of digital assets and or AI?
Yeah, I think the pendulum for this year has definitely been around sort of what I would call the cream of the crop type of companies. So I think these are ones that have been sort of in that filing queue for a while, and they were sort of looking to sort of time the market to get out there. But I think what we're going to see is when the IPO pendulum gets more back to, we call it the rule of 40, right, where earnings and revenue is about 40% combined. We're not there now. Right now, we're probably at a rule of 60 or rule of 70. So I would say more of these sort of sweet spot IPO companies, we're going to see a lot more of those. It won't just be the large cap. It'll be kind of those mid cap and small cap ones as well. I think the other comment I'll make too is that there are certain industries right now that have been a little bit dormant. I'd say biotech and healthcare have really been a bit challenged. I think we're going to see a lot more of those come into the market as well, in addition to that B2B, B2C, software, SaaS, and energy type of companies out there with fintech.
Look, you've also had good market conditions. I mean, we're up to our 28th high or something on the S&P 500, maybe off by one. The market conditions have been very welcoming. You have an administration that has tried to move along with mergers, acquisitions, IPOs, things like that. Final quick thought to you, Brian.
Yeah, what I think we'll continue to see is that there is investor interest in AI and AI-related companies, but the most likely IPO candidates related to AI are going to be the picks and shovels and the infrastructure players. So really in terms of accessing pure play IP or AI companies, we're still seeing investors come to the private markets.
All right, it's great to see you both. Brianne Lynch, Head of Market Insight, Equity Zen, and Jim Neeson, Managing Partner at Connor Group. Thank you both so much for being with us. That's going to do it for us here on the watch list. Thank you
4 more minutes to Power Hour.
Every single day at 9 a.m. and 2 p.m. here on Schwab Network. You can download our free Schwab Network app in the Apple App Store. And tune in 24/7, schwabnetwork.com. Keep it right here. I'm Nicole Petalides. I'll see you in the morning at 9 a.m. But keep it right here. Market on Close is next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every sector.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead.
Almost nodded off.
Market weekdays at noon Eastern, live on Schwab Network at SchwabNetwork.com.
And they bounced up pretty good, $1. $1.30 to $2.50.
Good afternoon. It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Caden, coming to you live from our Chicago headquarters.
Hello there, Marley. I'm Sam Bartis, coming to you live from the floor of the New York Stock Exchange. And let's take a look at what is coming up on today's show. We'll look at some of the latest ETF trends with the team from the NASDAQ. Then we'll dive into the state of the student housing sector with the CEO of Skeon Group. And in Options Corner today, we'll discuss Amazon after an upgrade over at Wells Fargo. Marley, for now, take us through what you're watching today.
Thanks so much, Sam. Yeah, new home sales rose to a 3-year high in August, even as mortgage rates were at higher levels than what we're currently seeing today. So with that largest monthly gain we've seen since 2022, home building stocks getting a major boost today. Shares of Lennar, D.R. Horton, Toll Brothers, and KB Home all positive on this session today. And speaking of KB Home, they'll be reporting their earnings after the bell. We'll break them down for you live. Also, Freeport-McMoRan is the worst performer on the S&P 500 today. Shares down about 16% right now after lowering its third quarter and 2026 forecasts for its gold and copper sales following a mudslide at its Indonesian plant. We'll have more on that shortly, but before we get to those top stories, let's take a look at where the markets stand as we head into the end of today's trading session. We're still entirely in the red here on all 4 of our major indices. The S&P 500 trading down about 1/3% right now at 6635.50. The NASDAQ trading down about the same at 24,494.92. Similar story here on the Dow, 46,135.64. And the Russell 2000, our laggard on the day, down about 0.7% at 2440.54. As we look at some of our futures products, the dollar positive on the day, more than 0.6% at 97.52. Gold down 1.5%, trading at 37.55 a troy ounce. Crude oil continuing its rise, up 2.25% right now at 64.85 a barrel. And Bitcoin trying to claw back some of the losses we saw earlier this week, up about 1.33% right now at 113,695. Now, Sam, I'd love to know what's catching your eye out on the floor today in New York.
Well, Lithium Americas are certainly jumping 100% in trade today after a report suggesting that the U.S. is eyeing an equity stake in the mining company, and it's said to be part of renegotiating a $2.3 billion loan from the Department of Energy for a mine in Nevada. Now, the mine is seen as strategically important in America's ability to secure supply chains and reduce its reliance on China, which of course has a stronghold on the processing and refining of the metal, which goes into things like EVs and data centers. And sticking with the China theme, Alibaba is soaring today, hitting a 4-year high after the company said it would be spending more than $50 billion that it had originally pledged. CEO Eddie Wu saying he expects overall investment in AI to reach some $4 trillion globally over the next 5 years. And the company also unveiling its latest LLM and other AI products, adding that it's going to be opening data centers in Brazil, France, and the Netherlands, and announcing plans to integrate NVIDIA's suite of AI tools into its cloud platform. So a good day for Alibaba. Let's send things back to Marley, who's with Jenny Horn in Chicago with some of today's top movers.
Thanks so much, Sam. Yes, so many top stories to get to. The first one we'd like to talk about with Jenny Horn joining us here in studio, co-host of Next Gen Investing, is this Lithium Americas story. You know, shares were up more than 100%. They've doubled on the day. Right now up about 95% on news of a possible U.S. stake in this Canadian company.
Yes, so we're seeing, in negotiations now with the U.S. Energy Department as well as General Motors over the terms of its $2.26 billion government loan for a large lithium mining project in Nevada. Talks have been centered on what requirements, though, must be met before the financing will be released, as well as details of the loan itself, and also new requests from the Energy Department that could add conditions to or alter really its overall terms. GM is a major partner in this lithium project, though. It's also anticipating to be part of these discussions. But Lithium Americas, like you mentioned, is Canada-based. It's very much focused on the development of this lithium deposit in Nevada to make the critical supply of these batteries. And the U.S. did propose an equity stake as a way to really renegotiate a $2.3 billion loan that was granted during the Biden administration. But this proposal today now comes after the company did say it will be unable to meet these requirements that were set to be received under the first loan installment. So we have seen, again, this name make a pretty nice jump. We also know that this has been the lift right now for, overall just really further investments in the U.S. government, really reigniting this cash flow into U.S.-based companies. We know in July they invested roughly $400 million in rare earth materials, and they've also been very much focused on keeping it here, of course, in the United States. So this just furthers that narrative, even though technically I know they're a Canada-based company, it's for a Nevada-based project.
Yeah, it is really interesting because it's all about this Thacker Pass, which is a mine that's in Nevada that's owned by the Canadian company,
Post 5 minutes
here on U.S. land, and that loan. And so we've seen this uptick in these investments. Of course, the potential stake in Intel as well, and so lots of a very different approach from the administration in terms of its onshoring and reshoring and I guess investment and devotion to American companies, and this just the last in a list of many of the growing.
Very
Absolutely. I mentioned GM, of course, as part of this story. That was part of this deal that was disclosed.
Had to go help that girl out.
And the joint venture between the two, they own roughly
5 hours sleep.
Of that Thacker Pass. So that's why it's so critical that GM be part of this conversation as well. But this does represent, again, the recommitment and also, jobs and cash flowing into these U.S. projects, and also the U.S.'s ability to continue to innovate in lithium, which is in huge demand right now.
All right, and let's move on to this Freeport-McMoRan story. They're the worst performer on the S&P 500 today. Shares down about 15.5% right now. They have regained a little bit of their losses, but still heavily affected by this news out of their Grasberg mine in Indonesia.
Right, so pacing now for its worst day, I believe you mentioned, since March of 2020. So copper prices actually are spiking after Freeport did detail the significant production impact from the suspension of its Grasberg block cave mine in Indonesia, and of course declaring then force majeure. So production in the minerals district, that is the world's second largest copper mining complex, was basically halted in its entirety after a mud rush incident. Freeport did say the preliminary assessments do indicate the impacts will likely cause this deferral of production until it'll be definitely impactful to their fourth quarter of 25, but they said that they could see a return to pre-incident operating rates potentially achieved by 2027. So this is a long-term real story that's going to impact now them for several quarters. But roughly 800,000 metric tons of mud and debris did enter the mine in this previously disclosed September 8th incident, reaching then a service level where missing employees had been working. So mining operations in the surrounding minerals district have been suspended since the mud rush. The search also does still continue for 5 missing workers per the company. So this is going to have, substantial financial consequences, which is what they've indicated. Right now, already lowering their third quarter sales estimates for copper by about 4%, and gold, on the other hand, by about 6% versus earlier forecasts. And right now, production could be roughly 35% lower now in 2026 than previously estimated. So this is going to have, I think, no surprise when you halt productions and you have, right now, the well-being, the safety of your employees at question. It's a pretty big story. But copper futures, on the other hand, though, were trending actually lower in the day, then spiked about 4% following, again, this update as markets did appear to price in now this drop in supply.
And this drop in supply comes on the heels of Hub Day Minerals had to shut some of its operations down because of some geopolitical issues. Chile also had a tunnel collapse there as well. So copper's been under pressure, but share price is just going way up the cost of copper right now. As you look at the metals, copper up almost 4% on the day, while all of the other metals are in the red, with concerns over supply there. But let's move on to this next story. Intel back in headlines again. They don't want to be left out, so they're finding a way every other day or so to find their way into our conversation. What's the latest with Intel?
They are, and I will say that this was a good challenge for me today because I had frankly never discussed the stock being T-stamped, which is ticker symbol, now I understand it, IDAI. So think overall identity authentication as well as software solutions for various government and enterprise partners. This is the name that's part of this major deal with Intel. Intel up today 5%. It was, actually it's pulled back from session highs, but the big move is in T-stamp today after they announced the publication of a partnership brief via Intel, which will feature their identity verification using AI biometrics. So the platform is really focused on AI models that optimize now Intel's OpenVINO, which is, think Intel's open source software suite that does accelerate this deep learning for AI inferences. But this then allows T-Stamp to reduce its model size as well as latency and allows deployment on resource-constrained environments. And their AI-powered identity platform does, they claim, to help transition this overall authentication process with advanced face biometrics as well as different ways to really dictate these privacy-preserving tokens. Their chief technology officer, though, did say they need to deliver more flexible, low-friction solutions and minimize this latency, and working with Intel has allowed them to achieve all of their goals and deliver this next-generation identity authentication experience. So shares were halted twice today to the upside. I also was so curious about this T-Stamp company, how it trades. The history is very spotty at best, but Intel obviously are bigger, more, maybe market-moving type of story, getting a nice lift today. But this is an interesting collaboration. I think it just, again, further solidifying that these companies have cash right now, and they're utilizing it with a rapid pace, it feels.
Well, and Intel's, certainly has been on a tear the past month. They've got the investment from the U.S. government, SoftBank, then NVIDIA. So, they've been in the news. They're getting this influx of cash coming their way. And now this story on the AI end, which has been a discussion, are they in the AI race enough? This partnership with NVIDIA, obviously a big component of that, but then adding this into the equation. Anytime you can get AI into a headline, we've seen it generally as a positive catalyst in this current market. So Intel shares moving their way up on that news, almost 5% right now. And then to close things out, Sam was mentioning this Alibaba news. They have a partnership with NVIDIA, but beyond that, also upping their AI spend.
Yeah, Alibaba has been busy. So now tracking to notch its longest winning streak, which is now 8 consecutive weeks since early 2020. And at this pace, we'll see its best calendar year since 2017. So mind you, not to pour cold water on what has been a phenomenally hot rally, this stock traded as high as $319 a share back in 2020. We've not really come close to levels. We haven't come even close to levels from that we've seen in years now. So making an attempted recovery, up now 8.4% on this recent AI boost, as Alibaba is expected to open new data centers abroad and hike its spending, therefore, on AI. So they did reveal these plans to ramp up their AI spend past the $50 billion previously projected, and also unveiled their largest ever AI LLM that has roughly more than 1 trillion parameters. So their CEO, Eddie Wu, did say that they'll be joined by NVIDIA to integrate these various tools for physical AI for things like robots as well as self-driving vehicles. Wu does anticipate, though, the overall investment in AI will accelerate to some $4 trillion worldwide over the next 5 years, and noted that Alibaba needs to be keeping up with that pace. So they said that they followed a plan that was laid out back in February to spend roughly $53 billion. They must be now adding to this. They did say their cloud division, already operating right now in the US to Australia, intends to launch its first data centers in Brazil, France, and the Netherlands in the coming year. Wu did make projections, though, regarding this full stack technology as well as their Quen models, reflecting Alibaba's really growing commitment to being now not really seen as so much of an e-commerce platform, but a technology powerhouse overseas. And total capex right now on AI infrastructure and services by Alibaba, Tencent, Baidu, JD.com could top roughly $32 billion in 2025 alone per Bloomberg, a huge climb from $13 billion back in 2023. So lots of headlines, lots of opinions. There's like analyst commentary. There's rumors Jack Ma could be making a return to be part of this AI push. But Alibaba's been keeping us busy, and thankfully the story has been to the upside.
And it's been to the upside not just for them. All those companies you just named in that AI spend all getting a boost on this news, both on Hong Kong indexes and here in the U.S. But Jenny, we appreciate you breaking down some of these top movers and some of our top headlines today. That's Jenny Horn, the co-host of Next Gen Investing. And with that, Sam, I'd love to send it back over to you in New York for what we have coming up next in the show.
Thanks, Marley, and thanks also to Jenny Horn. Coming up, we will be joined by the team from the NASDAQ to look at the trends that they're seeing in the ETF space. Market on Close will be right back.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income,
It's now
and more.
2:16.
Best of all, you can ask questions by chatting.
I got my
directly
second
with
wind in.
It's interactive learning at its finest. Tune in live.
The 6640s are now at 110. Ladies and gentlemen, prepare ye in the name of the Lord.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
They don't know
Whether
how he
you're
does
an
it.
experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The platforms and
Nicole?
webcasts are designed to help you broaden your knowledge.
Marley's
of
after your
platform
job.
features and resources available from Schwab. You'll learn tips and tricks to help navigate.
I want to see a cat fight. Prepare ye in the name of the Lord. Oh, what's your trade, you idiot? We're at 150 right now. You can make a business decision if you'd like. Why, Jim? Because you're at a Head and Shoulders. See? It's called a Head and Shoulders. $155. Jim, you make it look so easy. Well, you got to take little cat naps, see? And we hit the right shoulder the second time. You understand? Left shoulder, head, right shoulder, boom. 110 to $1.50. We have 3 black crows. We're having technical difficulties.
They're a lot more open. It's a great casual environment. And there's 4 main trends really stuck out for me. Ones we've talked about before.
What were they?
Double click into each of them. 1, AI, right, clearly. Active, crypto, and liquid alternatives, which are kind of the 4 main pieces that I took away. If we think about AI,
Can you tell me what liquid alternatives is?
At the event where they said that their March conference, which kicked off earlier this year with its first year called Citywide in Miami, they're changing it to an AI-only event.
Oh.
They're going to have 4 pillars.
That's
grow,
tricky.
Build, live, and invest in AI. So if we need any more signs that AI is all parts of our life, all parts of investing, this is certainly a sign. One of the biggest industry conferences pivoting their March conference to be exclusively focused on AI. We heard a lot of chatter about a particular ticker, XAIX, from DWS X Trackers. Its called sister fund in Europe is the largest AI ETF in Europe. here in the US, growing rapidly. Really great way to access sort of all the AI names and themes that we're seeing. Moving on to active, we've talked about it so much, but we continue to see about 40% of flows in the US market into active ETFs. Only 10% of the market, though, in total AUM, so punching above its weight class. I think we've really continued, if you looked at the sponsors of this event, for example, you were seeing a lot of traditional active managers there. You were seeing the likes of TCW, JP Morgan, Goldman Sachs, right? So continuing to see active managers make their way into the ETF market as they see the value of the wrapper. Crypto, don't really need to spend a ton of time there. I would say that especially given more sort of crypto-friendly administration, just continuing to see ongoing momentum there and potential for regulation, adoption of more different types of coins allowed into the ETF wrapper potentially later this year. And then finally, liquid alternatives. And this is
what is that?
They've been around for quite some time, but if you look at the product development over the last year, there's 148 products in market that are considered liquid alternatives. So this would be hedge fund replication, long shorts, multi-strat, your typical institutional strategies brought into the ETF wrapper. You saw the likes of like a Blackstone at this conference, and so I think a lot of the more traditional alternatives managers, some of the active managers, seeing the value of a new potential type of investor in the ETF investor, and ETF investors in turn getting access to an institutional-like strategy. So seeing this sort of meeting in the middle and much more demand for those sorts of strategies as investors are sort of shifting their mindset away from 60-40.
So let's talk about these liquid alternatives. Because we
let's
haven't
talk
spoken about
about
this much in the past. And liquid alternatives, as I understand them, use a more complex investment strategy than you would generally see. As we dig
you have to make everything tough.
How do you think we're going to start to see these show up in the marketplace, and sort of in which areas are we going to see them? We have 148 right now that you're saying identified in the market. Obviously, I imagine that's an increase from last year.
40%.
A huge increase. Okay.
Huge increase from last year. In terms of product development. So I think what you're seeing these days is more known names in that space. You've got a hedge fund manager with a proven track record, again, seeing a potential for a new type of investor. I can use this wrapper and I can access retail, I can access wealth in a different way. Different price points, different investment to a certain extent. Again, these are liquid alternatives, right? So you have to deviate a little bit. But I do think you're going to continue to see more known names make their way in there. And plus, there's a lot of active managers out there that do have pretty prolific
liquid alternatives
themselves, whether it's a Goldman or JP Morgan that I mentioned earlier. So I think you're going to continue to see these known names bring their strategies, these institutional strategies, to a new audience. And then I think that audience, whether retail or wealth investors, we've talked in the past about the more sophisticated portfolio management that they're seeking. We're well beyond a 60-40 sort of portfolio, and these institutional strategies allow them to access that. I think one of the things that as an industry we're working on is helping investors understand that just because it says ETF doesn't mean it's cheap. Right? I hate that term cheap, but it's like a liquid alternative is not going to cost 8, 9, 10, even 20 basis points, right? It's going to be significantly less than it would be in a traditional hedge fund wrapper, but it's going to be more than they might be used to spending on a large cap equity strategy, for example. So I think we as an industry are still trying to educate, and I think it falls on these particular issuers to really educate on the strategy, the pricing, where it fits in a portfolio, and all of the above to see the adoption.
So when we have that pricing differential, but it also gives you access to these investment strategies that you generally don't have, what are some of the other benefits?
You can't get nothing above Marley. She's going to take Nicole's job.
Liquidity, right? So I think the ability to trade intraday on exchange, the value of that ETF wrapper. So liquidity, transparency of the holdings, right? And then I think lower cost, right, relative to what you would get. Sort of cost in relation to what, right? In relation to a hedge fund, it's going to be significantly lower,
my darling.
Generally speaking. So I do think those main core tenets of ETFs are going to
Ladies and gentlemen, are you ready again?
On top of those 4 themes that you sort of saw come out of Future Proof, was there anything else you noticed, any other trends or resurgences that we're seeing?
Absolutely. One that's interesting.
Oh, there's another one.
Harking back to my early days at JP Morgan is something that we refer to as smart beta. I don't know that I love the term. I never did. It's more factor-based investing, right? You're looking at multi-factor, momentum, value, etc. And we are seeing a bit of a resurgence here. And I think it really goes back to what we've seen with respect to active management. Investors seeking things that are not market cap weighted. I think when you look at valuations today, market concentrations. There's this desire to sort of look outside of traditional market cap weighted strategies.
She looks like a little tomboy.
I mean, these earliest strategies within smart beta or factor-based investing have really been around for over 2 decades now. We saw a huge push back around 10 years ago when the likes of some of these traditional active managers were making their first push into ETFs. And this index-based but not cap-weighted was a nice entry point for them. And you've continued to see it evolve, multi-factor, single-factor strategies. And so I do think that's been something that's been interesting to watch and really bears true for me as I think about this rise of ETFs and the rise of active ETFs, that something like factor-based or smart beta would follow alongside of it, just given this demand for something that looks active but is sort of within this index wrapper. You're losing that active emotion piece of it, but still gets you something that doesn't look like the traditional market.
And so when we're talking smart beta here, we're talking things like value plays, momentum plays, low vol even.
Absolutely, absolutely. Low vol, momentum. We have a strategy that we talk a lot about. It's a US VM, so it's a US small, mid-cap, but momentum-driven. Very much aligned with what we've talked about in the past with Dorsey Wright, right? This relative value, relative strength, momentum play. You can really see that, and a lot of investors are seeking that sort of exposure as they're looking at market trends and ways to sort of capture different sentiment in the market. And so momentum in particular, low vol was very popular, call it 10, 12 years ago. It ebbs and flows, as you can appreciate, but certainly an area that we're seeing resurgence as well.
All right, well, Jillian, thank you so much for being with us in studio. We always love having you here with us and for highlighting some of those trends that you saw at Future Proof Festival. And we look forward to having you back again with us soon. That's Jillian Delsignore from NASDAQ Indexes. And Sam, with that, I'll send it back to you in New York.
Great chat, Marley. Thanks so much for that. All right, well, coming up next, we will check in the state of the student housing sector with the CEO of Skion Group. Mark on Close will be right back.
Do 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 do. Do 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 do. Yeah. Do 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 do. Do 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 do. AMD. Yeah. We have 29 minutes left.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Sometimes, you know,
Tomorrow's Thursday.
you could have done better.
Tonight I win the Powerball.
Same goes for where you invest.
Level up and invest smarter with Schwab.
Who's behind me?
Welcome back to Market on Close. I'm Sam Vardas here on the floor of the New York Stock Exchange alongside Marley Caden in our Chicago headquarters. Let's dive into the world of student housing.
I'm going to win $127 million.
Joined by Robert Bronstein, who's the co-founder and chief executive officer at Scion Group. Excuse me for my mispronunciation earlier, Robert. Thank you so much for joining us. Talk to us about the state of student housing right now.
Sure. Well, we've been 25 years solely focused in the off-campus student housing business and have been watching it for quite a while. I would say that right now, both in terms of the types of schools that you see students flocking to and specifically the type of housing within those campuses are looking for are ones that I think represent value and a strong return on investment more so than 5 or 10 years ago. And I think it was about frills and amenities. There seems to be a return to basics and value.
And talk to us about that. I mean, what are people after in their accommodation right now?
Well, I think that families, and when you're talking about student housing, you're talking about the student themselves as well as their family. They're making, $100,000+ investment in an undergraduate degree. And I think what they're looking for in housing is something that's going to be the most supportive of their time there, right? Whether it's to get the best grades or to network or to get into a graduate program or to get a job, they're looking for things that are supportive of that.
Understood. Okay, it's part of the whole sort of ecosystem and infrastructure there. I'm just wondering, give us a sense of the sort of supply-demand dynamics right now.
Yeah, I would tell you that new supply is at an all-time low, just simply like you see, I'm sure, in other areas of residential real estate. The costs of new construction are up so significantly. We see about 50,000 beds or so being built across the entire country, which is really far short of what's necessary. And that's exacerbated at the large public universities, particularly the Sun Belt schools that are growing far more rapidly than that.
Okay, so then where does everybody go then? I see you've pointed out, I think it's roughly 20% of students are living in dormitories right now, but others have to go to sort of non-purpose-built housing. So what happens to them?
Yeah, so at a large public university, you're right, about 20% of the students tend to live in university dorms or residence halls, whatever you want to call them. So of that remaining 80%, there's a small amount in fraternities and sororities and the little houses that, for decades have surrounded campuses. But really the fastest growing segment is the kind of housing that we own. We own about 97,000 bedrooms across the country. And they're, large modern apartment complexes that are, 98, 99, 100% filled with students from that school, but unaffiliated with the school. And that's definitely where demand is shifting. These are buildings that are relatively, they're modern and they're institutionally owned and operated. And if you think about what families are looking for an 18 or 19 or 20-year-old away from home for the first time, they check all those boxes. But no question, the ability or the viability of continuing to build new supply with replacement cost being what it is fall short of the demand, particularly again at the big state schools that are growing the fastest.
Okay, so new supply is low and not enough construction perhaps, so supply is tight in that sense. Then what's the prescription here? What needs to be done to fix this?
Well, theoretically, the colleges and universities themselves could build more of their own housing, but I think when you talk to them, by and large, they'd much rather focus their resources on their core educational mission and rely on the private market to supply housing and other sort of non-core educational functions. 10 years ago, I think the markets were in equilibrium and that new student housing was being built at a price point that could be, in other words, that it was viable. Today, that's not so much the case. We've seen really record rent increases coming out of COVID. And so in the fall of 22, 23, 24, we saw high single digit or low double digit rental rate increases, which I think speaks to precisely the fact that there was a
6440s are at
supply-demand
75 cents.
This fall, where students have just moved in a few weeks ago, we seem to be gravitating back to the norm, which is probably 3, 4, 5%.
What is that?
Growth. As far as the solution, I don't purport to have an answer. I think that the universities understandably want to continue to grow. They very much are focused away from things like building student housing. And there was a time when the developers were, flocking to these markets and able to build a lot, and that's sort of come to a halt. So
let's
I
go.
think that at a minimum, students will probably have to recognize that they may just simply have to live further out. Like much like in a big city, you have people who can afford to live walking distance to the CBD, but over time people have to live further and further out. That's probably the most obvious near-term answer, is people just have to accept the fact they're not going to be as close to campus as they might otherwise have been.
Okay, and I've seen that you have been sort of quoted as saying that after COVID there has been a shift in investment towards large public universities, and the fact that it is accelerating. I'm just wondering, where you see, if someone out there is watching right now, the investment opportunities in this space at the moment.
Yeah.
It says it's finished.
I would take it beyond just student housing.
Randy.
I would say when you look at the top college towns in this country, like a Madison, Wisconsin, or an Ann Arbor, Michigan, or an Athens, Georgia, these schools that encompass world-class, large, growing public universities, they don't just have undergrads. They have a hospital. They typically will have a whole startup ecosystem and companies that come out of that. So my point is, I don't think you can be bullish enough.
What is your
about
point?
Sorts of investments in those kind of markets.
Right now, I need this thing to jump,
I think
or I get out.
higher education is finally experiencing really long overdue consolidation, right? So I live in Chicago, where our business is based, and I think we have 11 or 12 or 13 public universities in the state. The University of Illinois, the flagship, is doing great. I think one tier below that is doing okay, but you've got these smaller, I think Western Illinois, for example, enrollment is off, pretty
I'm praying
again. And that's something you see going on all around the country, and it makes sense, right? If you can get a degree from the University of Illinois, you're gonna.
They're 90 cents.
Illinois has tremendous
ladies and
elasticity
gentlemen.
as far as growing its freshman class, because the
94
represents
either.
such good value.
Let's go.
Governor State University, Western Illinois University, to use Illinois examples, not so much. And so what happened out of COVID is the
We're at 110, Randy.
Schools, and really all schools, lowered their enrollment criteria just because they weren't sure who would show up. And lo and behold, the students voted with their feet and with their dollars, and once they got into these flagship state universities,
How did they do that?
They once they were admitted, understandably they took that, and I think these universities have really sort of leaned into that and continue to grow and grow. There will, I don't know whether it's a decade or 2 or 3 away, but there's no question in the future there will be far fewer schools.
How can I get the message that Marley's after Nicole's job, Schwab?
To be, again, under a degree from the flagship university. Smaller private schools are really struggling, and I don't really see a turnaround for that. But as far as the student housing investment business, and I would take it further to say the real estate investment business and other investments, again, I don't think you can be excited enough and bullish enough about the 15 or 20 or 30 flagship state universities that we have in the United States that are really, globally.
What's a
recognized.
flagship
They play football
university?
on national TV every Saturday. They have amazing intellectual property.
Can you
coming
tell
out
me,
of them.
please?
World-class medical center. So it's far beyond just the need to house undergrads.
Are you talking about liberals?
Okay, Robert, we've got to wrap it up there, but it's been a fascinating chat and certainly some interesting insights there. Really appreciate your time. Robert Bronstein, co-founder and chief executive officer at Scion Group. I'll send things back over to you, Marley, over in Chicago.
Thanks so much, Sam. And coming up next, we've got Options Corner. Rick Ducat will be joining us here in our Chicago studio to look at options activity on Amazon after it was upgraded over at Wells Fargo. That's next on Market on Close.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced
Well-
investor or just getting started, Charles Schwab offers a webcast that's right for you.
Randy says we got a lot of numbers coming out tomorrow.
Our technical analysis webcast series
Oh,
breaks down
took a
different
super lotto of
trading
Oracle.
techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly
Oh,
to
really?
the education coach. It's interactive learning at its finest.
Let me
Tune
see
in live
Oracle.
or on
What
demand.
ones
Head over to Schwab.com
took the lotto?
/coaching
Oracle tomorrow.
and start learning today.
I might just follow you in this trade.
I'm Kevin Green, and I track options flow daily, identifying who's buying.
Which one'd you take,
who's
the
selling,
350?
How it's going to impact the markets. Watch live on Schwab
Ooh.
Network at schwabnetwork.com.
God. I'm going to go closer to the money.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Market on Close. Shares of Amazon are slightly lower on the day, but continuing the recent slump. Shares down 4% just this month, but that's not stopping Wells Fargo from upgrading the stock to overweight and raising its price target to $280, up from $245. The analyst now has increased conviction that Amazon Web Services will see revenue acceleration. That $280 price target would be a new all-time high. Now, with all that said, it's time for Options Corner, so I'm here with Rick Ducat to take a technical look at Amazon and its performance. Now, Rick, as we look at Amazon, not performing that well today, just under the 220 mark, but that 280 price target, would be an all-time high for this stock. So to begin, I guess, let's just sort of take a look at how it's broadly performing against the wider sector here.
If you compare it to the broader market during the past year, underperforming the S&P 500 as of the past few days here, and its owned consumer discretionary sector as well. If you were to compare it to the other Magnificent Seven names, it also has the rather dubious distinction of being second worst of the group. It's only ahead of Apple here. So kind of a bit of a question mark lately for this company here. And really the story of today, self-driving cars. So something I didn't even realize Amazon was this heavily into here. They have their self-driving car unit, Zoox, seeking approval for 2,500 fully driverless robo-taxis here. So they already launched a pilot service in Las Vegas. The interesting thing to me about this is Amazon's foray into this field is that Zoox has always had the goal of just building robo-taxis from scratch, like dedicated robo-taxis rather than retrofitting the old cars. So these are cars that wouldn't even be drivable for a human. There's no steering wheel, there's no pedals, so obvious competition with Tesla and Alphabet's Waymo here as we look into this sector today.
Yeah, Zoox is fascinating because it's not a car that anyone can get in. There's no safety driver. There isn't even a functionality for a human to take over this car. It's a fully autonomous drive here. But as we pull up Amazon's year chart just on its own, how has this performance looked over the past year, and also what are some of the technicals indicating to us?
Well, we can see that for starters,
Marley.
we have had a series of higher lows. We have been trending.
Why are you
upwards
going
for the
after
most
Nicole's
part,
job?
But you have to couple that with repeated failures at this resistance level near 236.
You gotta be
That was
ashamed of
a
yourself.
Very small gap all the way back there here, but that's where we topped out a couple more times. We did make one close above that level here, but it quickly faded. Now, price has retreated back to this trend line. We have fallen below our moving averages we most recently fell below our
I can't believe you're doing that.
3-day EMA that comes in just below 225. Now we're hanging on our trend line, 216, our green line here. That would be an old high point and low point, and then high point once again here. That could come back into focus as support. Beyond that, 206. Old highs here and here and here.
Yippee-yay.
All right, so with that said, and this news of this upgrade from AWS outlook, as well as some of this Zooks potential here, what's the options activity looking like today? Is it normal volume, heavier than normal?
Sizzle today is how we can tell that. It was that's the 5-day moving average of options volume versus the current figure here. Not too terribly beyond normal, but a very heavily traded name here. Total contracts today were over 726,000 last time I checked here. About 77% calls, 23%.
Well, my name's Marley. I'm going after a job.
Open interest for October here. First, we might consider that we have.
I did that wrong. That's $3.10
for the next 23 days here, ranging from about 206 to about 235 here. That's kind of the same levels we were talking about here, that same range here. So those seem like boundaries to explore for someone looking to make some kind of play in this name here. We can also see, though, the open interest for the month here.
That's a different
between
one.
220 to 280 on the call side, the highest level at 250 on the put side, more like 175 to 235, with 200 being the standout level.
All right, as far as any notable trades that you saw when it came to Amazon today?
One rather unusual trade, yes, a call back ratio here, December 19th expiration series. So they bought about 4,900 270 strike calls. They sold about 9,800 300 calls here at an 88-cent net debit. That equates to like a $433,000 debit paid for a bullish trade, but very unusual.
Yeah, I got it right.
23% move to even break even if this is an
They're at 340 now.
Expected move only 14%. So far beyond what you would be looking for the expected range for this particular trade.
All right, Rick, thanks for breaking that down for us on Options Corner today. That's Rick Ducat joining us here. And Sam, with that said, I'll send it back to you with an icy.
Thanks, Rick and Marley. Coming up, it's time for stocks, and Alex Coffey will join us. He has his eye on software.
Alex Coffey.
Text. Heading into the close, he'll break down the news and what you need to know next on Market on Close.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
How's it going? First day, so sometimes you know. Next. Try it again. You could have done better. Please. Same goes for where you invest. Level up and invest smarter with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills
in the biz.
I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low
Well,
we're experiencing technical difficulties. Carl.
We're experiencing technical difficulties.
Wealth management.
Welcome back to Market on Close. I'm Sam Bardas, live from the floor of the New York Stock Exchange. Shares of OpenText hit a 16-month high after Scotiabank upgraded the stock to outperform and raised its price target to $50 from $35. Shares have now risen over 35% this year. So it is now time for Overlooked Stocks, and I'm very pleased to say we are joined by Alex Coffey, host of Next Gen Investing, for a look at OpenText and exactly why it's up and what the analysts are saying, Alex.
Yeah, good afternoon, Sam. First off, for those unfamiliar
She's after
with
Nicole's
this,
job.
I thought it might be important to go through kind of what this company does, as it is often overlooked, as you mentioned. It's an information management software company. So really just think as a company that's helping big companies, small companies across the world manage and store data in a secure way behind things like firewalls. It's a big player within cloud. It's a big player within AI now going forward as well. 22,000 employees, works with 99 of the top 100 global companies. and operates in over 180 countries. It's really a company that's far bigger than maybe its overlooked status would suggest. 120,000 enterprise companies worldwide. It was founded in 1991. I thought this was interesting, Sam. Its very first project was between the University of Waterloo, where it's located in Waterloo, Ontario, and Oxford University to create the first online Oxford English dictionary. So it's come a long ways since then. You mentioned Scotiabank, you mentioned the upgrade and price target hike. The firm, though, just cites increased conviction in the company's content management business for the upgrade. They talk about it being underappreciated at current share levels. They also talk about how they see the divestiture of some of their non-core assets over the next few years, highlighting a stronger underlying company in the future. So positive words, obviously a positive move as well. You mentioned some of the performance. This is a company that has really struggled over the last year, so starting to turn things around the last 6 months.
Yeah, I'm always amazed sometimes at how long some of these companies have been around, even though they have been rather overlooked, as this segment implies. I'm just looking at the, as I said, 35% year-to-date gain that we've seen. I'm just wondering, Alex, what has largely been behind what has been driving that, and also, you know, what some of the other analysts have said, because it's not just Scotiabank. I'm seeing a bit of a list just in recent months that there have been a few price target boosts, the latest also coming from the National Bank as well. What are they saying here?
Yeah, I think the biggest thing, Sam, is that it's starting to turn the corner. This is a company that had really impressive growth for really years on end, you know, upwards of revenue growth close to 30% pretty frequently. It struggled in its fiscal year 2025, seeing not only earnings decline by nearly 10%, but revenue also declined by over 10% in its fiscal year 2025. So it seems that, you know, a lot of this performance has been due to, you know, disappointing fundamentals, but it's starting to turn the corner. 2026 is looking to be a year that returns to growth, not only for earnings but also revenue, and that's expected to continue into 2027 as 2028, much as Scotiabank highlights.
Yeah, it's interesting. I saw the National Bank note out just last week or so, saying that they see this as a renewed investment
SPX
name, and they believe that the next 6 months that will bring a rush.
Well, I tried to tell you all.
Bringing renewed attention to the shares, which obviously is what we're seeing here. I also saw that it does sort of dabble in the world of cybersecurity as well. I'm just wondering if you look across sort of the space here, you know, where it sits in the grand scheme of things. You know, this is a highly competitive type of sector right now. And to be fair, a lot of the software companies have been struggling this year. So what else really stands out to you about this company?
Yeah, a couple things. I mean, it's obviously based in Canada.
It's
it
nice.
Operates in sort of a, I wouldn't say exciting landscape, Sam. So that might be why it's overlooked a bit. 30% of the analysts that cover
Marley is after Nicole's job.
30% that make up the balancer and hold, but really only 13 analysts cover this, and many of them are, you know, banks based out of.
Soon she'll be after yours, Alex.
So, to your point around its cybersecurity, it's more vertically integrated. Obviously, it's not only managing and storing that data, but it's protecting it as well. Obviously, a very large cloud player with millions and millions of cloud users on its platform. So, yeah, it's an important player. It's a space that's being disrupted a lot because
We
of
have
AI,
4 more minutes
so it's
left.
continuing to try to position itself as not only a name that will win as a result of that technology, but one that won't be innovated and disrupted out of its own space.
Perhaps a quiet achiever, as they say. Alex Coffey, always a pleasure. Thank you so much for getting us across this overlooked stock today. Appreciate your time. Back over to Marley in Chicago.
Thanks so much, Sam.
Here's
Thanks for
Marley.
Coffee as well. We're nearing
She's
the
after
end of
y'all's
this
job.
market session, so we'll bring in Kevin Green coming up to break down the levels he's watching on the S&P 500 as well as today's action. That's next on Market on Close. Stay with us.
Real-time access.
This Marley chick, she comes walking in there like she's been there for years. She runs over Nicole. She's after Alex Coffey's job. Diane, you better watch out. She's going to be getting yours soon. Don't trust her. I'm just trying to tell you. I'm warning you. I've seen people like her before. Watch out, Diane King Hall. She's coming after your job, too. It's disgusting. You're going to have to start showing...
the Schwab Network app. And
Nicole, you better start showing more cleavage.
We're back here on Market on Close. I'm Sam Bowles of the New York Stock Exchange alongside Marley Caden in our Chicago headquarters. There's just a few minutes left in today's
Oh, I'm funny.
Welcome in Kevin Green, Senior Markets Correspondent, to help close out today's
She's got some freckles.
Kevin, what stands out to you about these levels on the S&P
She might make it.
500? What's really caught your eye today?
Well, we saw a little bit of a breakdown. We're down about 0.3% in the S&P 500.
Kevin, you better start showing your
The
cleavage.
rotation trade is kind of taking place, a little bit more defensive in some areas of the market, and you are seeing some weakness in certain technology sectors here. Going into the close, I mean, obviously we're only about 3 minutes away. You're looking at 66.40 as your potential area where we could kind of pin at. Now, 66.30, we did kind of cross that level to the downside. We highlighted that earlier this morning. We were able to recover for now, and we are kind of consolidating. We have broken this kind of triangle formation, if you will, but we're still
We have less than 2 minutes.
at the moment.
Triangle
For
formation.
any type of fireworks, any type of 10-point, 15-point move for the next 2 minutes or so, just kind of looking at trying to stay within this range between 66.30
Snake,
and 66.40.
breakout, pullback,
And KJ, in
boom.
terms of volatility today, what are you seeing
No.
on that front? As we saw a bit of a mixed picture here, I'm looking at looks like we're going to close entirely in the red, but a bit of a mixed picture as well in terms of our major tech stocks.
Yeah, we are. You are seeing a little bit of a blend here. Actually, Tesla's doing a phenomenal job here today, catching a
She's
big
ready to go
pace.
home.
When you're looking at volatility, though, this is also very interesting. We're actually seeing volatility coming down as the market's going lower as well. So we had this situation on Monday where we had the market up for the most part, stocks up. Yesterday, we started seeing a little bit of a gyration taking place. Volatility started to inch higher, and then we saw follow through early on today, but since then it has kind of crushed. So at the end of the day, we probably are at a level when you're looking at the VIX that's actually still fairly cheap, given the dynamics that we have over the next couple of weeks. But volatility is kind of holding steady, at least for now. So once again, I think we're just in a rotation type of environment. Technically speaking, we are getting kind of close to making a lower low on the sequence, but we haven't broken that level yet, or at least closed below that level yet. On the S&P.
Okay, we've got about 1 minute.
No, the bell's already rung. Okay, well, Jimmy's getting ready to go ahead and take a naps. Thank you, Jesus, for bringing up Oracle. I'm going to go ahead and take a naps. Watch a few videos, get caught up on the Charlie Kirk stuff, do my rounds. I like to help the YouTubers out, the ones that definitely were censored during the Biden regime. One guy lost income for 9 months. But he's improved his show, too. I mean, he was a little bit, I don't know, not a radical, but sometimes he'd have some guests on there where I said, man, what are you doing with this piece of crap on there? He has good following. That was during the Biden years when they were censoring everybody. I got thrown in jail, 3 times, I think, on Facebook. Because I kept bringing Hunter up and showing his nudies. Him and his crack pipe. Well, I'm gonna get out of here and get my dishes done. Trying to debate if I want to eat anything. I got a thing of soup. I might have a soup. Just had a salad today, so I think it wouldn't hurt to have a soup. I burnt my toast today. My Texas toast, garlic Texas toast, caused the alarm to go off. Beep, beep, beep. Today wasn't too bad of a day. A lot of patience, you know, in these. I didn't realize that Powell said what he said. That really pisses me off. Stocks, he has no right to say stocks are overbought. It's not his job. So I don't know. I could be wrong. I'm gonna have me some soup. Oh, sit here and leave this on all day. Where's my... We'll catch you later, YouTubers.